So what are you waiting for? Grab your phone, hit record,
What about
and let your idea fly.
So XUS, I actually
The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
In Asia, we're probably one of the biggest investors in Japan.
Really?
And 60% of what we do is office. So we're still buying office buildings there.
Wow.
We like them. They make sense.
Are they back? Are they back?
They never left. They never left. Yeah, the only complaining I've ever heard from my Japanese team in 30 years is when I tried to make them stay at home during COVID. They're like, I can't do that. So,
wow.
Yeah.
That's a,
so they never left.
It's just culture, I guess.
And then even if the BOJ raises rates, like
it's come off of such a low base, and they're going up 25 basis points, 50 basis points. It doesn't matter.
What areas of Europe are actually moving right now?
Yeah,
doing
so
stuff.
Europe's interesting, and I say this, and now you're saying this on on the press. A lot of people are going to hear it. Our strategy in Europe has been really simple for 20 years. Europe's 5 to 10 years behind the U.S. It just is. And so we looked at Europe 10 years ago and said this industrial boom that's happening in the U.S. hasn't really started in Europe, and we leaned into that, and that's gone really well. We then did data centers. They started getting going here, and we leaned into that. Life science, et cetera, cold storage. And so the opportunity in Europe has been around that. It's a lower rate environment than the U.S. They lowered rates earlier. They never went up as high as much. And we like that. I mean, one of the things we really like about industrial is your tenants are global tenants. So if we're leasing space at DHL in the U.S., what they want in Europe, what they want in Asia is actually very similar, and you can do that. Whereas an office tenant is going to be completely different. So I think Europe's super interesting.
BGO. Why have I never heard of it? It's probably a good thing from your perspective.
Yeah, look, we're a product of 5 M&A deals, right? So, and if you think about what's happened in the industry in consolidation, BGO, my partners and I formed a company called Green Oak. We were at Morgan Stanley for a long time. We left 15 years ago.
The Morgan Stanley real estate mafia is
we're part
everywhere.
Of the mafia. Part of the mafia, right? We left 15 years ago. We started a business. We then merged with a company called Bentel Kennedy. We then bought other businesses. So we've kind of quietly, when people say you're $85 billion, like, we had no idea, right? And that's actually not a bad thing. It's not bad to be below the radar screen and not be small.
All right, I know you've got I'm going to assume you have a view on this.
Yeah.
And 2 years ago, Bloomberg News wrote this piece that just sticks with me, and Alex is sick of me referencing it.
Never.
It basically said 3rd Avenue between 42nd Street and right here where I stand, you can't give that stuff away.
We own 2 office buildings on that stretch. So.
Talk to us about where you think the valuation is today versus pre-pandemic, and does it has to recover. It's 3rd Avenue, Manhattan.
So I would say values are probably spot values. If you had the seller, probably down 60 to 70%.
Wow.
And the buildings that are doing well, our 2 buildings are actually doing well because we put a lot of money into them.
When did you put the money into it?
We put money into it, actually, and one of them before the pandemic, to reposition it. One of them since the pandemic. But, we have a pretty deep-pocketed investors behind us on some of this stuff, so we have the ability to go to them and say, look, we need to put $100 million into this
building. And when you put $100 million, what are you trying to achieve? Like Bloomberg LP, if everybody's listening and watching, this is an A+ building.
It's super A+ building.
A++.
A++. Thank you, Mike.
Plus the coffee stuff and all that.
That's crazy.
Awesome.
Now so what do you have to do?
You're kind of doing this. You're not doing it on this scale. You're improving all the amenities. You're improving the physical environment. Look, there's this concept in office called the hotelization of office. People want to feel like they're in a more hospitable environment when they go to work. And so you got to put a gym in, you got to put a pickleball court in, you got to do all that kind of. Although paddle is much cooler than pickleball. But
is that right? Okay.
We don't have those things.
We don't have those.
It's maybe the gym. We'll be up and coming. I just want to go back to Europe for a second because something that has been really difficult for Europe has been it's dependent on natural gas and energy costs and prices, and to that extent, a lot of industries are at least threatening to shut down some of their factories and move and all of that. Have you noticed anything that on your world?
We haven't seen it on the supply chain distribution side yet. I do agree with you, Alex. I think that's one of the biggest risk factors. So the biggest risk factor in Europe is you've got monetary union, you don't have fiscal union. And so you're not operating with one country. You have one currency, broadly speaking, but they have all these different microeconomies. I can flip that around and say there's a positive to that too, right? Because you can then say, like we basically looked at Europe when the Eurozone was about to blow up in 2012 and said, where do we think the outperformance is going to be? And we actually picked Spain and Italy because they have been beaten down so much and they have significantly outperformed.
Yeah.
Spain's the second biggest automaker in Europe. No one knows that. After Germany, it's the second biggest.
But did you
automaker.
buy in terms of, say, like luxury and hotels and that
No,
kind of thing,
no,
or industry?
We bought warehouses, and we bought and built warehouses, a bunch of them, tens of millions of square feet of these things, because all warehouses is backbone infrastructure for real estate. That's what data centers are. It's backbone infrastructure, right? The best place to be in real estate is when you're just investing in infrastructure, which then begs the question, I get asked all the time, okay, if I want to invest in a data center, is that real estate or is that infrastructure? And I say, yes, it's both, right?
Interesting. All right, great stuff, Sonny.
Come back.
Yeah, come back. You're in Midtown. We know where to find you.
Yeah.
Sonny Kalsi, he's a co-chief executive officer of BGEO, talking about commercial real estate. I just wrote in our internal chat here, I should have gone into commercial real estate. I know so many people that do really well in this real estate thing.
I know, but then you wouldn't know things about media and streaming and
I mean, Wall Street was good to me,
stuff.
but I mean, these guys are
next
doing
career,
well.
third
Yeah.
career, third career is commercial
Third
real
career,
estate.
right.
Yeah,
Yep.
yeah. You got media here, and then you'll go into that. All right, coming up, we're going to circle back into what's happening over in China. Leland Miller, CEO at China Beige Book, will be joining us. The latest is that potentially more government spending and rate cuts in 2025. Will it happen, and what the impact will be? This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. That tech-led stock rally on pause this morning after mixed economic data. We've got the Dow, the S&P, NASDAQ, the NASDAQ 100 index, and the Russell 2000 all in the red right now, right to the numbers, with the S&P down 10, a decline of 0.2%. The Dow lower by 25, had been positive in our last update, down now by 0.1%. The NASDAQ Composite Index down 59, a drop there of 0.3%. 10-year at 4.29%, with the 2-year 4.15%. Gold lower today by 1.3%, $26.82 the ounce. West Texas Intermediate crude down 1.1%, $69.50 a barrel. But Bitcoin up 0.2%, 101,800 right now, $101,800 on Bitcoin. Producer prices are up, posting the largest increase since June. And with that story, here's Bloomberg's Vinny Del Giudice.
Eggs scrambled the data. They led to 0.4% increase in November producer prices. Other prices were generally tame. The report follows a string of harder U.S. inflation numbers, adding to uncertainty over the trajectory of prices and interest rates. Federal Reserve officials meet on rates next week. They're forecast to ease again. Vinny Del Giudice, Bloomberg Radio.
Walmart is pouring more firepower into its fledgling financial venture, scoring a $2.5 billion valuation for the startup and signaling its ambition to wade deeper into financial services. Now, sources tell Bloomberg the world's largest retailer is leading a funding round of more than $300 million alongside investment firm Rivet Capital. Right now, we've got Walmart shares up 0.3%. Recapping, S&P lower by 0.2%, the 10-year 4.29%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. I'd say anytime I want to get the latest poop on China, there is no one I want to talk to more than Leland Miller. He's the CEO of the China Beige Book. They have extraordinary data on China, the economy of China, that really no one else has, and it really gives them a unique insight to what's happening there in China. Leland joins us from Washington, D.C. via Zoom. Leland, I'd love to just start really 30,000 foot with you with China. Give us a sense of how the economy is in China today, really, from your data, and what can the government do to the extent it wants to improve things there?
Well, I think if you look back earlier this fall, we saw some of the worst data we'd seen in a long while. And I think that's one of the reasons that you saw these big stimulus announcements in September. And they did do something. I mean, they did spur a little bit of increased activity and a little bit of increased confidence. If you look at what happened in October, our data were much better. November, the data were also much better than September. So you've seen a pickup in the economy. Some of that may be manufacturing exports being expedited ahead of Trump tariffs, but you're seeing an economy that's better than it was. It's not great, it's not strong, but it's also not catastrophically weak. So that's the position we're in going into 2025. It's sort of ironic seeing all these headlines about giant stimulus happening and will they flood the economy? The economy doesn't need it right now. If it needs it in 2025, it's because something's happening in the tariff world.
Okay, so this is such a great point, because that's what I was going to say. So that signaling for more government stimulus and rate cuts, you think that is not at all true, and that it has to come from a tariff issue that will then provide stress?
Hey, look, this is the important point to take away from the second half of 2024. Even in September, when the economy is much worse than it is right now, it's bad. It can be weak. It doesn't mean it's catastrophically weak, and it doesn't mean that it needs big stimulus in order, for things not to fall apart. So what the government wants to do is do just enough to be able to keep the economy stable. It's not reaching for a higher ceiling. It's not trying to juice things. What it wants to do is get the economy stable so they can worry about other priorities, mostly national security priorities, building up a domestic chip ecosystem, working on supply chain resiliency. working on vulnerability to U.S. sanctions, these types of things. Certainly a lot of things with advanced technology. What it doesn't want to do is juice high levels of growth. So it's trying to figure out what the minimum amount needed in order to keep going, and to not have to worry about the economy. It's not a priority, but it also doesn't want it to be its downfall.
To what extent are they concerned, are the Chinese government and officials concerned about tariffs that President-elect Trump is talking about?
I think they are concerned. I think they should be concerned because, tariffs are coming in 2025. We'll see as the administration fills itself out and as the policy gets more sequenced out, what exactly we see on what timing. But I think they understand that there is a very high level chance that they're going to see increased pressure on their major growth driver right now, which is exports. In 2024, it's the timing of this is remarkable because 2024. China spent the entire year, including through Xi, including at the plenum, saying we are going to double down on our manufacturing and export model. We're going to talk about new quality productive forces. And even though we have the highest trade surplus ever and we have a record manufacturing goods surplus, we are going to still double down on exports in a whole government effort to just keep pushing them out to the world. This is causing friction everywhere. But with Trump coming in too, who's particularly sensitive to these issues, you're going to see a problem. So I think that they should be very worried about the tariffs that are on the way.
What do you think, where in China, in terms of sectors, are still the weakest, and what can really be done for that?
Well, I think you need to put property off to the side because property is weak in large part because they want it to be weak. They have spent the last 4+ years, diminishing property as a growth driver, popping the property bubble, trying to keep prices down, trying to extend as little credit as possible into the sector. So property is weak, but it's sort of separate because that's part of the game plan. What continues to be weak and too weak for China's future growth is consumption. So if you look at retail, you look at services, you look at these areas of the economy that should be soaring. If the leadership was really paying attention to this consumption as a priority mantra, those are not doing too well. They're doing a little bit better than they were earlier in the fall, but they're not doing well. So everyone keeps thinking that there's going to be this giant fiscal blast and consumption is going to flip like this. In order for there to be a major restructuring of the Chinese economy, you do have to incentivize greater consumption, and you can't do that through one-off vouchers.
Leland, if I were to chat with some folks on the street, whether it's in urban centers like Beijing or Shanghai or out in the countryside, what would they tell me? Are they concerned about this economy? Are they happy with the economy? Where are we?
I think they're concerned. If they're traders, then they're trying to listen very closely to hear every time there's a stimulus announcement, then they're running their computers and buying because this is about short-term asset market trading. Most of these things are complete nonsense, and they're being basically broadcast by the street, by others, because they're trading opportunities. They're not macro changes to the landscape. So I think most of the people who are on the ground trying to live their lives are very disappointed in what they see. Yes, there's more policy support that's come in 2024. Yes, there will be more on the way in 2025. But is this going to fix what ails China? China has extraordinarily low domestic demand, and they're over-reliant on an export model that's about to be hit hard with tariffs. So with that combination, I would be very concerned if I were a Chinese household just trying to figure out what's next for me.
So based on that, what do you think is going to happen with tariffs? Like we were all talking about how President-elect Trump invited President Xi to his inauguration. Like, do you really think that tariffs are going to be in the cards in a material way, or is this still the bargaining chip playbook?
Yes, I think tariffs are going to be coming in a material way. It's funny because, the street commentary, and I get these things flooding my inboxes every day. They like to pick up on some sort of personnel, something or other, some sort of anecdote, and then that is their reason why they think all this is just going to be a total non-issue. Scott Bessent doesn't like tariffs, or Bob Lighthizer not in the administration, or she may come to the inauguration, and therefore this whole tariff thing was non-existent, and it's not real. I would spend a lot of time second guessing these things because it's very important to understand that at a core precept of what the Trump administration is coming to do is reorder the domestic economy and reorder international economic relationships, and part of that is going to be with tariffs. We still to be seen. who gets tariffed and how hard and on what sequencing. I think the administration is going to work on that and transition the administration as things come along. The idea that China is not going to see tariffs in a big way in 2025, I think, is a very optimistic take by the street.
Really great stuff. Super appreciate it, Leland. Thank you very much, Leland Miller, CEO of The Beige Book. Coming up, Tim Craighead is back. 50 companies to watch in 2025. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday Eve. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news from business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries worldwide. So yesterday, we were speaking to Tim Craighead, Bloomberg Intelligence Research Director for Content, on the 50 companies to watch in 2025. And there were some buckets that we talked about: cyclical recovery, AI, innovation, energy transition, and sort of stimulus, particularly China stimulus. We didn't get to a lot of the companies, so we brought Tim back to drill down into some of the company stories. Let's start with the cyclical recovery, because if I look at the list that you guys have, that's really the bucket where you're seeing a lot of the stocks highlighted. Give me an example of what kind of company would work in this theme of cyclical recovery.
Yeah, sure thing. And thanks for having me back.
You bet.
So there's a broad view here of elections are over in the U.S. and in Europe. There's some clarity. Central banks are cutting interest rates at least a little bit for a while. We'll see how long it lasts. And all of that should provide some better backdrop in terms of sentiment. And with that, you could see labor markets improve a bit, which plays into workday, which is a human resources software provider, and Adecco, which is one of the larger placement recruiting companies. So that's an example. There's also home building that plays into this. So one of the big UK home builders is a company called Persimmon. And then you've got, retail and other consumer product related companies. Think Tapestry. Tapestry makes Coach, the great, handbag and other clothes. And they've also got Kate Spade. And if we start to see some improvement in the consumer space, then that plays into, a cyclical story in addition to what Tapestry is doing specifically. So things like that.
Hey, Tim, as you well know, during your long career on Wall Street, a lot of what investors and traders do is try to figure out where the consensus is. And do I have a different view than consensus? If I do, then I'll buy the stock or sell the stock short and so on and so forth. You've identified some companies where you think there might be risk to that consensus. Give us a name or two there.
Yeah, so this plays across regions, it plays across sectors. We just talked about some consumer ideas that we think can do better. You've got Estee Lauder, however, that we think is still misfiring in some of its core brands. So that's on the cautionary front. Nintendo, I think pretty much everybody knows who they are. They're supposed to be in the midst of an upgrade cycle with a new console, the Switch 2. That's been long delayed. We think the delays continue, and we think you've got earnings disappointments there that will happen. There's a lot of AI hype, and expectations are huge. And, clearly we have AI-related names on this list. But Palantir is one of those that's smaller in scale when it comes to large language models and really high expectations. We think the company is very well placed, but we think expectations are probably too aggressive. And so we've actually got concerns on that sort of consensus front, as you rightfully point out, Paul. Those are a couple that come to mind. It's interesting. We've got a lot of China stimulus ideas going on here, and this might be a little far-fetched for some of the U.S. listeners, but we also have a negative view on Shanghai Airport. Traffic is coming back. There is a lot of traffic, but a lot of their earnings actually come from the duty-free sales that happen in the airports and the rent that they get off of that. And people just aren't buying as much when they travel as they used to, especially Chinese. They're buying it online, or they're going to stores, not necessarily the airports. So there's a lot of different ways to think about this.
If anything that we've seen in the last sort of few months, it's been the revolving door of CEOs and CFOs, particularly companies that sort of ditch their CEO or CFO and don't have a backup for a bit too. And then you have like this joint committee thing that's making decisions. New CEOs are definitely a theme potentially for next year. What companies are you watching in relation to that?
It's interesting, Alex. Quite often when we zero in on a new CEO, it typically is a positive catalyst. And we have two of those on the list, HSBC and Norfolk Southern. HSBC, big bank. I think there's still some focus with them on how much potential property risk is there given the Chinese exposure they have. But, and this is the good part, new CEO is on board. Very focused on developing a wealth business, and we think there is a huge opportunity for HSBC in the Asia and specifically China wealth front. And there's opportunity as well through some restructuring that they can put in place, and so we expect to see costs down, margins up, better earnings trends. Norfolk Southern is really similar in ways to what we had on the list last year, Union Pacific, where a new CEO had come in and had really driven the railroad on a thing called precision logistics or precision transport, being all the more on time, and it improves margins and efficiencies. Norfolk Southern has lagged. They have a new CEO who's now focused on the same game plan. We think that's a winner for this coming year.
All right, Tim, great stuff. Appreciate it. As always, Tim Craighead, he's a global content officer for Bloomberg Intelligence. He's based in London. Again, they come up, Bloomberg Intelligence comes up with these 50 companies to watch going forward.
I think we might need one more day with him, though.
We could do another day with him.
I think
There's
we
a lot
could,
of
Mark.
cool
We got
names.
another day. There's some innovation stuff we got to get through,
Yeah,
too.
we got to get to some of that stuff. So Tim drives all that product for Bloomberg Intelligence.
Good stuff. We like that.
Before that, he was in sales at Goldman Sachs, so he's been on the street a long time.
So he knows how to sell stuff.
He does.
All right, well, that wraps it up for me and Paul on this Thursday, this Friday Eve, where equities are just trading a little bit heavy, picking up some steam to the downside. Coming up next, Joe Matthew with Balance of Power after this global news update.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. We've heard from Secretary of State Blinken about an American who is free now in Syria after 7 months in captivity.
We're working to bring him home, to bring him out of Syria and to bring him home. But for privacy reasons, I can't share any more detail than that.
Blinken said there's no new information about Austin Tice, the American journalist who's been held in Syria for 12 years. CBS's Elizabeth Palmer spoke with the man who was found today.
The first we knew of him was in a social media post. Local people claiming he was an American prisoner who'd been locked up in one of the regime's most notorious jails. We found the house about 15 miles south of Damascus, and there was Travis Timmerman from Urbana, Missouri. You look well.
I was only let out 3 times a day to go to the bathroom, so that was quite the hardship.
You had food and water?
I did.
Here at home, the Justice Department and City of Louisville have reached a police reform deal. After the investigation prompted by the killing of Breonna Taylor, the agreement needs a judge's approval. CBS's Lilia Luciano has the latest information on Luigi Mangione, the man charged with murdering the United Healthcare CEO. He's in a Pennsylvania prison.
He's not in solitary confinement. He's not under any kind of suicide watch or psychological order. He is not having access to other inmates. He's in a cell by himself. That I asked whether he can go outside. They say not at this moment, but at every level, every inmate does have access to that, so he will.
In Washington, CBS's Linda Kenyon on the Biden administration move to commute the sentences of 1,500 people.
The largest single-day act of clemency in modern history has gone to those released from prison and placed in home confinement during the COVID pandemic. In addition, the president is pardoning 39 Americans convicted of nonviolent crimes.
Some economic optimism this morning as President-elect Trump rang the opening bell on Wall Street, not long after being named Time Magazine's Person of the Year.
We're going to be #1 plus. We'll do numbers that nobody will really see before. And when that happens, prices are going to start coming down because people can't afford their groceries. And they're going to be affording their groceries very soon.
A new analysis finds only 1 in 5 hourly workers has $500 or more in emergency savings, with many looking to work extra over the holidays.
A lot of this, they mentioned, is to use holiday earnings for basic necessities, gas, groceries.
Atif Siddiqui is with the Workforce Payment Platform branch, which surveyed 3,000 workers.
59% of workers delayed a medical procedure due to this financial strain.
And checking Wall Street right now, the Dow is down 94 points. S&P is off 14. This is CBS News.
world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Donald Trump closes the deal on Wall Street by opening the markets today. Welcome to the fastest show in politics as the president-elect rings the opening bell at the New York Stock Exchange just after being named Times Person of the Year. We'll get with Bloomberg's White House reporter Josh Wingrove with more on this ahead. Also now tracking the single largest act of clemency in a single day in modern history. It just came from Joe Biden, and we've got names. We're joined ahead by former federal prosecutor Jessica Roth, not Cardozo Law. We'll have analysis from our political panel. Of course, Rick Davis is along today, Republican strategist, Bloomberg Politics contributor, joined by Democratic strategist Brad Howard at Corcoran Street Group. So let's get to it. As always, with a look at Wall Street, Charlie Pellet's got his hands on the markets for us. Charlie, how's it look?
Right now we are in the red, Joe Matthew. Happy Thursday with the Dow, the S&P, NASDAQ all declining. PPI Thursday, stocks moving lower. S&P down 12. Right now it's 6,071, down 0.2%. We've got NASDAQ back below 20,000, now at 19,980. The NASDAQ Composite Index down 0.3%. Dow Industrials down 80. For the Dow, that is a drop of 0.2%. 10-year at 4.30%, with a 2-year currently yielding 4.15%. Spot gold down 1.3%, 26.83 the ounce on the precious metal. West Texas Intermediate crude just above $70 a barrel, lower by 0.4%. And Bitcoin now at $101,400. Bitcoin today down 0.2%. Bottom line here, traders are digesting a slew of data ahead of next week's Federal Reserve policy decision. Well, as Joe mentioned, it was quite the morning for President-elect Donald Trump. Trump getting Time Magazine's Person of the Year award, also ringing the opening bell at the New York Stock Exchange. Scott Cronert is head of U.S. Equity Strategy Research at Citigroup Global Markets, and on Surveillance this morning, he talked about markets and the incoming administration.
Importantly, what I think is most encouraging for us is that you've got some individuals in place that are a little bit more focused as well on the spending side of the equation. 6 months ago, as we're kind of navigating through the election diatribe, there was almost no focus on how do you think about cutting spending. What the market really wants longer term is a sense that there's some sanity at work here, that we get it. We need to stimulate economic activity, but we have to do it in a judicious fashion. We're very attentive to where the deficit math has taken us.
Scott Cronert of Citigroup. Meta Platforms is donating $1 million to President-elect Trump's inaugural fund. Meta Platforms shares are up now by 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you, sir. As always, you made it to Thursday, Little Friday. Thanks for being with us here on Balance of Power. I'm Joe Matthew, live in Washington on Bloomberg Radio, on the satellite, and of course, YouTube, where you can find us right now. Search Bloomberg Business News Live. It's the coolest thing going on the internets. By the way, that's all our shows from here in Washington. Also, back to New York, you can catch Bloomberg Business Week and all of our programs, beginning with surveillance each day. We've got a lot to talk about here. It started early with the opening bell. Even before that, we had word of the pardons, and we're going to get into that. With regard to Joe Biden here, the largest single-day act of clemency in modern-day history. Just as Donald Trump was rolling downtown to the New York Stock Exchange, he did ring the opening bell. This was the venue for the big Time Magazine event. He's Person of the Year again, had this to say about the economy.
The economy, I believe, is going to be very strong. We do have to solve some problems. We have wars going on that we didn't have. We have a lot of things happening that we didn't have that would have never happened. They would have never happened, but now they have happened, and I want to get them solved.
I don't know how we would feel about the fact that the markets are lower today. But let's bring in Josh Wingrove, Bloomberg White House correspondent, who, of course, covered the first Trump administration. And it looks like, well, you're going to be doing that again. So thanks for coming over. A bunch of stuff I want to talk to you about, including just the choice of this venue, the importance of the optics today. What do they mean to Donald Trump?
Yeah, I mean, Trump's a TV showman, so he got to trot out not only himself, but members of his, economic team, including the incoming Treasury Secretary, of course, Mr. Bessent, Howard Lutnick, the incoming Commerce Secretary, and, wants to be a cheerleader, essentially, for the strength of the economy right now. I should note, obviously, Trump is taking credit for driving the gains we've seen in markets in recent weeks. Joe Biden remains the president. I think he tries to take some credit for that, too. So we'll let those two duke it out, proverbially, over who gets the credit for the state of things right now. But he made news, too. He reiterated his intent to try to drop the corporate tax rate to 15% from 21%. Right now, if you're a company that manufactures domestically, a lot of details to be sorted about that. For instance, if you import your parts but then assemble them, does that count? Unclear. He also kind of opened the door to talking about capital gains tax changes as well. So, you know, going back and forth on it, talked about wanting to make Bitcoin, or I should say cryptocurrency more broadly, more of an American-rooted thing, worried about China, I guess, eating America's lunch.
He
on
acknowledged
that.
the idea of a national reserve. Is this for real?
That was new to me.
Yeah.
So I think, like with all things Trump, it's real when it's real. And, you know, we'll wait for him to say more about that. Jim Cramer kind of asked him a little bit of, I don't want to say leading question, but that ball was on the tee.
Didn't get a full
ready to go.
answer.
Yes.
Yeah, right.
Yeah, so, you know, we'll see. We'll see.
You know what
But
he also
he's
told
open to it.
Cramer is that he's picked Scott Bessent because he said nice things about him. In the run-up to the election, he said stocks were rising because people thought Trump would be elected. That's not really the reason why he chose the Treasury Secretary.
I mean, today it appears to be the reason he chose the Treasury Secretary. I mean, there's a lot of evidence of people who, you know, tell Trump good news or even rosy news, rosy view of the news. Getting ahead in things. I guess one wonders if other candidates for Treasury Secretary are now reflecting on
where were you last summer?
What they said, and if they had a chance to maybe tell him what a great economy Joe Biden had, but also Donald Trump had. It's a balancing act.
He's no stranger to that building. He filmed an episode of The Apprentice in the New York Stock Exchange. He went there for an IPO of his own at one point. Is he beloved at the Stock Exchange, or is he at odds with some of New York, as we tend to hear?
Well, are we talking the Stock Exchange or are we talking New York? I mean, the crowd seemed happy to see him. Vice President-elect Vance was there, poking fun at folks, saying it's 9:48 in the morning. Should she be making some money? And I guess maybe they were or weren't. But you know, people were surrounding him. They were happy to be there. But he also made news, I should say, also on Ukraine today in his comments with Time, not live. Live with Donald Trump on the floor of the New York Stock Exchange. But
you enjoyed this interview.
Reiterated his desire to get a ceasefire, and of course, you know, this means almost certainly that would include codifying gains Russia has made into Ukrainian territory, what had been Ukrainian territory. He also expressed a strong opposition to approvals by the Biden administration allowing Ukraine to counterstrike deeper into Russian territory with American-made weapons. It looks like Trump will, you know, if the fighting does continue past his inauguration and he isn't able to secure some sort of deal, looks like he'll pull the rug out on that and take that off the table in terms of a Ukrainian option.
What's this going to be like covering the Trump White House for you? Do you expect daily briefings? Are we going to go back to something that looks like a normal press shop, or is it going to resemble the first administration when there frequently were none toward the end?
Well, it depended on the press secretary. I mean, Sarah Sanders briefed a lot. You know, Kayleigh McEnany, one of the last press secretary, briefed fairly often before her predecessor did not brief. So it depends, right? It really depends. I mean, you know, we'll see. I think right now it's an open question. Trump himself always enjoyed being the foremost spokesman of his own administration, right? So he would call us into the Oval a lot, I suspect. We could see more of that. One of the other open questions, of course, is just how much time he'll spend in Washington. You get different answers when you talk to people about that. So I think that's also an open question right now.
So talk to me about what's happening in the Biden White House. The largest single-day act of clemency, we're told.
Surprise.
The numbers are something.
Good morning.
Commuting sentences of 1,500 people and add 39 pardons, and we're not done yet.
Yeah, so the 1,500 are cases of people who, in many cases, who were serving sentences at home under sort of a COVID-era policy. I think these are going to be largely uncontroversial. This is not 1,500 hunters over and over again, or so not a lot of blowback.
People think that
on
when they see that headline, right? 1,500.
Well, it certainly appears that he found the clemency pen in the drawer, which is not uncommon at this stage of an administration. Of course, there's reporting that other clemency decisions kind of remain in the air, including the notion of pre-pardons for people that may be targeted by the Trump administration. Some of those have gone out publicly and said they don't want it, including, of course, Adam Schiff.
We've heard about one who does, by the way. Benny Thompson said, you know,
do you want some of that?
You got an extra
got one in the drawer?
minute in there.
Well,
because if you were running that January 6th committee, you might actually have an interesting year ahead.
It's a fair point. Well, today suggests that he will be pushing on an open door when it comes to getting the Biden administration's attention on that. But by and large, today's are going to be less controversial than, you know, certainly one that happened a couple of weeks ago, and others that may be coming. The administration hasn't committed to.
Well, that's right, though. Joe Biden said, quote, "I will take more steps in the weeks ahead," unquote. What does that mean?
We don't know. We don't know. Certainly seems like a tacit acknowledgement that, well, an explicit acknowledgement that they're considering more commutations or pardons, and a tacit acknowledgement of the reporting out there that they're considering some that would be more.
A Liz Cheney, for instance?
Who's to say?
Interesting.
Right now, we don't.
What is he doing with the rest of his time other than thinking about pardons and commutations here? What are the remaining weeks going to be like?
They are focusing on legacy right now. It seems like Joe Biden it seems like he does not think he's getting credit for the administration that he believes he had. For instance, they launched whitehouse.gov/economy to try to make the case for the Biden economy. He gave a speech at the Brookings Institution yesterday. So it seems to be him trying to reframe things on it. One of the interesting questions today in the Time magazine interview that Donald Trump did was he was asked about Kamala Harris, and he said what were her biggest mistakes, and Trump said her first mistake was taking the assignment because you got to understand your own strengths. So even Trump still wants to litigate that election right now. But Biden is focused on legacy stuff as well as wrapping stuff up. We're in reporting on that right now, and I think there'll be some interesting things that they try to
legislatively
lock in. Or no, in terms of rulemaking and policy process. They're also, of course, rushing as much Ukraine aid.
No fun decorations to hang on the tree here with a continuing resolution, or the White House isn't pushing for anything that will make news.
To say right now they have not been publicly pushing for a lot of it, other than maybe that question of Ukraine aid and via some sort of supplemental. It doesn't seem like the Republicans have a lot of appetite for
It's getting quiet over there. Time for Christmas parties.
Christmas is a big motivator, Joe.
That's
for
correct.
you, for
I
me,
keep
for
hearing
my
about that.
toddler at home. You know,
you're the first person to not use the phrase jet fumes on the broadcast this week, so I congratulate you. I know.
It feels like Capitol Hill-ese.
You're beyond the cliches.
All right, yeah, no, I have my own favorite.
Bloomberg's White House correspondent.
Thank you.
We call him Clark Kent around here, at least I do. Many thanks to Josh Wingrove. Find him on the terminal and online. This is the man who will be helping to cover the incoming administration, so we're in good hands. We'll have a lot more ahead on the pardons and commutations. An important conversation with an expert. Jessica Roth, former federal prosecutor, will be with us right here on the fastest show in politics. Glad you're with us today. Live from Washington, this is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Stocks lower. U.S. government bonds dropped as traders digested a slew of data ahead of next week's Federal Reserve policy decision. November producer price data released this morning came in mixed, some measures exceeding estimates. Bottom line here, red on the screen with the S&P down 9. We've got the Dow lower now by 28 points, down 0.1%. The S&P down almost 0.2%. NASDAQ lower by 50, a decline of 0.2%. The 10-year 4.30%, with the 2-year currently yielding 4.16%. Gold down $35 the ounce. Spot gold down 1.3%, now at $26.83. West Texas Intermediate crude 70.42 a barrel, up 0.2%, and a retreat for Bitcoin, down now by 0.1%, $101,500 on Bitcoin. Microsoft plans to take an $800 million charge after GM said it was shutting down its autonomous taxi initiative. Microsoft up 1.1%, GM up by 0.3%. GM saying this week it will no longer fund the operation, citing the high cost to develop the technology. Again, recapping, S&P down 10, down by 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much, and great to have you with us here on the Thursday edition of Balance of Power. Yes, we are in Washington, where we have breaking news. Although the antennas are going off in New York and New Jersey right now, maybe Connecticut too, California, yeah, this has to do with salt. I thought I'd get your attention. This is like the most critical issue to Bloomberg listeners and viewers I think I've ever stumbled into. Somebody page Matt Miller. We've got numbers on salt, and it's not unlimited. Remember, Donald Trump said, gosh, this was 2-3 months ago at this point now, that he was going to lift the deduction. This is going back to the 2017 tax cuts. Some thought it would be unlimited. That's not the case. Headline, Trump advisors consider raising salt write-off limit to $20,000. Stephanie Lai has this story. One of our top political reporters out today with news. Trump's economic advisors considering doubling the state and local tax deduction, right? It's $10,000. They'd lift it to $20,000, which would mean big savings for the states that I mentioned here, but also require congressional approval. So we'll see where we go with that. One of the best pieces of news I heard today was that Jessica Roth was coming on, and I'm pretty sure I could talk to Jessica Roth about anything, but she's not here to talk salt. We have another big story when it comes to the pardons and commutations here out of the White House with, my gosh, these numbers. It jumps off the page. When you start reading into the names, though, and the justification, it might not be quite as fun as it seems. The president, though, is commuting the sentences of some 1,500 people released from prison and placed on home confinement during COVID. He's also pardoning 39 Americans convicted of nonviolent crimes, and he says, well, he's not done yet. Co-director, the Jacob Burns Center for Ethics and the Practice of Law at Cardozo Law, former federal prosecutor, SDNY, Jessica Roth. It's great to see you, Jessica. Thank you so much for coming in. This got your attention, surely. Were these justified?
Well, it appears that they were, and were consistent with the way in which the extraordinary power entrusted to the president by the Constitution to grant pardons and clemency has been exercised. Obviously, I haven't gone through and looked at the details about every individual, but in terms of the reasons that the president gave for granting his power as he did for these groups of individuals, these are traditional reasons to exercise these extraordinary powers. Some of these people were sent home from prison during the COVID pandemic and conducted themselves in an exemplary manner, suggesting that they did not require being returned to prison. Other people were convicted of crimes that might have been prosecuted differently today under current rules or laws or norms about prosecution with respect to drug offenses. So these are the kinds of considerations that have typically been taken into account by the presidency, and also those working with the president to help the president exercise this power. There is a whole apparatus within the White House and the Department of Justice for reviewing petitions for pardons and clemency to really look at the individual individual records and the circumstances, and also some of these issues about whether laws and norms have changed. So these seem to be consistent with that tradition.
As Josh Wingrove just said, these aren't 1,500 hunters, although the president says he will take more steps in the weeks ahead. And I want to ask you about this idea of preemptive pardons in a minute. But the previous record, I didn't know this, was Barack Obama, 330 in one day before he left office in 2017. But this is a COVID phenomenon, right? I guess these are extreme times that call for an extreme number, Professor?
Yes, my understanding is that the vast majority of those pardons and clemencies that were announced today, the clemencies, were for people who were sent home to home confinement during COVID. And so obviously that is an extraordinary set of circumstances.
What do you think about what we're about to hear? Benny Thompson, who chaired the January 6th committee, Democrat in the House, says he's open to a pardon. I believe the quote was, it's his prerogative. If he offers it to me, I would accept it, but it's his choice. Liz Cheney has been on the list, along with a few others. What do you think of the concept of a preemptive pardon? Doing this for somebody who's technically not in any trouble.
Yeah, I'm troubled by the concept of the preemptive pardon. I was troubled by it, frankly, when the president did it for Hunter Biden, although I understood in that circumstance why he would do it, given what some of the statements by President-elect Trump and by his prospective nominees, for example, to run the FBI, about intending to go after Hunter Biden and some of these individuals on the so-called enemies list. So I understand the rationale for doing it. That said, that is not the norm for how the pardon power has been exercised. The 1,500 people we were just talking about, that is the norm and how the pardon power has been exercised, not to do it preemptively in language that essentially gives people immunity for everything they might have done, every crime they could have possibly committed during a period of time. I'm troubled by that becoming normalized. It also, frankly, wouldn't insulate people from all harassment. So, for example, a congressional committee could still investigate individuals who had been granted a pardon, subjecting them to sort of the difficulties of responding to subpoenas and having to testify before Congress, having to retain lawyers to represent them in that regard. Other agencies, government agencies, could investigate them, like the IRS. So it's not like a pardon accomplishes everything that people might think that it would. It does preempt a criminal prosecution of the individuals who are named, but it doesn't accomplish everything. And so because of sort of the practical considerations of just how effective is it at its intended aims, and normalizing this idea of a preemptive pardon, and also suggesting that the people involved did anything wrong, for all of those reasons, I am terribly concerned by it, even though I do understand the rationale for doing it, given these extraordinary times we find ourselves in, where people are literally on an announced enemies list.
You know, even Bill Clinton doesn't think it's a good idea. He was asked about this on ABC TV. He was on The View, as a matter of fact. He said, I think it's a very personal thing. But then he stopped himself and he said, I hope he won't do that. This idea of preemptive pardons. And I wonder if it has to do with precedent, Professor. I know we're not in Bill Clinton's head here, but if Joe Biden goes there, what does that mean for Donald Trump in his next term?
Yeah, so when I said a moment ago, I'm troubled by the idea of normalizing this. I mean, that's really what I'm talking about, is sort of setting a norm, a new norm about the use of the pardons in this preemptive, broad way, setting the precedent that other presidents then would cite as essentially making it normal and something that is not extraordinary if they were to do so. I don't know in the case of former president and President-elect Trump to what extent the precedent set by Joe Biden would actually affect what Trump would do himself in terms of granting preemptive pardons. But in terms of how the public receives it, the media receives it, how people in our country think about it, I think it does matter whether Joe Biden does it first and whether it becomes essentially an accepted part of political and legal actions that we just grow accustomed to. I hope it won't.
As we spend some time with Jessica Roth here on Bloomberg, I have to ask you about Donald Trump's legal situation, his personal legal situation because, Professor, we spent so many months talking about the four federal cases, or two federal cases against him. We had Georgia, we had New York. And it's interesting to see what's going on here. Jack Smith may be out of business for now, but Alvin Bragg says he's not, opposing Trump's motion to have his hush money case dismissed. Is this going to follow him into his presidency, or his next term, I should say, or be waiting for him when he's done?
Well, we don't know yet. I mean, we're waiting to hear the ruling from the trial court on these very issues. And then whatever the trial court decides would be subject to appellate review at the intermediate court in New York, and then the New York Court of Appeals, which is the highest court in New York, and then in theory before the United States Supreme Court. So we don't know yet what's going to happen. Certainly it appears from the filings by the district attorney's office that they are not intent on going ahead full steam. They are open to the idea of holding the whole case in abeyance while Trump serves out his 4-year term. They're also open to the sentencing going forward, and whatever sentence is imposed, having that held in abeyance for the 4 years. They're also open to having the sentencing proceed. And then there would only be essentially appeals and the service of the sentence, although, again, the district attorney's office is open to a variety of ways in which that sentence could be fashioned, including no prison sentence, a fine instead, perhaps, or just essentially unconditional discharge, which would be no further action at all. And so the district attorney's office is laying out a whole host of options for the trial court in terms of how to proceed if the court is inclined to proceed currently, or how to essentially hold the case in abeyance for 4 years. And so we just need to see what the trial court's going to do, and then if there are appeals that ensue before even the next step at the trial court level. And I suspect that's going to happen, what's going to happen. I don't expect the trial court is going to dismiss the case outright, which is what Trump's lawyers are asking for. And so if that's the case, then I expect we're going to see immediate appeals before any sentence.
Fascinating. I want to take one of your classes someday. You think I could pass our class, James? I'm thinking I'd get confused really quickly, but I know I'd learn a lot. It's like going to school whenever we talk to Professor Jessica Roth. I only have a minute left, Professor. Let's come full circle back to where we started. Would it not behoove Joe Biden to pardon Donald Trump on his way out?
Well, that's interesting. Obviously, he doesn't have the authority to do that for the state prosecutions. He would only have authority to pardon him for the federal cases.
Right.
And
no one would be talking about Hunter anymore.
It's true. I think people are going to be talking less about Hunter now that the president has exercised his authority to pardon many other individuals who are not related to him. The cases against Trump, the federal cases, have already been dismissed without prejudice. I think there's very little likelihood that they would actually be resurrected after the 4-year term. So I just don't see that happening.
Had to ask. It's great to see you, as always, Jessica Roth, co-director, Jacob Burns Center for Ethics in the Practice of Law at Cardozo Law. We always learn something when we spend time with the professor. I'm Joe Matthew in Washington. We'll assemble our political panel next. Rick Davis is with us, along with Brad Howard. It's going to be a good conversation, so stay with us right here on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index all trading lower. Russell 2000 index down as well, down 0.8%. To put that in context, the S&P now lower by 0.2%, down 14, trading at 6,070. The Dow lower by 92, down 0.2%. And we've got NASDAQ down 59, back below 20,000, 19,975 on NASDAQ, down 0.3%. That tech-led stock rally being put on pause this Thursday after mixed economic data. 10-year at 4.30% with a 2-year, 4.16%. Gold down $33 the ounce, down 1.2%. Crude back above $70 a barrel, up 8 cents now, up by 0.1%. And a retreat for Bitcoin now at $101,380. Bitcoin down 0.2%. On the latest edition of the Bloomberg Big Take podcast, David Gura sat down for an exclusive interview with Treasury Secretary Janet Yellen, and he asked Yellen if she's confident the Fed could withstand a more actively involved administration or other kinds of political pressures.
Independence is absolutely central to the Fed's effectiveness, and I believe it's important that it remains an independent institution, that politics don't enter its decision-making, and it remains accountable to Congress to explain how it's pursuing the goals that Congress has assigned to it.
Treasury Secretary Janet Yellen interviewed on the Bloomberg Big Take podcast. President-elect Donald Trump's economic advisors are considering doubling the state and local tax deduction, a popular but expensive tax break that could deliver big savings to many residents of New York, New Jersey, and California. Recapping, stocks lower, S&P down 16, down 0.3%. PPI Thursday, and we have got the 10-year at 4.30%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Always watching Wall Street for us here as we talk politics in Washington. That's how we do it on Balance of Power. Thanks for being here on the Thursday edition. About an hour from now, a fascinating conversation that we'll invite you to hear with the outgoing governor of New Hampshire. Chris Sununu is going to be at the desk with us here, talking about the Doge. Yeah, Chris Sununu is into this idea. Of course, not one to have initially supported Donald Trump. He loves what Elon Musk and Vivek Ramaswamy are doing, taking to the Hill to write, "I can assure Elon Musk and his team that the mission of the Doge is achievable." We'll talk about that and the future direction of the Republican Party with Governor Sununu. Interesting happening right now, behind closed doors. Some lawmakers you know pretty well from this broadcast. French Hill, the Republican from Arkansas. Andy Barr, Republican from Kentucky. They're delivering speeches trying to appeal to their committee members, Financial Services Committee in the House, to be the next chair. We should know a couple of hours from now. We'll let you know on the late edition of Balance of Power what happened and who is going to hold the gavel. It does follow some news. They passed the NDAA yesterday. Who says nothing gets done around here? 281 to 140, despite some protests from Democrats who were upset. Actually, some Republicans were too, you know, about the transgender language that found its way into the annual defense authorization. That's where we start our conversation with our great panel today. Rick Davis is back with us, partner at Stone Court Capital and Republican strategist alongside Brad Howard, Democratic strategist, the founder of Corcoran Street Group. Great to see both of you here. Thanks for joining, as always. Brad, I'll start with you as our Democrat. Why is transgender language aimed at the so-called woke Pentagon ending up in the NDAA? Is that where it belongs?
Well, so you got to keep in mind, first of all, the Defense Authorization Act is what authorizes all of the different programs within the Department of Defense. And then, of course, there's an appropriations process that gives them the money to do that. So you need both in order for something to happen. Keep in mind, too, that, there's a lot of, when people are active duty across the U.S., it's the responsibility of the military to cover their health care. And I think this provision in particular was about for minors. So it was, if you're stationed abroad and your kid needs gender reassignment surgery because the doctor has recommended it, it's covered. The Republicans wanted to get rid of that, and they did. I think while Democratic leader on the House committee, Adam Smith of Washington State, put out a statement, very sharp statement criticizing it, but he did not outright encourage Democrats to oppose it, which I think was the signal from leadership that, like, we won as many battles as we could. You know, this is a good deal.
We're going to talk to Adam Smith, as a matter of fact, about this on the late edition of Balance of Power. So join us in the 5 p.m. Eastern hour. Rick, I don't want to dwell on this. I'm just wondering, because we did hear from the chair, the top Republican on the committee as well, some concern that these kind of issues should be aired out somewhere else, that's not what the NDAA is for. Do you agree?
Yes, I do agree. Mike Rogers made actually a pretty strong pitch that the speaker should keep his nose out of the business of the House Armed Services Committee markup, and kind of flew in as a leader, as a speaker can, and dropped this bomb into what is decidedly one of the most bipartisan bills that ever makes its way through Congress year in and year out. And Mike Rogers just saw this as a transgression that wasn't aired out in committee, wasn't a part of the chairman's mark. Nobody had debated it inside. And so I think it was much based on the process than it was on the policy itself.
Most of the Republican dissenters, by the way, members of the Freedom Caucus, and there were some Republicans upset about the top line number. They were looking for an extra $25 billion or so. This will sail through. I presume Brad will get this done in the Senate, and then it's a matter of dealing with funding the government, right? You've walked up on a number of deadlines in your House career, and we're heading for another one here. What are we, 8 days out until we run out of money? Should we be worried?
No, I think there's usually when folks, it looks like the four corners have agreed on this mid-March extension for congressional resolutions. We call it a CR that would fund the government, which expires December 20th to mid-March. It looks like the four corners and the parties are generally okay with that. The problem is the rank and file Republicans in the House, particularly the far right, who don't love these CRs, who are constantly trying to cut spending. I call them the ungovernables of the caucus. And, you know, once again, as his time has shown, it's very possible Speaker Johnson's going to have to rely on Democratic leader Hakeem Jeffries and a handful of Democrats to keep the government functioning, because Republicans really struggle with the bare bones minimum of just keeping the government open. And then their majority next Congress can shrink to as much as one vote he can lose. So this is where you're going to start to see Hakeem Jeffries really be a power player, particularly the new Democratic coalition, which is under the leadership of now Congressman Brad Schneider of Illinois. He is a solutions-oriented guy. He knows how to make deals. But here's the beef. Republicans cannot commit to Democrats at the last minute and expect us to bail them out every time. If they want a governing partner, then they need to act like we're a governing partner and bring us in earlier in the process. But a CR is a pretty simple thing. And I think we've given, I think a lot of Democrats have said they won't, you know, fight to the death on this one. And we'll punt it to next Congress and under President Trump.
All right. Well, so then I guess, look, Rick, Brad's not the first person to say it on this show, right? Speaker Johnson's going to need Democrats to get most anything done. So where's the beef in March? We may not be talking shutdown here, but we could be then when we start talking about extending the Trump tax cuts and raising the debt ceiling, some of the other challenges we face in the new year. You think?
Yeah, this is where it really gets dicey because, as Brad says, it's a slim margin now of 3 members. But in March, because of the members going into the administration, vacating seats that won't have been elected yet, you could have it down to 1 member, the difference between Republicans winning votes in an all Republican vote and Democrats being able to beat it. So if you thought there was leverage in the House caucus, you've now got it down to 1 member can hold up the entire process. And that is why so many people are talking now about, you know, maybe we need to make this happen quicker, you know, maybe even come back and let this thing expire in January so that we can get a new deal, you know, before it really starts getting dicey, before all these people get confirmed who are going to be vacating House seats and going into the administration. So, I mean, like you're literally noodling over 3 people right now, and it only is going to get worse before it gets better.
Please remember this conversation with Rick and Brad next time you hear people talk about mandates. Brad, what happens with the sequencing thing here? This is the big question right now in Washington. We're wonking out hard. If you know what we're talking about, this show is made for you. Do they tackle the border first before the tax cuts or try to bite it all off at once?
Well, here's the deal. And first of all, let me say, I'm a procedure guy. I know House rules extremely well. The problem with the 1 to 3 seat majority, the really true problem is that at any moment, the Democrats can move to previous question. And if the vote fails because the Republicans aren't together and on the floor, they can essentially get control of the floor. And if one or 2 or 3 or 4 members are out on a certain day because their flights got delayed or there's a hurricane in their district, and on that particular day, the Democrats have the majority, there's a very real possibility that the Democrats could take the majority away briefly before Republicans are able to bring it back. So there's going to be a lot of historical firsts here. It would be very interesting to watch. The key about reconciliation is that it is a very specific laid out process in House and Senate rules and in law. They have to get the reconciliation done by September 20th, by September 30th, by the end of the fiscal year, or the process has to reset and start from zero. So if the president does not have his signature on a reconciliation bill by September 30th, they can't extend it. They lose the opportunity. And so you give up a free reconciliation lane, essentially, and you have to start from square one on October 1st when the clock resets. So they've got to really crunch here. And I think that's why you see John Thune, the new Senate Majority Leader, which is the first time we've had that in a long time. He's coming in with a very packed schedule. If you look at the Senate calendar, I've never seen it that busy before because they know this deadline is approaching, and if it's use it or lose it.
First of all, I could listen to Brad talk about the rules book all day long. There's just something so authentic about this. But Rick, he just pointed us to something great. Brad Howard is looking at the Senate calendar, which Rick Davis knew by heart for many years. We're talking about 5 days a week. Is this for real? They usually fly in Monday nights and you head home Thursday afternoon. But there are long stretches in which the Senate will be in session every week, including Fridays. Rick, do you believe it?
Yeah, no, I'm not surprised. John Thune, as Brad points out, a new majority leader in the Republican caucus, which is an unusual thing in my lifetime. He knows what we know, which is it's highly likely that in the midterms, the House will flip and they will lose their governing majority in both the House, Senate, and the White House as a caucus. So they've got only 2 years to pass what is essentially a 4-year plan in both the Senate, the House, and the White House. And so this is the year to get as much of that done as they can. And I think there's going to be a lot of demand for this. Certainly will be supported by the White House. They want these guys, being able to act on their agenda as quickly as possible. They are going to try and do as much as they can statutorily because they know that's the sticky way to get things done, not just, moving a bunch of executive orders around, but to actually embed this stuff in law. And there'll be a real high priority for that, and to get it done through reconciliation where you don't have so many tough votes in the Senate. So Brad's right. I mean, this is a scramble. It's a deadline already that's, they're getting behind because they're going to have to take time in March to deal with this, 2023 budget, 2024 budget, which is part of the argument as to why they want to try to knock this off potentially in January. I would not be surprised to find the CR shorter than we otherwise think it's going to be. But at the end of the day, you're right. There's a lot of debate as to whether or not they do this all as one big omnibus package, tax cuts, reform, infrastructure, all these things that immigration that Trump is talking about. And knowing Trump, that is likely to be the approach. He is not someone who likes bite-sized policy. He likes the big chunky stuff. And it's like eating that quarter pounder with cheese. You don't go for the single. And so at this stage, I think that the Senate, they probably recognize that and are going to be dashing to try and get all this into a package.
And wrapped up in all that other judges.
Yeah, right. Well, Brad, I've got less than a minute left. They're already complaining about this. Is Thune going to keep everybody together in the caucus on this Friday idea?
Yeah, but not only do they have to worry about reconciliation and government funding, both of which have hard deadlines. To Rick suggests if historical trends hold, then Democrats retake the House in 2 years. You've got 2 years to pack the courts, right? That's a huge issue. And believe it me when I say that Democrats will throw up every procedural hurdle imaginable and drag each confirmation out, both on some of the cabinet secretaries and I think for sure on some of the federal benches. Let's keep in mind too that if something happens to a Supreme Court justice, that everything gets thrown off and it becomes a whole new problem. So they've got a lot to do in very little time.
Aren't you excited for next year? Good thing we'll have Brad Howard and Rick Davis with us. This is a great panel. They'll be back in our second hour as we welcome our global television audience to the conversation. Producer James is going to order some Big Macs for us here to get through the break. A lot more to follow. This is Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Donald Trump brings his case directly to Wall Street. Welcome to the fastest show in politics as the president-elect rings the opening bell at the New York Stock Exchange after being named Time's Person of the Year once again. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us here on the Thursday edition of Balance of Power. Kaylee, he made some news today at the stock exchange on tax cuts, on Ukraine, and a few others.
Yeah, and in the interview with Time itself, as he was named for the second time Person of the Year. But on taxes, we obviously have heard from Trump already. He wants a lower corporate tax rate. He reiterated that at the NYSE, down to 15% from the current 21. But also Bloomberg out with some exclusive reporting. Our colleague Stephanie Lai suggesting that Trump's economic advisors are talking about lifting the SALT cap, which he did tease on the campaign trail, from $10,000 to $20,000. But even at $20K, a cap is a cap.
Not unlimited is really the headline in that case. And Stephanie Lai has a big scoop for us here at Bloomberg. This is one of the most important stories, as we've learned over the course of this campaign, when it comes to our viewers and listeners, because so many are in New York, New Jersey, California, where this is going to hit home.
Yeah, absolutely. And it's in a lot of those bluer areas, which is why Republicans largely have not been supportive of the idea of lifting it, unless, of course, you're a Republican in the state of New York, like, say, Congressman Mike Lawler, who told us in an interview just weeks ago he won't be voting for any tax packages if a lift to the cap is not included. So maybe this is part of the conversation to try to get all of these tax promises Trump said he wanted to make on the campaign trail to become reality.
Gregory Cordy is our unofficial SALT expert, our SALT correspondent with us, and will be with us here at the table. We've got some great conversations ahead, including our panel, Kaylee, and we're going to be looking at this massive dump of pardons here, 1,500. Well, 39 pardons to be exact, 1,500 commutations. It brings us back to the COVID pandemic. And Joe Biden making news today as well.
Yep, so we have a lot of conversations to look forward to. But we begin, as always, with a check on the markets. And Charlie Pellet has a look from New York. Hey, Charlie.
Thank you very much. And here's what's going on. We have got the Dow, the S&P, NASDAQ, all trading lower. PPI Thursday. Stocks are declining. Right now, the S&P lower by 7 at 6,076. That is a drop of 0.1%. The Dow down 75, lower by 0.2%, while NASDAQ lower by 27, a drop of 0.1%. The Russell 2000 index of small cap shares down 0.8%, with a 10-year 4.29%, the 2-year right now 4.16%, as traders digest a slew of data ahead of next week's Federal Reserve policy decision. Spot gold down $31 the ounce, down 1.2%. West Texas Intermediate crude trading above $70 a barrel, 70.41 right now, up 0.2%. And Bitcoin lower a little change, down 0.1% at just about $101,500. First day of trading for Service Titan. It is a software solution company. The shares opened at 101, 42% above the $71 IPO price. And right now, TTAN on the ticker is trading higher by 44.9%, now at 102.91 on Service Titan. After earnings, Adobe down 13%. After earnings, Ciena up 14.8%. After the close of trading today, we will be hearing from Broadcom. Yesterday, the information reported that Apple is developing an AI server chip and was working with Broadcom. Right now, we got Broadcom down 2%, Apple up by 0.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York. Thank you so much. New York, of course, was a popular place to be if you are a incoming member of the second Trump administration, or at least a secretary designate. As we saw this morning, ringing the opening bell at the New York Stock Exchange was President-elect Donald Trump, and he brought along with him some of those who will comprise the most senior levels of his cabinet, assuming, of course, they get confirmed, including the likes of Treasury Secretary designate Scott Bessent, RFK Jr., was there others as well that we could talk about. But he, of course, was there because he was selected as Time's Person of the Year this year, the second time that he has been awarded that. But he used it as an opportunity to make his case once again about what he intends to deliver for Wall Street.
The economy, I believe, is going to be very strong. We do have to solve some problems. We have wars going on that we didn't have. We have a lot of things happening that we didn't have that would have never happened. They would have never happened, but now they have happened. And I want to get them solved.
Interesting, if you're with us on Bloomberg Radio, to look at the cadre of officials behind Donald Trump. To your point, Kaylee, it's interesting who was invited. RFK Jr. standing behind him, Scott Bessent. We saw Kelly Loeffler, interestingly. Howard Lutnick was just off to the side. He was cropped out of that image. And Brooke Rollins, I thought was interesting, the pick for agriculture. reminding us of how close they are and the roles that they are all potentially going to play here when it comes to setting policy in the new White House. Gregory Cordy is with us now, Bloomberg politics reporter at the table here in Washington. It's good to see you, sir, with the New York Stock Exchange display this morning. Speak to the optics here of this incoming president being there for the markets.
Yeah, I think we hadn't seen Trump in public for quite a while. Perhaps this is the most we've seen of him since the election, unless I'm forgetting something. But it was a moment for him because, on the one hand, he could go to the stock exchange and tout this remarkable year that we've had in the stock market, which he takes credit for not even being in office. He has made the case, this is something he attributes to Scott Bessent, his incoming Secretary of the Treasury, this idea that this stock market exuberance we've seen this year is entirely due to the fact that people predicted that Trump would win the election. We've crunched the numbers on that, and there's not a whole lot of statistical evidence that that's the case if you look at the poll numbers and how they're correlated to what the market's done. But it has been an extraordinary year, and he wants to sort of tout that. But also he was in New York because he's the Time Man of the Year, and that's something, that cover is something that he's always coveted. He's gotten it twice now, when he was elected the first time and now the second time. So it was a good moment for him to come out and bask a little bit in the transition.
Well, and talk more about things that we imagine a Wall Street audience is pretty receptive to, like, say, lower corporate taxes. He talked about that 15% rate once again, but we're reporting now here at Bloomberg that his team is considering a lift to the SALT cap, which many gathered there at the NYSE also care about, but only to $20,000. And I wonder how that's going to go over.
Yeah, I mean, obviously there are people in the higher tax jurisdictions in this country, and the New York metropolitan area is one of them. We should say that the Washington, D.C. area is also one of them, where people pay a higher proportion of their incomes in property and state income taxes. They had been able to write off on their federal taxes. Trump's Tax Cuts and Jobs Act of 2017 took away that deduction, or at least capped it at $10,000, made it really unfeasible for most people to claim it. Most people then took the standard deduction. This was a thorn in Democrats' side because who lives in New York and Washington? Mostly Democrats. But when Trump was campaigning, he went to Long Island, where there's maybe a little bit more of a reddish tint than the city, and this is an issue there as well. He promised to do something on it. We'll see how this all comes into the mix, because he also promised no tax on tips, no taxes on Social Security benefits, no taxes on overtime. There's a lot that he wants to do in addition to extending the tax cuts of 2017.
That's for sure. Stephen Moore, talking to Bloomberg about this idea, by the way, said they're opposed to an unlimited deduction, which, as Kayleigh mentions, is kind of the news here, because that would amount to, quote, the biggest tax cut for millionaires and billionaires ever, unquote. So did they just find the number that they think could pass?
There is one sort of policy disagreement with this from the beginning, is that unlike other deductions, it's not doubled when you are married filing jointly. There is a marriage penalty to this SALT tax cap that's stuck in a lot of people's craws. So effectively doubling it to $20,000 kind of lets you, perhaps that's the mechanism to do it, or maybe they just double it. But that was one, I think, legitimate policy question around the whole SALT tax cap.
But unlimited wouldn't have been palatable to a lot of states.
I mean, look, when you talk to people at the higher end, now, you know, the fact is that a lot of people on the higher end structure their income in such a way they don't pay a whole lot of taxes anyway. And one thing that did benefit them was the SALT tax cap, but they had other ways of reducing their income as well. We do get some data on how it's structured. Yeah, absolutely. People at the top of the top decile of incomes, not surprisingly, got the biggest benefit from it.
All right, Gregory Cordy, Bloomberg White House and politics reporter. Thank you, as always, for joining us as we consider something so important to our audience here on Bloomberg TV and radio.
Most read story on the terminal.
That SALT cap. Pretty much everything related to SALT, I feel like.
Always.
Rockets to the top of most read on the terminal.
Gregory Cordy, SALT correspondent.
Yep.
It's the best job in the room.
Yeah. Function of the day. Read go on the terminal. You see what people are reading, and we certainly know our political panel is paying attention to these stories too. Joining us today, Rick Davis, Bloomberg politics contributor, Stone Court Capital partner, and Republican strategist, alongside Democratic strategist Brad Howard, who is founder at Corcoran Street Group. Thank you both for being here. Brad, I would love to have you weigh in on this SALT question, because as Gregory was just telling us, this is actually something that a lot of Democrats in blue states would like to see go higher. Is this Donald Trump's way of making sure he has the requisite votes to get whatever other tax cuts he wants through?
Yeah, and I was on, my boss was a Ways and Means Committee member, and we were part of the negotiations on a lot of the, what we did in the Inflation Reduction Act. And there was a big push for SALT then, if you recall. The problem with SALT is that it's incredibly expensive once you repeal it. And I think when the Republicans did it in 2017, they thought they were doing a dig at high tax states like New York and California and trying to send them to states like Texas and Florida. So as a Florida member, we supported the reinstatement of the tax, or getting rid of the cap there, or supported that effort anyway. Like, we're not what I'm saying is that when you're from a low tax state, this doesn't really impact you, but the high tax states. So you talk about, there's Orange County Republicans that lost elections over this issue. So it's a very real thing. And you've got this interesting bedfellows of Democrats and Republicans in New Jersey and New York and California that are pushing this. And keep in mind, again, 1 to 4 seat majority that Johnson's got to do. You're not going to get a single Democratic vote on reconciliation. None, because it's a purely partisan process. So I don't know how they put this together and compromise on this and keep it within a reasonable price tag.
Rick, you know the importance of this issue as someone who spends as much time as you do in the Washington, D.C. and New York City areas. What lines, however, will the Trump team find when it comes to all of these tax proposals? We can talk about SALT all day long, but as Gregory Cordy reminded us, it was no tax on tips, on overtime, on so many other issues that when it comes time to sit down and talk about extending the 2017 tax cuts, it could get to be a more complicated conversation, no?
Yeah, because then you're talking about the deficit. And the reality is that Donald Trump campaigned as much on trying to rein in government spending as he did on these tax cut giveaways. Now, maybe not. Maybe he said more about tax cut giveaways than anything else combined. But the reality is all this costs us an enormous amount, as Brad points out. This is massive budget impact. I mean, this is how he paid for a large portion of the 2017 tax cuts, was by putting a cap on SALT and reaping the benefits to the Treasury. So how you replace that, especially if you are adding additional tax cuts beyond the core 2017 tax cuts, and we've heard nothing really from the team around Trump about maybe excluding and letting fall by the wayside some of the 2017 tax cuts to try and maybe upgrade the policy to be more relevant to tax reform than just tax cuts. And so it's a real problem for them. They can't look like they've come into office and spent hundreds of billions of new dollars on defense, hundreds of billions of new dollars on the border, tax cuts everywhere, and they wound up spending more into the deficit than Joe Biden did in his 4 years. And that would be a real problem for MAGA and the Republicans.
But that's the point of the Doge, right? Rick, get Elon Musk and Vivek in there to recommend a lot of spending cuts that could help offset this.
Well,
yeah, but if you're adding hundreds of billions of dollars to the pile, it's not just cutting this, but making up for it in addition to the cuts that you're already planning on. Look, I mean, in the budget today is the expiration of the Trump tax cuts 2017 in 2025. So, it's a huge windfall right now for the federal government. If you look at how you plan for the next 10 years, the more they take out of that planning for the next 10 years, the bigger that deficit's going to get. And of course, we haven't proven yet whether or not the Doge will work and you can actually go find trillions of dollars in cuts.
Fair enough.
Talk to us about the Doge, Brad Howard. You spent enough time in the House to see a couple of blue ribbon panels go by. What makes us think any of this will actually end up in policy?
Yeah, I think when you look at, so it's not a real department, it's called Department of Government Efficiency, but it's not. And you would have to create it by statute, of which Democrats could filibuster. So I don't see it coming to fruition as an agency. It may just stay this quasi kind of working group. There is a subcommittee under oversight that's going to come to fruition on the House side, but they don't really have much jurisdiction over able to introduce bills in this space, because it's strictly kind of an appropriations thing. So you're going to see appropriators kind of balk their heads at this effort, but you've got a pretty powerful duo in Vivek Ramaswamy and Elon Musk, and with Elon Musk threatening to fund primary challenges against Republicans now who don't fall in line, this could have some real weight. We'll see. The problem is that Democrats are very concerned that the Republicans are going to drive up deficits so high and the national debt so high that they're then going to demand or force spending cuts. And so essentially what you're doing is cutting taxes for the wealthy and multinational corporations, and you're already seeing Republicans talk about cutting Social Security benefits. They're going to cut food stamps. They're going to cut all infrastructure dollars. They're going to cut all this investment in green energy. So we really start to see massive deficits and massive cuts, and Americans are just left high and dry. And I think that's the concern when you have billionaires running the presidency.
I want to ask you both about something else. As we mentioned, the reason that Donald Trump was at the New York Stock Exchange today talking about these ideas around taxes was because he was selected as Time's Person of the Year and sat down with an interview, with Time for an interview because of that. And in part, they talked about the war in Ukraine. And Trump said, quote, "I want to reach an agreement. And the only way you're going to reach an agreement is not to abandon," when he was asked directly if he would abandon Ukraine. Rick, what does that signal to you?
Yeah, look, I mean, he's a negotiator, and he knows that Biden's in the process of chunking as much cash and weapons into Ukraine as he can get done between now and January 20th. And that's tens of billions of dollars on top of everything else we've already spent, to get the number closer to 100 billion. And Donald Trump sees that as leverage. And the point about his leverage, though, that shouldn't be mistaken, is it's only leverage if you agree to suspend those payments or those weapons shipments if there is peace, right? In other words, it's great to say, hey, I've got, $50 billion in the pipeline that I can cut off if you make peace with me. The problem with that is it's cutting off that economic aid too. And so, I think it's a positive in the sense that we've always thought that this would be the approach that Donald Trump would make, is that we've got all this work and effort and weapons and money going toward helping Ukraine beat back the invasion of Russia. And that's a great negotiating position until at which point in time you give it away. And then the question is, what guarantees did you get that Russia isn't going to play bad actor in the region again?
Brad Howard, we're just about out of time, so I'm going to set you up here. It's only a minute left. We're going to be talking later this hour with New Hampshire Governor Chris Sununu, who is calling for a balanced budget amendment. He says it's time to reconsider the idea. As somebody who has spent enough time on Capitol Hill to know better, does it stand a chance?
No, and here it's mainly the public opinion is there for it. My boss was introduced a balanced budget amendment when she was in Congress nearly every term and fought hard for it. The problem is a constitutional amendment requires 2/3 vote in the House and Senate, and then ratification among the states. The president actually has no role here other than to champion or oppose it. But when you look at the question is, there's several balanced budget amendments out there. The real question is, do you protect Social Security and Medicare in those amendments, or do you ban, for instance, Republican BBAs, which are balanced budget amendments? They oppose tax increases, which you're going to need to balance the budget. Democrats oppose cuts to programs like earned benefits, like Social Security and Medicare. So there's never an agreement, and it's an impossible task.
No easy answer. Brad Howard and Rick Davis, great panel. Thank you for the great conversation. We'll be talking a little bit later on this hour with Governor Chris Sununu about this very issue. Stay with us on the fastest show in politics on Bloomberg.
11:41 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all moving lower. PPI Thursday with the S&P down 8 now at 6,075. A drop there of 0.1%. Traders digesting this morning's economic data, including the latest claims numbers. We've got the Dow down 80 now, down 0.2%. NASDAQ lower by 29, holding above 20,000. Right now we've got NASDAQ down 0.1%. The NASDAQ Composite Index at 20,006. 10-year 4.31%. The 2-year 4.16%. Gold down $34 the ounce, down 1.3%. 26.83 on the precious metal. West Texas Intermediate crude, we'll call that unchanged on the day, 70.31 a barrel. Bitcoin now little change, down less than 0.1%. 101,555 on Bitcoin. Apple's ambitious plan to create in-house components for its devices will include switching to a homegrown chip for Bluetooth and Wi-Fi connections beginning next year, a move that will replace some parts currently provided by Broadcom. Now, Broadcom does report earnings today after the close of trading. The stock right now down 1.7%. Apple up by 0.8%. And as we've been reporting right here on Balance of Power, President-elect Donald Trump's economic advisors are considering doubling the state and local tax deduction, a popular but expensive tax break that could deliver big savings to many residents of New York, New Jersey, and Connecticut. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at the trading on this Thursday. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, which was absolutely rocked a week ago Sunday by the news that President Biden was pardoning his son, Hunter, despite, of course, insistence for an extended period of time that he would not do so. And it opened up a question as to what more pardons could be coming from this president before he leaves the Oval Office. We've, of course, heard rumblings about the notion that he could, for example, pardon the likes of former Congresswoman Liz Cheney or former Congressman Adam Kinzinger. But those aren't the pardons we got today, though we did get a lot of them, 39 to be exact, and nearly 1,500 sentences commuted by the president, Joe.
It's a number that jumps off the page, and Donald Trump, I should say Joe Biden, pardon me, made clear that he's not done. The quote from the President of the United States, "I will take more steps in the weeks ahead," unquote. We do have questions about what this means for the rest, of course, of the Biden administration and the incoming Trump administration. And Kaylee and I have really been taken since that Hunter Biden pardon by the work of Kim Whaley with some of the best analysis. She literally wrote the book on this. Law professor at the University of Baltimore School of Law, author of Pardon Power, How the Pardon System Works and Why. Kim, it's great to see you. Welcome to Bloomberg TV and radio. I don't know if we're done yet. It's sounding like we're not, but these 15, roughly 100 people released from prison, placed on home confinement during COVID, was this an appropriate use of the pardon power?
It looks like this was to allow these folks to not be reverted back to prison in this moment. So the idea behind the pardon power is primarily mercy, that the president has tremendous amount of discretion to assess what the conviction was, what the sentence was, and whether in fairness it makes sense to lift some conditions of that criminal conviction. So this does not, I think fall into a troubling pardon, although it's unusual for a president to do it in these numbers. Of course, Joe Biden's done it once before with nonviolent, low-level marijuana convictions as well.
Well, so let's talk about a pardon then that many did find troubling, which was the pardon of his son, Hunter, not just because of the fact that he said he wasn't going to go ahead with that, but also because of the unique nature of that pardon. He wasn't just pardoning him for the crimes he was convicted of, but essentially giving him a years-long period of time for which anything he did, he could not be prosecuted for. He was pardoned for, Kim. And I wonder what precedent has now been set as we consider whether or not Joe Biden might look to issue a similar pardon to the one he gave his son.
Well, it was actually, I think, longer. It might have been 10 years. It's not unique, however, in that there have been presidents in the past that have issued general pardons without anything specific. For example, Jimmy Carter issued pardons for people who dodged the draft. The pardon is actually quite vague. It doesn't identify any people in particular. And something more tailored to an individual would be, of course, Gerald Ford's pardon of Richard Nixon, which was not just for the crimes that were ready to go in an indictment against Nixon that wasn't actually filed against him, but it was ready to go. But any crimes, additional crimes that he could have been charged with within that particular time period around Watergate. I believe the Biden pardon, the Hunter Biden, what you're identifying as unusual, was likely in anticipation of the incoming president, Donald Trump's promise to use the Department of Justice as an arm of retribution and to go after folks that he believes just should be prosecuted for having taken action that's inconsistent with Donald Trump's interests. Now, that's not Hunter Biden, but Hunter Biden, by virtue of being Hunter Biden, has definitely been had a target on his back politically in ways that other folks that engaged in the kind of behavior that gave rise to his plea deal as well as his conviction for lying on a gun application in Delaware for about his drug addiction, and then in California some tax problems that he later paid back with interest. These are not big, high-level crimes of violence, but I think the concern across the board is what's the Justice Department going to look like under a second Trump administration?
Yeah. Well, just the idea of these preemptive pardons, if we can call them that, has been getting a lot of talk around Washington. Some folks are raising their hands. Benny Thompson was asked about it, the former chair of the January 6th committee in the House, concerned about being targeted. We've heard Liz Cheney's name bandied about, Adam Kinzinger. What would that mean for the precedent in this administration if Joe Biden went there?
So those people actually, to the extent to which they were taking actions in connection with the speech and debate clause, there's arguably some immunity they already would have. I think the bigger concern really is the lower level folks that maybe participated as witnesses. You know, these documents, some of it is probably not even public, that Donald Trump would then have access to, that kind of retribution. But absolutely, this would be a precedent-setting action. But my view is that it would be in response to a precedent-setting plan for the Department of Justice. You know, arguably under Hoover, there was J. Edgar Hoover, there was the Justice Department used to spy on political enemies, famously Martin Luther King, for example. That was, not a proud part of American history. What Donald Trump and what looks like his cabinet picks seem to promise is widespread, potentially vindictive prosecutions. And for that, this would be setting a brand new precedent with a lot of problematic implications around across the board.
Well, so as we consider what future preemptive pardons might be given to, say, members of the January 6th committee, there's also the question of pardons for people who have been convicted of crimes on January 6th. Just today, in an interview published with Time, the president-elect, who of course is Time's Person of the Year, was asked if he would pardon all January 6 defendants. He said yes. When asked, "You're going to do all of them?" He said, "I'm going to do case by case, and if they were nonviolent, I think they've been greatly punished." And the answer is, I will be doing that. I'm going to look to see if there were some that were really out of control. Keeping in mind here, Kim, that there are already hundreds of people who have been convicted or pleaded guilty to crimes related to their activities on January 6th, with the majority of those receiving some time behind bars. But given there have been different crimes and different sentences here, can he just do this in a blanket way, or will it have to be case by case, single names?
He could do it in a blanket way, or it could be case by case. The pardon power in the Constitution is extremely broad. There's very few cases that have made it to the Supreme Court to narrow it or put any limitations on it. And of course, in the Trump versus U.S. immunity case, where the court created criminal immunity for presidents, it went out of its way to get out a black Sharpie and underscore that the pardon power is extremely broad as far as the president's authority. To answer your question on January 6th, that would be about, lawyers crafting the language of a more generic pardon to be sure that it captures the folks that Donald Trump would want to be included in that. I think there are over 1,800 prosecutions at this point. If he's talking about violent offenses, that kind of language, sort of accepting maybe people from the pardon if they engaged in violence, maybe that would be in there, or he could give a list. I think it's on the Justice Department's website, fairly straightforward and easy. But that kind of pardon, I think, is of a concern in a way that, say, the Hunter Biden pardon was not, because of the nature of January 6th and the violence that was part of that. We have to ask ourselves with pardons, going back to George Washington, is a pardon being issued going to make the country less safe, either because that person will go on to commit crimes or because the pardon is being done in a self-interested way, in a corrupt way, in a way to allow the president to commit crimes. Those are different categories, I think, of pardons than pardons under the traditional way for mercy that go back before the King of England, back to the Bible. Jesus Christ was denied a pardon, and that gave birth to the Christian religion. The whole idea is the criminal justice system, people fall through the cracks, and there needs to be a fix. A survey done this summer, both Republicans and Democrats, a majority of both did not want to see pardons for the January 6th people that participated in that because of the concern of violence around elections and an emboldening of the energy around what happened on that day.
Kim, you're writing in an op-ed in The Hill today, say goodbye to federal protections and hello to Trump's advancing loyalist army. You're writing about Schedule F, which we've heard a lot about, and of course, some of the names that could be coming into government here and the many that could be leaving as Donald Trump promises to drain the swamp. What would it mean for the Justice Department?
For the Schedule F for the Justice Department, that's a great question. There are scheduled officials within the Justice Department, and when I say that and explain in the op-ed, what does that mean? Basically, there was what was known as the spoils system that kind of took hold of the federal government early in the late 19th, early 20th centuries, where presidents just put their cronies and loyalists in across the board, populating the American federal government. And Congress responded to that and said, no, we don't want that. That doesn't create an effective workforce. There's a lot of incompetence, and loyalists don't breed a democratic spirit. So they passed a law and said, we want competent, neutral civil servants. And that's pretty much been the standard since then. But there's exceptions. Those are called schedules. That's Schedule A through E. And then F is what Donald Trump promises to add, which would be converting some of these folks into basically people that aren't protected by the other protections for the civil service workers and could be fired at will. But you raise a great question, which is, how will the Justice Department operate under Donald Trump #2? Will they be loyalists or will they uphold the rule of law?
I guess we all have to wait to find out. Kim, thank you so much for joining. Kim Whaley is author of Pardon Power, How the Pardon System Works and Why, also law professor at the University of Baltimore School of Law here on Balance of Power. Some quick breaking news to mention. Emmanuel Macron's office says a new French premier will be announced Friday morning, so we'll learn the replacement of Michel Barnier. We'll have more here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower across the board as traders digest a slew of data ahead of next week's Federal Reserve decision. Right now, the S&P is down 0.2%. The S&P at 6070, a drop right now of just about 12 points. We've got the Dow down 141 points, down 0.3%, and the Nasdaq Composite Index is lower by 40. That is a drop of 0.2%. The Russell 2000 Index of small cap shares also lower, down 0.8%. 10-year 4.31%, the 2-year 4.17%. Gold down $34 the ounce, down 1.2%, 26.84. West Texas Intermediate crude down 0.2%, 70.17 a barrel, and Bitcoin now down 0.5%, $101,100 on Bitcoin. French President Emmanuel Macron's office says a new premier will be announced tomorrow morning. This follows the resignation of ousted Prime Minister Michel Barnier. First day of trading for Service Titan, TTAN on the ticker. That stock's surging now. We've got Service Titan up by 42.5%. After earnings, Adobe down 13.4%. After earnings, Ciena up 16.7%. And Broadcom reports after the close of trading down now by 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Watching Wall Street for us every day here on the fastest show in politics. Thank you for being with us on Bloomberg TV and radio. Balance of Power, I'm Joe Matthew alongside Kaylee Lyons in Washington, where there's so much talk about the Doge. Kaylee, we all remember when Elon Musk and Vivek Ramaswamy came to town. This has been a massive conversation, and there are a lot of questions about, well, how could this become policy? We've asked a lot of those questions, connecting the dots. Is it possible to cut $2 trillion in government spending, as Elon Musk had said at one point? The governor of New Hampshire has the answer. He says the mission of the Doge is achievable.
Yeah, writing a new opinion piece in The Hill today. For models of efficiency, Musk and Doge should ignore D.C. and look to the states. And I'm pleased to say joining us live here in our Washington, D.C. studio is the New Hampshire governor. Republican Chris Sununu is here with us on Bloomberg TV and radio. Governor, nice to see you again.
Nothing like a governor coming to Washington.
Yeah, exactly.
Usually I bring
Your
trouble.
favorite town.
Well, and you don't necessarily speak kindly of Washington in this piece in terms of its fiscal functioning. My question, I guess, is if we're looking to the states, we're dealing with smaller numbers, right? State budgets are measured in billions, whereas the U.S. federal budget is measured in trillions, and they want to cut $2 trillion of that. Is that really realistic?
It's realistic. Probably not tomorrow. And you know, structurally, they're going to have to get into the big things that nobody wants to talk about, Social Security and Medicare. Again, that is not likely going to happen tomorrow, unfortunately, but it has to be dealt with. Kind of the crux of this piece is, as a lot of folks and you guys have discussed, in about 8 years, $1 trillion in interest payments goes to $1.8 trillion, right? Just in interest payments. Social Security and Medicare go insolvent all at about the same time. So you're going to have kind of this perfect storm of financial crises. If Washington does what they typically do and wait to the last minute, that's not a solution. That's just reacting to the crisis. Doge is very interesting, and this election is very interesting in that it has created a very unique situation where you have an outsider in Elon, an engineer. I'm obviously very partial to engineers, as I am one myself. So he's not beholden to the establishment. He's all about fixing big challenges and fixing and finding efficiencies in big systems. So he's ideal to do it. The key is, like anything, as an engineer, you have to know how the system works before you can really figure out how to tinker with it. Well, there's going to be some low-hanging fruit with potential executive orders, but you're going to have to use political capital, and he actually does. He's an outsider of Washington that brings political capital with him. When Elon Musk walks in your office and you're a congressman, believe me, you're going to listen, not just do whatever he says, but you've got their attention. So if he uses that capital in the right way, and the best part about what they've done, which gives me a lot of optimism, is they put a time window on it, right? They got 2 years till July of 26 to get this stuff done, get it all moving in the right direction. So, and because there won't be some long-lasting additional piece of government. But as I warned in the piece, a lot of presidents have failed at this attempt. This is a highlight, pivotal moment for Trump, for his administration. They can't blow it. And the last big piece here is Washington has to look to the states, because states, especially Republican states, but really all states, they make tough decisions. They've found efficiencies. You know, one example I give is in Iowa, they went from 37 agencies to 16. Did Kim Reynolds get penalized for that? No, she got championed. The voters thanked her for doing it. So what was traditionally seen as making tough decisions and getting politically penalized in the past, if you don't make those tough decisions now to Congress, you're going to get penalized. And that's what the Speaker has to understand. It's in his political interest to do the hard work that no one's been able to do before.
We can nibble around the edges here for a while, but to your point, long term, a balanced budget amendment should be reconsidered. There are a couple of them that have been proposed. They tend to not get as far as you want them to here. But the question is, can you do that and make it work without getting to, you just talked about it, Social Security and Medicare. That's why this never goes any further.
So again, those things are going to become insolvent in very, very short term. So at some point, they're going to need to
trust this administration to deal with it?
I trust this administration more than the next one, and I don't even know who the next one is. And that, look, Trump was elected not just on policy, he was elected to be a disruptor, to break that establishment mold as an outsider, and he's brought outsiders with him to do it. And he's got a lot of a very significant political mandate and more experience than he did even in the first term. So the winds are in the sails to get it done. My argument on a balanced budget amendment, it's so critical. By the way, 49 states have balanced budget amendments. We all live in those means. I could tell you, there's no state that's a bigger financial mess than California, right? But even they have a balanced budget amendment. I mean, they end up taxing their citizens and not handling it very well, but they are managed better on a fiscal basis than the federal government. And that should be a warning shot across the Republicans' bow.
I want to return to something you were saying about Elon Musk specifically, that he might be uniquely suited to this role because of his nature of being a political outsider, but still having political capital. He also has just normal capital. His net worth went to $400 billion yesterday. Is there not some conflict of interest here you are worried about, and him specifically, who has companies that contract with the U.S. government having a say in this?
So surprisingly, no, and I'll tell you why. Because he's so rich. I mean, 400 billion, a couple billion more here or there. This isn't a guy that lives extravagantly.
But he still cares about the fate of, say, SpaceX.
Of course he does. But that's not Doge, right? So you can talk about grant programs and all of this sort of thing, but this place needs a complete structural overhaul. And that's what he's actually really, really good at, taking on giant challenges. People didn't think there was going to be a privatization of going to space. He said, no, we can do it. And he figured it out. So it's not all on him, but he provides the political capital in a way, because he's so wealthy, it's not, he doesn't have a direct financial interest in this per se that is appreciable to him at all. Everybody in D.C. does. Everybody in D.C. wants to keep their job. They're all elected officials. They all have a bigger conflict of interest to do nothing than to actually listen to someone like Elon and the recommendations that come out of this group. You got to find efficiencies everywhere. I think what they're doing with defense is going to be great. Having an audit, I think that's very important. You don't have to lose a single gun, bullet, or soldier just by becoming more efficient, creating more competition within what is kind of a cabal right now of contractors and contracts within the Department of Defense. I mean, you can save $100 billion there. I didn't do the details, but there's about 16 executive orders alone that I counted. Over 10 years, $1.5 trillion, just on Biden's executive orders, by the way. So there's a lot of low-hanging fruit there, but structurally, they're going to have to take up something more substantive at some point. Doesn't mean it all happens tomorrow. And getting to a balanced budget amendment agreement basically says this: we're going to go forward in such a way that we eventually get to a balanced budget. We bring things back into the fold the right way. We make that compact with America that says your family has to live by a balanced budget and so don't we. That in itself will reinstore so much trust that Washington doesn't have. They have it with governors and state legislators and mayors, but they don't have it with Washington. So it's in their political interest to do the hard work. Now, I think it's going to take time, of course, but you know, when I hear, I get a little concerned. I hear Republicans say, well, we're going to cut that program and that program. Well, that sounds fine. You want to cut them? Cut them. I don't care. But that's nipping on the edges. That's political speak. You need real structural, financial structural reform here. And now's the time to do it.
Well, in the meantime, this administration wants to advance the Trump tax cuts, make them permanent, likely add to the deficit in the process. Where do you draw the line? How much is palatable until the cuts start to kick in?
So I think the cuts they have now and continuing them is very, very important, because you need a growth model here too. And what, as you guys I think have talked about, there's so much cash being held by so many of these large corporations, right? What is $450 billion just being held by Berkshire Hathaway or whatever it is, right? And then you multiply that with all these other large, because these companies were holding on to it because all the inflationary risk that comes with the regulation of the change or not change if Kamala were to win, of administrations, right? There was so much regulatory inflation there. They were holding their cash because they didn't know where things were going to go. Hopefully with the tax cuts in this administration, private equity starts moving a little more, deal flow starts moving a little more, cash starts being released, and really promotes that growth. So while we're making some tough cuts, while we're making the tough decisions, block granting things back to the states. I mean, think about it. Department of Education is the one they talk about all the time. You can get rid of 90% of that bureaucracy, save tons of money, and still block grant the same money back to states and allow states have the efficiency of reinvesting those funds how they see fit. What's good for Massachusetts is different than Minnesota or Nebraska or New Hampshire. So let them decide. I can tell you as a governor, when we look at all these programs and all this money that comes from DC, there are so many strings attached. We have to say no to some of this money sometimes because it's so not in New Hampshire's interest to take the money because of all the additional attachments to it. You block grant things back, believe in the states. As you've probably heard me say before, them founding fathers, they were wicked smart, as we say in New Hampshire. They really were. Federalism works. States have already done a lot of what DOGE is looking to achieve on a smaller level, to be sure. But a lot of it is just copy and paste. We've done the hard work. It's not some newfound crazy idea. It's actually Washington is the last one at the table to try to figure this out.
Well, you obviously are still speaking with us as an incumbent governor, but your term is almost up.
Tick-tock, 29 days is the clock.
The clock is ticking. So, of course, we're wondering what the future holds for you. And I do wonder, given that it does seem the American people delivered this mandate of more efficiency in government, more disruptions, not just with the election of Donald Trump, but with a Republican majority in both the House and the Senate. With that kind of Republican leadership mandate, does that make you rethink how much you want to be involved in politics in the next 4 years or
no, not in the next 4 years. No, look, maybe long term I would come back into things.
How long is long term?
I'm nothing I'm thinking about, I can tell you. I do want to stay involved, and that's why I'm going to keep writing op-eds and maybe do some media and all that sort of thing. I left a resume at the front desk for y'all, but you know, I'm economically driven. I'm a business guy. I'm an engineer. That's why I'm so passionate on the DOGE thing. And again, I go back to governors, not just myself, but governors all across the spectrum have really done a lot of this hard work. I think that needs to be championed. We talk too much on the national level of just what happens in this bubble in D.C., but frankly, the bubble of D.C., both media and otherwise, never talks to the real people out in the rest of the country. That's why when around mid-September, it was clear to a lot of us that Trump was going to win handily. And it was like, well, how can you say that? How can you say that? The people that were questioning that were in New York and Washington. The rest of America was going, you just talk to your neighbors. You could see it coming. You could see where this was all going. So, again, I like to keep that political itch scratch. I'm more of an economics guy and a private equity guy and a markets guy. So I'll stay involved somehow. And I'm obviously, I think the first of the nation primary in New Hampshire is going to be really big with an open race in just 4 years.
And maybe both parties. How about that?
Yeah, right. Undoubtedly both parties.
I think you have a new cause, though. If you read to the bottom of this op-ed about the DOGE, you write, by the way, eliminating daylight savings time, big win.
Well, let's not forget that.
I could see you and Ed Markey joining together on this issue. You're going to be kidding me, though. It's dark till noon in New Hampshire. I know it. I'm from New England. You're ready to do that on the regular?
Does anybody want to keep daylight savings time? Have we found that guy yet?
Well,
I don't know.
I think so. Yeah. Don't you want to see on the kids see so they can get on the school bus in the morning?
We can handle all that. We can handle all that. The going back and forth is it's antiquated. It was created for farmers. It's just completely antiquated. So
the farmers of New Hampshire are talking.
And I'm listening. Yeah. I'm for one. I'm listening. As is my successor, Kelly Ayotte. She's listening too.
What's your advice for Kelly Ayotte? The first challenge she's going to face when she comes in. We've only got about a minute left.
The advice is do right by New Hampshire first and foremost. Call the balls and strikes like you see them. If it's a Trump thing and he does right, give him credit. If Trump and the administration, Republicans don't do right, call him out on it. Right? She has a platform as a governor, as someone who understands how these things work and is going to undoubtedly be working hard to keep that live free or die spirit strong. To just call the balls and strikes. Don't overthink. I say this to everyone. Don't overthink the politics. Just do right by your state, right by your constituents, and it'll all work out in the end. The politics takes care of itself when you get stuff done.
29 days. You're going to be on an island? What's the first
no, I'm getting a job. I'm not a wealthy man.
Fair enough.
As a civil engineer and a guy who ran a ski resort, neither of those actually paid very well. So we're looking for a real job.
Stay in touch with us. We'd like to keep this conversation going.
Absolutely.
In the new year.
Thank you guys so much.
It's great to have you, of course. Governor, for now, of New Hampshire, Chris Sununu, the Republican from the Granite State. Great conversation you'll only hear right here on Bloomberg TV and radio. Kaylee, we'll do this again at 5 p.m. Eastern Time. A lot more to cover on the late edition of Balance of Power.
Indeed, we'll have a conversation with Democratic Democratic Congressman Adam Smith, who voted no on the National Defense Authorization Bill yesterday. We'll get his why and also have some important foreign policy conversations after Trump's comments to Time about the ongoing war in Ukraine. So much still ahead at 5 p.m.
That's right. Stay with us. Bloomberg Business Week to follow. We'll meet you back here in a few hours on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Everybody take an exhale, because I feel like the news has been coming at us a little fast and furiously.
Just chill.
Can we all
Yeah.
do it together?
Hey, if you think this is fast and furious, just wait till we hit 2025. Yeah.
Not yet, not yet.
Not yet.
Very good afternoon, everybody. Live on radio, TV, YouTube, Bloomberg Originals. Carol Masser, Tim Stenevec, live here on Bloomberg Business Week. The setup at this hour, that tech-led rally one day, yesterday, impressive, taking a break.
Yeah, this is U.S. Treasury shot up reacting to the latest drop of economic data ahead of next week's Fed meeting. We're going to have more on the markets in just a minute.
We are indeed. We're going to get to also the latest read on inflation, jobs, also those weekly jobless claims in the U.S. Stagflation, I think it came up on the Markets Live blog. I'm like, is it a concern? We're going to ask our Mike McKee.
On that, those U.S. data points can and do move global markets, and they're actually under threat as Donald Trump heads back to Washington. It's today's big take. Molly Smith is in here. She's going to talk to us all about it in just a few minutes.
Great read. Also being impacted by a second Trump term, the EV world, especially when it comes to tax credits. We're going to talk about that. We're going to talk about GM's exit from the robo-taxi business, NVIDIA ramping up in China. That's AI-related and car-related. There's a lot going on.
Also, Adobe shares, they're tanking today after giving a tepid outlook at stoked AI disruption fears. We got Adobe's president of digital experience business on to talk about those AI-related concerns.
And when you're really rich, you can still hit a rich benchmark.
Is that what it is?
Yes, indeed.
Okay, sounds good.
All right, we're going to get to that in just a moment. Over the next 60 minutes. First up, though, let's get to the markets and your top business stories. Here's Charlie Pellet.
Hi, thank you very much indeed. Lots going on. Tim mentioned Adobe. Let's begin there. Trading lower now after earnings, down 13.5%. Sienna after earnings surging 16.6%. But the Dow, the S&P, NASDAQ 100 index, Russell 2000, they're all in the red right now, right to the numbers. S&P down 18, 6,065, down by about 0.3%. The Dow down 175, down 0.4%. NASDAQ lower by 65, a drop there of 0.3%. Russell 2000 index of small cap shares pulling back today by 0.9%. 10-year 4.32%, with the 2-year currently yielding 4.18%. Gold down $35 the ounce, down 1.2%. West Texas Intermediate crude 70.19 a barrel, down 0.1%, and a retreat for Bitcoin, now down 0.8%, 100,800 on Bitcoin. Meta Platforms has donated $1 million to President-elect Donald Trump's inaugural fund, all part of an effort to build a positive relationship with the administration after a tense history. Today we got Meta Platform shares, they're lower by 0.4%. And first day out for the Service Titan IPO, up now by 43%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we said, a lot going on, and we wanted to get to, it's so busy that I brought my stapler into the studio because I'm still like...
Who brings a stapler into a TV and radio studio?
Because
the answer for that is Carol Masser.
I know. I kind of love my stapler. There's so much going on and just a bunch of stories I brought in. Anyway, one of the stories I brought in, I mean, we were all reading in this morning, and it had to do with U.S. wholesale inflation unexpectedly accelerating in the month of November. Surge in egg prices. If you bought eggs in the month of November, you saw how expensive. Other categories suggesting, though, a muted increase in the Fed's preferred pricing gauge. We also get a read on the U.S. labor market. Filings for unemployment insurance showing an uptick in applications in the week after Thanksgiving. And I have to say, like, I was watching, I think, the Markets Live blog, some headlines, and somebody threw in the word stagflation. So we got a lot to talk about.
Okay, these two data points were among the last key indicators to be published before the Fed's policy meeting next week. Bloomberg News International Economics and Policy correspondent Michael McKee. He's going to be at the Fed for next week's decision. He's here in the Bloomberg Business Week studio before that. Mike, PPI data, what do we need to know?
It came in just fine for the Fed. The egg prices, obviously, an artifact of the bird flu that is going around, and it is a major problem because it keeps going around, and we have this every couple of months where there's a massive bird kill and the egg prices go up. And you heard Donald Trump a couple months ago saying, weeks ago, I was elected to bring down egg prices. Well, good luck with that, sir. We'll put you in charge of the chicken coop. But everything, the things that you wanted to see go down because they go into the PCE, which is the Fed's target, did, basically. Healthcare costs were contained. International airfares went down. So the things that would push the PCE up were lower than anticipated, and so now all the economists who are crunching these numbers are saying we're going to have a weaker than expected PCE.
I do want to go back to eggs for a second, because even though this is not the most important input, this is something that Americans look at constantly when they're shopping, because a lot of us eat eggs. And I'm wondering if it's turning into sort of like, how much is a gallon of gas type of thing to consumers, and what it does if it goes up, and what that does to inflation expectations and perceptions about how much things cost.
Well, it can do that. And of course, the news media feeds that narrative. And we're all going to feed it this time because it really was egg prices was a major change in the PPI. But egg prices, they're more expensive than they were last month by about $1 or so, but they're not anywhere near where they were when we hit the egg price crisis of over $4 or more. Yeah, the egg apocalypse. So does it register with people? I suppose if you bring it up, but it's not like gasoline. That's the one that really gets everybody upset. So I don't know if it's going to be a big deal or not, but you should get used to it because of the problems that we're having. And of course, same thing is true with bacon. If you want to have bacon and eggs together,
yes,
the meat herds for pigs and cows are low, and so beef and pork prices up.
So that's fundamental. That's not an easy fix, right? When you've got herds low.
That's not an easy fix.
Hey, so we do know that, right, PPI data goes into core PCE. So where is core PCE in terms of the 2% target for the Fed?
Well, it's running a little bit above that. I think 2.3 was the last the last number. But the question is it going to go down or not? And when I said earlier it was going to go down, the question is on a year-over-year basis or a month-over-month basis, because on a month-over-month basis, it's going to be lower. Right now, people are looking at the possibility of just 0.1% increase, but we have base effects built into these things. And the Fed has been talking about this for a long time. A lot of people who say the Fed is going to end up behind the curve and they should be stricter on inflation forget the fact that the Fed knows this, and they knew that we were going to see rising year-over-year inflation numbers going into the end of the year. So they're probably not going to worry about it all that much if it goes up a little bit. But again, it's still much closer to 2% than the CPI.
So Fed meeting cut next week?
Fed meeting cut next week?
Yeah, it's
pretty much. I mean, there are some folks on the open market committee who have said we're close to a pause, but they haven't said when, and they didn't say they would vote against it this time.
Right.
So I don't see any reason why we would expect there to be a pause in December. January makes a lot of sense because it's 9 days after the new president takes office, and we'll see. We don't know what his policies are going to be. I mean, he talks a lot of slogans, but he hasn't laid out the policies, so we have to wait and see how that affects the economy.
Don't give away your question for next week, but what are the major themes that you think people are thinking about in terms of the press conference? Last month, it was all about the election. We had just gotten the results. So that's sort of, that's water under the bridge at this point. What do you think comes up?
We'll get more of that. People are going to want to know, well, Trump has said this, that, and the other thing since then. I mean, you look at the Canada-Mexico tariff stuff. But also, people may ask about what the impact of tax cuts is, if he's going to accelerate that through reconciliation. We'll see. But everybody's going to want to look at what their forecasts are. What's their forecast for 2025, and how valid are they going to be? How soon are they going to be out of date? And what about the dot plot? How many times are you going to be cutting rates in 2025?
How do you make a forecast if you don't know what the policies implemented are going to be?
I've asked a couple of Fed people about that, and they say, we just assume current policies. I mean, you cannot put into your...
You know what happens when you assume, right?
Yes, yes. Go ahead and say it.
No. Family programming.
But they just, under the circumstances we find ourselves in now, the economy that they see now, here's what they think would happen. But obviously, they'll have to change that.
Before we go, just quickly, stagflation, are we worried about inflation continuing? No, you're not.
No, I mean, the jobs claims today, I mean, what did you do Thanksgiving? You stayed home and had a family over, right?
Yeah.
And Friday, did you come into work?
No.
So
I was here, don't worry.
The people running the jobless claims offices weren't coming into work either. So people took the week off, and then they come back and they file the next week. So this is the time of year when it's really hard to get a clean read on jobless claims.
Don't worry,
that doesn't seem to be a problem.
I was holding on the fort. Don't worry.
I'm so glad.
Yeah, don't worry.
I was eating PK.
He went and filed unemployment claim for you.
On your behalf.
He's getting checks.
Listen, don't go anywhere because we think we have a story. Unless you have to go. Do you have to go?
No, I don't have to go.
All right, just
check. I know what's coming up, and it's really good story.
I know. So we're going to keep Mike McKee around. We want to get to what is a most read story in the Bloomberg today. It's also today's Bloomberg Big Take, meaning the Bloomberg editorial team has deemed it a must read for all, and it's about U.S. economic indicators that are so closely watched by global investors. Those data points can and do move global markets. We see it by trillions of dollars at a time. And yet, those agencies, U.S. agencies that produce vital economic data, are under threat as Donald Trump returns to Washington.
With more, we got Bloomberg News economics editor Molly Smith here in our Bloomberg Business Week studio. What is the data you're specifically talking about? Why is it under threat as Donald Trump gets back to Washington?
So I first started looking into this story about 6 months ago. It feels like
I heard
years
you've been working
ago.
on this for a long time.
Yeah. So today's a big day. I feel good. So 6 months ago, the BLS said that they were going to have to cut the sample size of the current population survey. And within the jobs report, that's what we call the household survey. This is where the unemployment rate comes from, labor force participation, and tons of those statistics broken out by demographics such as age, race, gender, veteran status, disability status, literally everything under the sun. Right. And they were going to have to cut the sample size because of budget constraints. And I quickly, through a lot of reporting, realized that it's not just the BLS and it's not just this one survey where these problems are, that there are statistical agencies all over the US and really all over the world that are facing these same challenges of tight funding, and that's becoming more challenging as fewer people respond to the survey. So that's making the data costlier and more difficult to collect.
Mike, what are the implications? Come on in on this. I mean, people look to U.S. data. Maybe it's not perfect, but there is a certain amount of reliability because of the pools that we dig into and pools of information.
It is a growing concern as it's getting harder and harder for the statistical agencies to get these responses. The biggest concern has been in the JOLT survey because we've gotten down to like 24% response rate.
In the 30 area, yeah.
And remember, these are not surveys of everybody. These are the same as political polls where you take a certain number and you statistically massage it to come up with what you believe to be scientifically valid numbers. And so the lower number response rate you get, the more likely your numbers are going to be wrong. And that makes it very difficult for central bankers, and it's obviously been a huge problem in the United Kingdom, for central bankers to make policy if they don't know what the underlying data is.
That's why you see these massive revisions from month to month, and especially the payrolls revisions that we got back in August. Remember, that suggested that payrolls through the year through March that we just had were going to be revised down by over 800,000. Of course, we get the final estimate of that early next year, but that was pretty massive and also got a lot of senators' attention too as to like, why is this so enormous? And clearly some other data release protocol issues at the BLS this year that also got a lot of them really into this issue.
I'm wondering if this could be, like, there could be pushback from markets on this, Molly. The idea that if the data isn't as good, it's not as reliable, investors can't make decisions as quickly. They don't have as good of an understanding as they could. Do we see markets push back?
I mean, there's a lot of different kinds of investors, and the way that they trade is very different. So when I spoke to like PGIM fixed income, for example, like they're more taking like a longer term view of how you trade. They're not like a high frequency firm that's like has the algorithms firing right at 8:30 on Friday morning when the jobs data comes out.
Right.
So perhaps traders like that, I mean, but what else do you have to work with? That's the question, you know, that there are these alternatives that come from the private sector, but even they would concede that it's not as good as what the government data provides. And a lot of it is because this truly is a public good. You know, this is really just produced for, you know, anybody from politicians to, you know, local citizens to appreciate and to use. And you just don't have the same, you know, structure when it comes to private data if there might be other incentives at play.
This has been going on for a while, though. This is not just Donald Trump's threat.
Not at all.
The statistical agencies, I guess, have been seeing budget cuts for years.
Yeah, I mean, the BLS's budget is now down about 20% since 2010 after adjusting for inflation.
That's
a lot. Yeah. I mean, nominally, yes, maybe dollars are going up each year, but nowhere near in the amount that inflation has gone up.
You know, we've talked a lot around this table ever since Donald Trump got reelected and about Elon Musk and Vivek Ramaswamy, like kind of looking to do some cost cutting in the government. What is the cost of all this data collection? Is it really that much?
It's pennies in the scheme of what the government spends in a year. So I specifically looked at the economic agencies. So this is Bureau of Labor Statistics, Bureau of Economic Analysis, and Census Bureau. Combined in fiscal 2024, which just ended, they had a $2.2 billion budget. That's 0.03% of all federal spending. This is like a rounding error. This is clearly not where you're going to be getting anywhere near $2 trillion of savings. But as a lot of the people who I spoke to said, you could see consequences in that amount.
What did you learn about how the data is gathered and if there could be efficiencies based on like the digital age of communication that we live in?
Well, that's certainly what the BLS and census are working toward, but again, that takes money. So, so the way that the
You have to
current
invest in the systems, create the systems, right?
Exactly. They don't have the infrastructure right now to do that. So the way that the current population survey is done, right now it's really calling people on the phone. You know, you get a phone call from somebody at census usually, and
Is it do you have to have a landline for it? Could they call cell phones?
It can call a cell phone, yeah. But it's like trying to find people in this household and like, you know, figuring out like who are the adults in the house and what kind of work do they do? Were they at work last week? You know, are they looking for work? And that could be a long phone call. Who knows how many people are in a given house? And a lot of people also just don't want to pick up a phone call from a number they don't know. So what the BLS and census, who work together to produce the current population survey, have been trying to do is introduce a response mode on the internet that people can do this themselves. But again, that takes money.
Mike, I'm curious about, you know, your world, global economic world and policy world, how much people are expecting. There's what we heard from Donald Trump on the campaign trail. What we're hearing now as he starts to pick people and run things. How much do they think it's not going to be maybe as extreme as some think in terms of the eventual policies that roll out?
It goes back to that old question, do you take him seriously or you just take him literally? If you take him literally, it could be very bad. But there are a lot of reasons to think that it won't be the worst case scenario, because a lot of things that he says he's going to do, he's not going to be able to do. It's going to be very hard to deport 11 million people. Nobody thinks that he can do that. It's going to be very hard to get, as he said at the New York Stock Exchange today, another deep cut in your taxes, because you've got to, at some point, mind the deficit. And even with the Republicans who go along with him on everything, there are going to be people who are concerned about that. And every time you cut,
there's a balance sheet there somewhere.
Yeah, you make the deficit worse.
And just to be clear, I mean, for this story, we did reach out to the Trump team, did not get an answer from them, and they have not said specifically that they're going after statistical agencies. So just want to make that clear. But they've also said they don't want to cut Social Security and Medicare, veterans benefits, and if anything, want to increase defense spending. So when you look at all of those things, you kind of have to look at everything else that's left over, and that's where these agencies lie.
No, it's super important. I think about markets like China or something where we question that we don't necessarily trust all the statistics that come out and how important it has been. I know not apples to apples, but important in terms of the clarity of our data.
Well, that's why ours is regarded so well, that they're impartial to politics, and to keep it that way, again, is really important.
All right, guys, got to run. Thank you so much. Molly Smith, economics editor at Bloomberg News, her story, The Bloomberg Big Take, and of course, our Michael McKee, international economics and policy correspondent, who will be at that Fed meeting in Washington tomorrow. Coming up next, NVIDIA amping up, GM getting out. We're talking EVs, self-driving cars, AI cars. That's coming up next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story out of Boeing, specifically South Carolina, where Boeing has announced a major expansion, says it's going to invest $1 billion in infrastructure upgrades in South Carolina and hire 500 people. Right now, we got Boeing shares up by almost 1%. The Dow, the S&P, and NASDAQ are all trading lower as traders digest the latest economic data. S&P down 23 now at 6060, drop there of 0.4%. We've got the Dow down 211, down 0.5%, while the NASDAQ Composite Index down 92. That is a drop of 0.5%. 10-year at 4.32%, the 2-year 4.17%. Gold now lower by $33 the ounce to $26.85, down 1.2%. West Texas Intermediate crude oil down 0.4%, holding just at $70 a barrel. And Bitcoin now down 1.1%, just above $100,000. Bitcoin at $100,400. Apple's ambitious plan to create in-house components for its devices will include switching to a homegrown chip for Bluetooth and Wi-Fi connections next year, a move that will replace some parts currently provided by Broadcom. Broadcom will be among the names reporting after the close of trading today. We've got Broadcom down 1.4%. And President-elect Donald Trump's economic advisors are considering doubling the state and local tax deduction, a popular but expensive tax break that could deliver big savings to many residents in New York, New Jersey, and California. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week and the entire Bloomberg News team, I got to say, writes a lot about the world of EVs and autonomous driving vehicles. And so we just did want to share with you, if you never want to miss a story on the EV world by our Bloomberg Business Week team, you could become a subscriber, tap into the deep reporting and analysis that they are doing from reporters around the globe, and gain unlimited access to Business Week. So to do that, just check out Bloomberg.com/subscribe now. All right, so let's talk a little bit about EVs and AI-driven vehicles, because there is, Tim, a batch of stories on our radar.
General Motors ceasing robotaxi operations at its Cruise unit. Microsoft, which was a minority investor in Cruise, now planning to take an $800 million charge because of the news. Also, NVIDIA ramping up hiring in China to focus on AI-driven cars. And then more news today on President-elect Trump's plan to end EV tax credits, hitting home for GOP lawmakers. So let's get to it with a go-to for us, Bloomberg News auto reporter Keith Naughton, who joins us from Detroit. Keith, is the idea here when it comes to the AI-driven vehicles, the autonomous vehicles, the Waymos, and formerly the Cruises out there, is it that the tech companies are the only ones with enough cash to actually make this work?
That's a big part of it, Tim, because, you know, they do have, between Alphabet and Amazon, they have close to $90 billion in cash, each of them. That dwarfs the, I think it's around $33 billion that General Motors has. Plus, you know, their stocks have very high valuations. Tesla doesn't really have that much cash, but they have a very high valuation. So they sort of have a currency to spend. General Motors, not so much. They've lost $10 billion on Cruise already. Their losses were going to continue at about $1 billion a year, and Mary Barra just said no more.
So we've been dying to talk to you about all these stories, and we know you've been recovering. We're glad to see you doing well.
Yes, I am. Thanks. Broke my wrist.
Okay. I was going to say, I'm sorry about that, whether it was just like all the stories and news drop, because there's so much stuff. We're having a hard time keeping up. Glad, though, that you're here and you're doing well. I mean, when you see these stories and it feels like, you know, Keith, people just slowing down. We've talked with you, though. People are still buying EVs. They're looking more at hybrids. I mean, again, I think about this cycle of where we are in the EV world. Does it continue, though, net to move forward?
For sure. And, you know, EVs and autonomous vehicles are really linked, because in order to have that very high compute, you know, autonomous technology work, you need the most modern and connected car you can get. And that's not an internal combustion engine car. That's an electric vehicle. So they go hand in hand. And, you know, everyone knows that electric vehicles are the future. The question is really just how far into the future and how we get there. It's not as if there's a belief that electric vehicles won't happen. They're viewed as inevitable. It's just, when will it happen? And, there is a big push on, especially by Elon Musk and Tesla, to get robotaxis out there. Well, if you're going to get robotaxis out there, you're going to need electric vehicles as the platform that it supports the technology for self-driving.
Keith, have we talked to Keith since you've fallen in love with Waymo?
I don't know. I don't know if I did. Did we, Keith? Last month I was out in San Francisco. I got to take my first Waymo. You're seeing one on the screen there right now.
Oh, how cool!
Oh, it was so cool.
You loved it.
I'm ready to never be in a car with another human being behind the wheel again. It was just one ride, but it really struck me. The car didn't strike me. I was fine in the car, but I wonder
struck anybody else.
It didn't strike anybody else either. But I mean, it seems totally safe. My experience. Is it inevitable that we are going to be driving around in robo-taxis as the norm in the coming years?
That one seems even farther off, which is why you need an Alphabet or an Amazon or a Tesla to be bankrolling it. When Ford got out, I don't know if you remember it, a couple of years ago, Ford and VW had Argo AI, their own self-driving unit, and they pulled out. And at the time, one of the Ford executives said, it is easier to put a man on the moon than it is to create a fully self-driving car. So, and I think GM has come to its own conclusion that is very similar. Both of those companies said, we're just going to focus on this sort of semi-autonomous stuff, the hands-free driving, like Super Cruise and Blue Cruise, and we're not going to go for the full, free-range self-driving robo-taxis. It is a technology that if it can come to fruition will really pay off big. You take the driver out of the car, you lower the cost, the car can drive all the time, you're always generating revenue. It's a huge moneymaker if you can make the technology work.
What about for Tesla, though? And, we've been talking a lot about Tesla. First of all, I mean, the stock's been on a tear, and certainly that's a big reason why is Elon Musk's, proximity to President-elect Donald Trump. But are they, where are they in terms of autonomous vehicles and still moving ahead? And I'm just curious about how administration policy, the new Trump administration, the second term of Donald Trump, plays into, because it feels like he goes back and forth a little bit on the EV world.
Yeah, well, so a couple of things on that. One, Elon, as ever, is super bullish. He showed a robo-taxi prototype in October. He says he'll have a fleet out there by, I think it's 2026. All of that seems incredibly ambitious. And he's set deadlines like that before. Remember, the Cybertruck took about 5 years to birth. So, and he's zoomed right past them. But it is a key focus, and he recognizes that's where most of the valuation of the stock comes from, this sort of AI self-driving future. It's not just about selling electric vehicles. So he's pushing very hard on that, and he is the wealthiest man in the world. So I don't think you can discount that. And Amazon and Alphabet are pushing hard on it too. So there's a lot of money behind it. So if it's going to happen, it'll happen. The Donald Trump piece, that's getting really interesting and complicated. He campaigned on, I'm going to do away with all EV credits and support and subsidies, no more. Well, okay, as we get closer to him taking office, many of these new battery plants and EV assembly plants, most of them, the vast majority of them, are in red states. And even the ones that are in so-called blue states, like Michigan, are states that voted for Donald Trump. So these plants are in the South and places like Kentucky and Georgia and the Carolinas, and they're scheduled to employ thousands and thousands of people. So it's very hard for those Republican congressmen to vote against their own people's interests. So how is this going to shake out? Will these subsidies really go away, or will the very slim majority that the Republicans have in Congress cause some problems for that plan?
Yeah, it's kind of hard to predict what happens even before he's in office, despite what we heard on the campaign trail and what we've heard since. What about when we're thinking about China with regard to not just EVs, but AI-driven vehicles? We said NVIDIA is ramping up hiring in China to focus on AI-driven vehicles. What do we know about, NVIDIA, a U.S. company, obviously, but what do we know about Chinese companies and what they're doing when it comes to autonomous cars?
For sure, they're doing a lot. And as you know, Tim, China is the world's largest electric vehicle market by far, and the Chinese government has been subsidizing the electric vehicle makers in China for well over a decade. And, you know, they see the next technological hurdle, as Elon Musk does, as getting self-driving cars on the road, and they want to own that too. So, you know, they're pushing hard in that direction. NVIDIA has to walk this very fine line. China is a huge and important market to them. They get billions in revenue out of China. But of course, we have a trade war. We have a geopolitical, you know, issues with China, and NVIDIA can't even sell its most advanced AI chips in China because of it. Nonetheless, they're hiring like mad in China. They've got 4,000 people there now. They just hired 200 more in Beijing, and much of it is for the AI chips that would help drive autonomous cars, because that's the growth market in China right now.
And do we block those? I guess we don't block those chips right now, do we? In terms of NVIDIA?
So they are engineering and building chips, NVIDIA, in China. So, and it's a lucrative business for them.
Yeah.
But NVIDIA is prohibited from selling its most advanced chips in China.
Hey, Keith, when we were talking earlier in the conversation about the autonomous vehicle technology, you talked about the idea of scaling it and making the tech work. Waymo has proven, at least in San Francisco and some other parts of the U.S., that it works, in Phoenix as well. What are the tech barriers holding it back?
Well, I mean, I think we saw that with Cruise itself, right? What really became Cruise's undoing is that in San Francisco, a Cruise vehicle struck and dragged a woman underneath the car, severely injuring her. So anytime something like that happens, it shows you the technology has a long way to go. You know, you really need the technology to be better than a human driver, and it's not really there yet. There's a lot of oversight of Waymo is certainly the farthest along, Tim, definitely, and you were right to be impressed by them. But it still takes a lot of human oversight to make all this stuff work.
It's so funny. Tim just turned to me. I'm gonna just pull it
All right,
back
call
here.
me out.
No, it's just, you know, we're saying human drivers strike people every day, right? Like you just think, and I'm not trying to, right? So you I don't know.
But like he said, it has
to
to be better than human drivers.
Right. Is there a tipping point where it's better and we're like, okay, we got this. We just got about 30 seconds.
I mean, just think of the hellscape of robots killing us. Think about that for a minute. Is that really what we want? No. Even if it's just one person?
No,
I think they really need to nail this technology before they set it free on the world.
Like the bar has got to be like 99.9999999, right? Like, or 100%. I get it.
We don't want a RoboCop future.
We have been so waiting to talk to you about so many different stories, so we are glad we had this chance. We hope you continue to recuperate really well. Good to see you. Keith Naughton, of course, Bloomberg News auto reporter right there in Detroit. So much going on when it comes to space. I don't know what's going on. I feel like everybody's unleashed and just tons of headlines on everything this week.
Yeah, Adobe shares are actually dropping as investors are concerned that it's losing its edge to AI-based startups. We got the details when we return. That's next on Business Week.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower as traders parse through the latest economic data to determine just how soon the Fed will be hitting pause on interest rate cuts. U.S. government bonds fell, stocks lower across the board. S&P right now down 22, down 0.4%. The Dow down 195, also down 0.4%. Nasdaq lower by 85 points, back below 20,000. Nasdaq down 0.4%. 10-year yield now at 4.32%, with a 2-year currently yielding 4.18%. Gold down $34 the ounce. Spot gold down 1.3%. West Texas Intermediate crude flat on the day, 73.49 a barrel. And Bitcoin now slumping by 2%, 99,500 on Bitcoin. Microsoft plans to take an $800 million charge after GM said it was shutting down its autonomous taxi initiative. And Amazon has delayed the deployment of Microsoft's cloud-based Office suite for a year as the two companies work to resolve Amazon concerns about the security of the bundle of email and productivity software. And Canada is examining the use of export taxes on major commodities it exports to the U.S., including uranium, oil, and potash, if incoming President Donald Trump carries out his threat to impose broad tariffs. Stocks lower again, with the S&P down 33, drop there of 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Charlie, watching this, we are all. Shares of Adobe plummeting today, down more than 14% at its low, still trading around that level. The stock move follows Adobe's latest earnings update late Wednesday. It was after the close yesterday. The company gave a disappointing annual sales outlook, citing anxieties about losing business to AI-based startups. Some analysts, though, said the forecast could be a little conservative. So let's get to our interview. Joining us is Anil Chakravarthy. He's president of digital experience business over at Adobe. He's with us from San Jose. Anil, great to have you here with us. Should investors be concerned about Adobe losing business to AI-based startups?
Well, thanks for having me on the show. Look, we have a lot of product innovations. We are well positioned towards growth. If you look at our Q4 and our fiscal year 2024 performance, we exceeded all the targets that we had set out at the beginning of the year. Net new digital media annual recurring revenue was a record for Q4 at $578 million, and for the full year, so was the digital experience revenue, which exceeded $5 billion. And our Q4 operating cash flows were a record as well at $2.92 billion. So in terms of being positioned, we're really well positioned from our customer base, from the product innovations we've had, where we've incorporated Gen AI into our products with our Firefly models, and with all the customer base that we're selling into. So we believe we're really well positioned going into 2025.
Anil, are you, though, guys, being conservative about your forecast? Some analysts think so.
So look, we take our targets very seriously. I mean, we obviously exceeded the guidance that we had put to for FY24. But when we look at the market, we look at all of our segments, we look at all of the geographies that we have in that we serve, and we look at the different routes to market that we have with the enterprise customers, through our channel, and obviously through digital, which is through Adobe.com. We take all of that account in when we set our targets, but we are well positioned going into next year, and we're confident about our prospects.
I'm wondering about specifically where you can point to in the most recent report and say that revenue we can attribute to advancements that we've made when it comes to artificial intelligence. Where specifically is the AI revenue?
Yeah, so our Firefly is our generative models. As you know, Firefly, we have released new models, and early this quarter, early in next year, we'll also be releasing for video, which we have already previewed. We actually disclosed that Firefly cumulatively has had over 16 billion generations to date. These are generations that customers have done on Firefly.com, as well as through Firefly integrated into our products like Photoshop, through capabilities like generative fill, where you can take an image and use generative AI to extend the image and enlarge the image, for example. So those are all examples of actual customers using our products. And so that's what gives us the confidence that we are not only incorporating generative AI, we're doing it in a manner that's designed to be commercially safe. and we're doing it in a manner that enterprises especially will find attractive in terms of using generative AI, both for creativity as well as more broadly for marketing.
So Firefly is what you're doing with image generation internally, but in other parts of the business, you're partnering with third-party LLMs. If I have that understanding correctly, can you tell us which LLMs you're partnering with? Give us some details around those agreements.
Yeah, you're right. For other parts of the business, we are partnering, for example, with OpenAI, with whom we have an agreement. We have an agreement through Azure for OpenAI, and that's something that we have incorporated into several of our other AI assistants that we have released. And with all of them, we do have agreements where we make sure that our customers' data is protected. So we have indemnification available through all of our offerings for generative AI. We make sure that in terms of being able to use our customers' data for training or for other purposes, even if it's a third-party LLM, we have protections for that. And that's what is critical for our enterprise customers to use products like AI Assistant for Acrobat, which, as we again disclosed, is seeing very rapid adoption.
Some people watching this might say to themselves, wait a second, what you're doing at Firefly, OpenAI is doing with Sora or with image generation, with ChatGPT and other LLM competitors too. How do you explain the relationship, this idea of frenemies, like your business partners, but you also don't want to lose business to these startups in other parts of the company?
Yeah, and where our competitive advantage is bringing all of it together. We look at the use of generative AI in the context of 3 layers. The top layer is the applications and the interfaces that customers use. Now, these are applications like Photoshop, for example, or Acrobat, or the Adobe Experience Manager. These are extremely widely used applications by everybody from consumers all the way through enterprises. Those applications incorporate generative AI capabilities through the models. And as you mentioned, Firefly is our set of models. We also use third-party models. And then they're all trained on data that's both open data. In our case, we only train it on data that we have licenses for. We also get trained on customer data to create custom models, especially for enterprise customers. All 3 layers are important, and all 3 really need to come together in order for example, Pepsi, we announced that, at Max, our conference, how they had used our Firefly services for their Gatorade bottles, for example, being able to use images that consumers can create for their own Gatorade bottles. It's very important for customers that all 3 layers come together well, and that is what we believe our competitive advantage is, and which we believe that others will find hard to replicate.
Hey, one thing I think investors might be looking at, and TD Cowen actually downgraded you guys to hold from buy and lower the price target. One of their concerns was a prioritization at Adobe of AI adoption over monetization, leading to continued growth deceleration trends with potential to fall into single digits. I mean, how much of what you guys are doing is about adoption, like that is top of mind, versus monetization when it comes to AI? And I guess rolling into that, as you work with these third parties, what are those agreements with the LLM makers look like? I mean, are you guys getting discounts? Give us an idea.
Yeah, if you look at our model for long-term growth, which we've executed for a number of years now, it is a focus on long-term user growth as well as adoption and growth of use cases, so that we have not only the ability to have a greater number of users, but the products are much more useful to them. They're generating value, whether they're consumers or businesses. And that leads to both upsell and cross-sell. It also leads to opportunities to increase pricing over time based on the value that we are providing. And that's the same playbook that we're running with generative AI. We do believe that it is important to get the adoption increased. We do believe that it needs to go from this idea of being a playground to going into production so that they can get value from it. And then that will provide opportunities over time as they realize value, as our customers realize value. It'll automatically provide opportunities for us to both increase pricing as well as to do cross-sell and upsell.
Anil, so appreciate this. Hope you will come back soon. Anil Chakravarthy, President of Digital Experience Business at Adobe. When we come back, the family that is back on top when it comes to being the world's richest. That story on Business Week, right around the corner.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week live on radio, TV, YouTube, and Bloomberg Originals. Now, let's get to the world's richest families this year. You know, I got to say, names don't really change that much from year to year. And as it turns out, one very familiar name and family name on the list, now back on top, so in the number one spot, as shares of their company that the family created have just been on a tear here in 2024.
With more, Bloomberg News Wealth Team reporter Amanda New York City. Amanda, we talk about generational wealth, how it happens, how it doesn't happen. For one family, though, generational wealth is certainly alive and kicking, and we are talking about the Waltons of Walmart fame, and they got a lot richer this year. Walk us through it.
Well, I just want to go back, and one of the great things about this list that we do, which has 25 families on the list from all over the world, is that it's so relatable. And I think we're all preparing for...
Hold on. What do you mean by it's relatable?
Are you being sarcastic?
Okay, not the dollar
Like, are you
amount.
being like, okay, well, we've all been to a...
A little bit. What I mean is, I'm thinking of the holidays. People are preparing. Everyone has family. That's what I'm thinking about.
Oh.
People don't have billions next to their net worth, but we all have brothers, sisters, grandfathers. We know and we tell at the holidays their stories of their careers and their legacy. And I think when you read through the list, you see this. So back to Walmart, let me just say that this $432.4 billion fortune that's spread out among 3 generations of the Walton family started in 1950 with a 5 and dime of Sam Walton. And the reason why the wealth has accumulated and is not just the performance of the stock this year, but a tenet that Sam Walton set out, which was to unify the family around the stock of Walmart so that it remains predominant, the predominant source of their wealth. And over the years, the dividends from that stock and also strategic sales of the shares have resulted in money outside of that different heirs have used to, for example, build an art collection and museum in Arkansas, which is Alice Walton's pursuit, or buy the Broncos. And so that sense, what you find is that the family observes this tenet of uniting around Walmart and also having the ability to use the money to pursue their own interests. And I think that gives them each gives them a sense of ownership and ties them together.
Yeah, I mean, listen, we all think of Succession, right? When you have like a family-owned company and what happens. And I know that was fictional, but we know, we know real stories of family wealth and companies and where things don't always go so well. I mean, Sam Walton, right, who created this company, he sounds like he thought about this in terms of dividing the fortune, but keeping it in the family and kind of keeping that family and generational wealth going.
Well, there are other stories in this list that show, when the patriarch dies, the widow stepped in and, brokered a deal between the 2 siblings as to what they would do. So I think that's what I meant by relatable, that these are stories that involve people, personalities, egos. Some people keep it very tight. There's a whole realm of Gulf wealth tied to oil that if you read those vignettes that my colleague Devin Pendleton puts together every year for this list, I should say I'm a helper here. But those families, their wealth is tied to governing in the United Arab Emirates, for example, or Qatar or Saudi Arabia.
Right.
As well as, business concerns. And then you have, you mentioned Succession, which is, I guess, a fictitious media brand, but you do have the New Houses back on the list, a New York-based media family, well known for Vogue, has been diversifying its media holdings, and it got back on the list thanks to Reddit.
Yeah, the new houses. Yeah.
It's like I almost want to on this list just type in either family, brothers, sisters, like
Because it's
right?
all-
Because it's all it's all family related.
Hey, one thing
or a lot of it is.
One thing I will say about the Waltons, some of the members of the Walton family, big cyclists, and they've done a lot for trails and cycling in Arkansas, and also for like buying out bike brands too.
Oh, I didn't know
Yeah.
that. Well, you're a big cyclist, right? So you see that.
See it, yeah.
Really cool. Hey, we got to run. It's a cool list. So glad we could get some time with you. We know you play in this world. You talk to a lot of these individuals, so fun to check in with you. Amanda, thank you so much. Of course, Bloomberg News Wealth Team reporter Amanda Gordon joining us right here in New York City. Highly recommend. Tim laughed at me because I wanted to print it out, and he's like, what are you kidding? It's like 20-something pages.
Yeah, don't print that.
So you got to go to the Bloomberg or
Consider the
Bloomberg.com. Exactly. But it's a great story to read and check it out. All right. That's going to do it for this hour of Bloomberg Business Week. If you're watching on television, the close is coming your way in just a moment. But Tim and I, we're going to continue.
Yeah, we got Broadcom earnings coming up after the close. We got a great round table. Ian King is joining us in just a few minutes to talk all things chips. This is Bloomberg Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Christopher Cruz. President Biden has pardoned dozens of people and commuted the sentences of 1,500 others, that is. That's the most ever in a single day, says CBS's Jared Hill.
On the list, people who were released from prison and placed on home confinement during the COVID-19 pandemic. Biden is also pardoning 39 Americans convicted of non-violent crimes.
Political analyst Larry Sabato says it's a way for the president to let the country know he is still in charge.
No one can change it. No one can appeal it.
Really do need to have a set time, so we need to figure out what
a
works
good
for
way
you.
for an outgoing president to generate some headlines and remind people that, yes, indeed, he's still there.
Officials in Louisville, Kentucky have come to terms with the Justice Department on police reform.
The agreement was sparked by the fatal shooting of Breonna Taylor in 2020.
This historic agreement will build upon and accelerate the transformational police reform that we have already begun.
Mayor Craig Greenberg.
LMPD has rewritten its policies, revised its procedures, and reorganized its departments.
The consent decree follows a federal investigation that found Louisville police engaged in a pattern of violating constitutional rights and discrimination against the Black community. Stacey Lynn, CBS News, Washington.
Multiple Biden administration officials are in the Middle East for talks on Syria and a Gaza ceasefire. CBS's Cammie McCormick has details.
Secretary of State Antony Blinken stopped first in Jordan.
This is a moment of tremendous potential opportunity.
But also peril, he said. National Security Advisor Jake Sullivan in Israel said every day brings an increased risk, but he indicated a ceasefire deal for Gaza is promising.
Close. I believe close.
He said he'd like to close a deal this month.
The Israeli government has indicated, including the prime minister, they would like to see this done. We see movement from Hamas.
He will travel next to Doha, where the talks have taken place.
A man from Missouri has been released from a prison in Syria by Islamist rebels. Travis Timmerman spoke to our Elizabeth Palmer.
It wasn't too bad. It wasn't bad. I was never beaten. The only really bad part was that I couldn't go to the bathroom when I wanted to.
The man police believe killed a healthcare company CEO in Manhattan is in jail in Pennsylvania. CBS's Lilia Luciano says Luigi Mangione is isolated.
He is in a cell by himself, that he is not in solitary confinement, but he does not have access to other inmates. He's not communicating with other inmates. He can receive visits.
CBS News has learned that prosecutors from the Manhattan DA's office have begun presenting evidence in the case to a grand jury. Less than an hour before the close on Wall Street, the Dow is off 0.5%. This is CBS News.
TradeMastersHub.com.
A Black Sabbath reunion may be in the works.
The British heavy metal band staged a farewell tour in 2017, but bassist Geezer Butler has told the entertainment platform Life Minute Ozzy Osbourne's been talking about one last Black Sabbath reunion concert, possibly a surprise pop-up in some club somewhere. After all, that's how the group started out back in the late 1960s. The appearance would be Osbourne's last because his health is failing. Vicky Barker, CBS News, London.
Juan Soto will get free use of a luxury suite and up to 4 premium tickets behind home plate for regular season and postseason New York Mets home games. It's all part of his record $765 million 15-year contract with the Mets. The team also agreed to provide personal team security for the All-Star outfielder and his family at the team's expense for all spring training and regular season home and road games. Christopher Cruz, CBS News.
Diabetes.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Welcome back to Bloomberg Business Week. Carol Masser along with Tim Stenivek. In fact, you didn't go anywhere. We went away for a little bit, but now we're back.
I don't know about I stayed here the whole time.
We did indeed. Hey, looking at the markets, we've got about 55 minutes to go until we ring that closing bell on the Thursday trade, and we're definitely off our best levels of the session. We're down across the board here, though.
Yeah, we are. The NASDAQ down about 0.5 percentage point. The S&P 500 down 0.4. The Dow down 0.5 percentage point. We still got earnings coming after the bell. We got Costco reporting, and we got Broadcom. And on Broadcom, we got Ian King joining us in just a few minutes. He's got some news on Intel as well.
Looking forward to that. Always like talking about the semi space. Also, a legend in the private equity world dying yesterday, David Bonderman. We're going to bring you an exclusive interview with Jim Coulter, founding partner of TPG, and talk about the impact that David Bonderman really had on that world, the private equity world, the investing world, and really what his legacy is all about.
And more chips, more chips, more chips. The author of the New York Times bestseller, Chip Wars, Chris Miller, is back with us a little bit later on in the program. First up, though, a check on the day's trade and top business stories.
We're tired, right?
We also got
a lot going on.
A legend in our building here.
In his own mind.
Charlie Pellet.
All right,
Take it away, Charlie.
Here's what's going on. We got just about 54 minutes to go until that closing bell clangs on Wall Street with the Dow, the S&P, NASDAQ, all declining right now. S&P down 25, not just lower, but lows of the session right now, down 0.4%. 6,059 with the Dow down 228, lower by 0.5%. NASDAQ down 88 for the NASDAQ Composite Index. That is a drop right now of 0.4%. Your 10-year 4.32%. Peak PI Thursday, the 2-year 4.18%. We've got traders parsing through data to determine how soon the Fed will be hitting pause on interest rate cuts. Again, 10-year 4.32%. Gold now at $26.82 the ounce, down 1.3%. West Texas Intermediate crude down 0.1%, $70.19 a barrel on WTI, and Bitcoin down 1.8%, 99,827 now, back below 100,000 on Bitcoin. On the latest edition of the Bloomberg Big Take podcast, David Gura sits down for an exclusive interview with Treasury Secretary Janet Yellen. And Gura asked if she's still confident that the U.S. economy is heading for a soft landing, given there are now new variables, including several that are inherently inflationary.
We're still a bit above, but getting pretty close to the Fed's 2% objectives. And, I believe that the Fed will continue to focus on inflation and take whatever actions prove to be necessary to keep inflation heading toward their 2% target.
Treasury Secretary Janet Yellen interviewed on the latest Big Take podcast out today. After earnings, Adobe down 13.8%. After earnings, Ciena up 14.8%. And after the close of trading, we will be hearing from Broadcom. Broadcom now down by 1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. Well, Broadcom shares jumped 6.6% yesterday after the information reported that Apple's developing an AI server chip, and it's working with Broadcom on its networking tech. Shares lower today by about 1%. The news, though, yesterday did cheer up investors, given Broadcom's September results were marred by disappointing non-AI sales, causing the biggest one-day share price drop, going all the way back to 2020. For an idea of what investors expect today, we bring in Ian King, Bloomberg News U.S. semiconductor and networking reporter. He joins us from our Bloomberg studios in San Francisco. Ian, good to see you. Before we get to Broadcom, I want to go to some Intel news that you reported a little earlier, because Intel says it's an open question whether or not to break up the company. I thought, given the executive shuffle in recent weeks, this had been kind of put to bed?
Actually, unfortunately, for those who want to keep this company together, kind of the reverse. Pat Gelsinger, the CEO who was ousted, was, I think, the chief proponent of this idea of better together. And when Dave Zinsner, one of the interim CEOs, was asked this earlier today, his kind of honest answer was, well, we'll just have to see, right? A lot of questions around whether it makes sense to separate products and manufacturing, which is essentially the core foundation of Intel. But what he said was, you know, whoever my next boss is will be deciding whether that happens or not.
Hey, Ian, is 2025 kind of the make or break year for Intel, do you think?
2024 was supposed to be that. 2026 was supposed to, I mean, it really, what the, you know, the message that came away strongly from these two co-CEOs was that, look, it's not going to get any easier. Don't expect any rapid fixes. There are a lot of things that still need to be sorted out. So they were trying to kind of reset, I think, Wall Street expectations at a sort of lower level, at a more sort of sober manner, and definitely kind of mark a departure from the kind of more bullish approach that we'd seen from Pat Gelsinger.
Is there still talk of potential spin-off? Like when we talk about separating the company, breaking up the company, yeah. What does the structure of that look like? Does it become two publicly traded companies? Does it spin off part of the company to private equity? What does it look like?
Yeah, no, I mean, that's the key question, and you know, that goes to the heart of the matter. Because of the complicated relationship between these two parts of the company, who frankly been the cornerstone of Intel's success for most of its history, it's really difficult to separate them. And anybody who's coming in for half of this company is inheriting a whole series of legacy relationships and legacy rivalries with other companies that have to be sorted out before it even makes sense, never mind the massive amount of debt, never mind the massive amount of investment that's required, particularly on the manufacturing side. So you're asking 100% the right question, and right now nobody has the answer to that.
So when you think about the semi world, what do you think is the company? Are we right that we talk so much about NVIDIA? I'm thinking about Broadcom, you know, and earnings after the closing bell, which all of a sudden is, you know, on our radar big time because of what they seem to be doing with Apple. So how do you see it when you look at this world more broadly?
Well, I mean, you know, if we focus on Broadcom, this is almost a $900 billion market cap company that sort of everybody kind of shuffles off to the end of earnings season, and we'll see what they kind of say. But tremendously important company for the whole AI story, for the relationship with Apple, which is, you know, like two scorpions mating, frankly. They love each other and they hate each other, and we've seen this going backwards and forwards for years, and this is the latest manifestation of it.
Okay, so what is that? I mean, is it wrong to call it a frenemy? Are they frenemies?
I mean, Apple needs Broadcom as long as it needs it, right? And we've seen, according to our reporting and public statements by both companies, them dance apart from each other and then have to dance back together again when that need became apparent. Apple, as we know, tries to replace its silicon providers with its own efforts. Guess what? Broadcom is very good at certain aspects of that equation, whether it's the Wi-Fi and connectivity for the iPhone, or whether it's designing some of these specific purpose chips for the data center. So we'll see, right? I'm sure Hock Tan, the CEO of Broadcom, will be asked that today on the call.
Our supply chain analysis on the Bloomberg terminal shows us that Apple accounts for about 17% of Broadcom's revenue at this point. How should we think about AI versus non-AI revenue for Broadcom?
Yeah, I mean, 3 months ago, as you mentioned in your lead-in, everything AI was fantastic, and everything XAI was kind of a problem and holding things back, and we saw quite a reaction to that. This time, if you read the notes, it's kind of the concern has kind of shifted towards some of perhaps Broadcom's AI-specific chip design customers kind of taking their time to introduce new models, so that might be a bit of a headwind, whereas the other stuff, whether it's mobile, whether it's automotive and some of the other areas that they're in, maybe are coming back. So maybe a reversal, but not necessarily good news.
So, I just kind of thinking about this space a lot. We've talked earlier, I'm kind of going on a little bit of a tangent, but we talked about NVIDIA and China and autonomous cars and chips for those cars in China specifically. I mean, NVIDIA, it does feel like everybody is, to some extent, going after this company, but it continues to excel when it comes to anything AI. But is it just a matter of time, Ian, or do they constantly, stay ahead of the game because of the culture of the company and because of Jensen, who just seems to have a certain drive, too, in making sure that he's ahead of the game?
Yeah, I mean, he's been waiting most of his professional career, 30 years, for this opportunity, and he knows, struggling, frankly, often, and so he knows that, that this is a brief opportunity that he has to take, and so he's throwing everything into taking advantage of it and expanding that opportunity, and B, making sure that he doesn't get caught by others. Whether he can continue to do that or not is the big question, and it's obviously a $3 trillion question when you look at the money that's there. Right now, he's going absolutely full ahead to try and do that.
Well, full ahead in which direction, though? Because we did talk earlier about the idea of hiring in China to work on autonomous vehicles. Yeah. I mean, is that the next frontier for NVIDIA?
Yeah, no, again, this was going to be the next frontier before AI came along, and Jensen did lots and lots of, promotion about this and lots of big, long talks and projections, and frankly, he admitted, I asked him about this, and he said, look, it just didn't happen. The market did not evolve at the rate that it happened. He thought that there would be robotic cars all over the place right now, and there aren't. Right, robo-taxis just haven't happened.
Yeah.
China is the most likely place where that's going to happen, where EVs are happening, where the electronification of cars is happening at pace. So it absolutely makes sense that, he would refocus efforts in that direction.
And does he at some point refocus into, we talked about digital biology and his focus on that. Like, is that the next thing potentially that maybe he starts to focus on? I don't know.
Yeah. I don't think we know, and I don't think he knows, but guess what? He's out there making sure that he's got a foot in the door with every possible opportunity, whether it's actual humanoid robots, whether it's industrial uses, whether it's drug development, whether it's gene sequencing. He's just out there trying to do it, right? And he's got the money to do it as well, right?
Yeah.
Unlike Intel.
Right, exactly. Ian King, thank you as always. Bloomberg News, U.S. semiconductor and networking reporter, joining us from our San Francisco bureau. So crucial to our chip space and semi space and coverage. So looking forward to certainly Broadcom and their results after the close, but also Ian and the team and what they have to say about it.
We got Costco.
That too.
We got Costco. After the bell too.
Yeah.
Can you buy chips in bulk at Costco?
I'd like some big,
A couple of the Blackwells.
You can buy chips. They're called Wise chips.
Yeah, exactly.
Potato chips.
You can buy Frito-Lay. Hey, coming up next, we talk real estate. Francis Katzen over at Douglas Elliman joins us. That's next on Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all trading lower. 39 minutes to go ahead of the closing bell, with the S&P right now down 26, a drop of 0.4%. Dow Jones Industrial Average down 205, down 0.5%. And the NASDAQ Composite Index down now by 115. That is a drop of 0.6%. The 10-year at 4.32%, with a 2-year 4.18%. PPI Thursday, and we've got traders parsing through data to determine how soon the Fed will be hitting pause on interest rate cuts. Spot gold down $36 the ounce, a drop of 1.3%. The precious metal now at $26.82. West Texas Intermediate crude, little changed on the day, down 4 cents a barrel, $70.25. Bitcoin now below $100,000, 99,500 on Bitcoin. Bottom line here, down day for the Dow, the S&P, and NASDAQ. Anastasia Amoroso is Chief Investment Strategist at iCapital, and she says there are plenty of wild cards as the Trump administration arrives in Washington.
The wild cards that I'm thinking about are tariffs and taxes and budget deficits, as well as the direction of Fed policy and also the direction of big tech regulation. And the truth is, we might get an administration that imposes the unilateral universal tariff, or maybe they have a threat of it, or maybe there's an agreement that actually gets negotiated in the process of it and does it very quickly. We don't actually know what the ultimate outcome is going to be.
Anastasia Amoroso of iCapital. You can hear more of that conversation on the Surveillance podcast. Speaking of big tech, Apple's ambitious plan to create in-house components for its devices will include switching to a homegrown chip for Bluetooth and Wi-Fi connections starting next year, a move that will replace some parts currently provided by Broadcom. Broadcom, of course, reports after the close of trading, and right now we do have Broadcom shares trading lower, right now down by 1.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week, which is brought to you by Anshin Accountants and Advisors. Partner-owned since 1923, Anshin factors in your unique circumstances to develop innovative tax and accounting solutions. Visit ancihn.com. Anshin, recalculating what's possible.
Okay, Carol Master, you'll like this.
Yes.
Because you've talked about this quite a bit over the last few years.
Oh, yes.
Trump's economic advisors are considering doubling the state and local tax deduction. It's a popular but expensive tax break that could deliver big savings to many residents of New York, New Jersey, and California.
Why is it expensive?
It's expensive. Yeah, expensive for the government because...
Right.
You know,
because they don't get those revenues.
Exactly.
But we also pay a lot in.
But also Trump put this in.
Like our salary, right? Like everybody...
During the first term.
Yeah.
Yeah, this is what he did in the first term. He campaigned to take it away. Then Steve Moore was out today telling Bloomberg that the group has discussed expanding that tax write-off limit from $10,000 to $20,000.
I'm just saying, people tend to make a lot more money in the New York metro area, and so they're kicking a lot into the coffers overall, into the federal tax coffers.
How do you really feel?
Oh, wait. Okay. Some say. That's not my opinion.
All right, so could be some good news to people in the tri-state area. In California who own homes. On residential real estate, we're joined by Frances Katzen. She's founder of the Katzen team at Douglas Elliman. She typically sells more than $350 million in real estate each year, and over her career has sold more than $3 billion worth. Her focus on New York City, mostly Manhattan. She joins us here in the Bloomberg Interactive Brokers studio. How are you? Welcome back.
Well, Tim, thank you for having me.
Hey, a lot of news in the real estate world this week. Yeah, we got to start with what everybody's talking about. It's among the most read stories on the Bloomberg terminal over the past 2 days. The Alexander brothers. They were arrested on Wednesday. Alleged crimes include trafficking, women for sex, drugging victims, violent attacks. They started at Douglas Elliman before moving to their own brokerage official. Our team spoke to Jonathan Miller, the head of New York appraiser Miller Samuel, who said that he used to say this was like New York's worst kept secret. He said within the industry it was understood that they were trouble. What did you hear about them?
No comment. Very disappointing for the business. And I think that it's a very, very, very sad situation.
Frances, I do wonder, too, though, like I feel over the last decade, safe to say, that culture and toxic cultures in different industries, the media industry, it's something certainly we've dealt with a lot. I'm not saying here, but I'm just saying more broadly.
Oh, it was all over.
In terms of the media industry, right? Like, yeah. And like, it was like, how did all of this stay so quiet for so long? There's been stuff going on in the technology industry. Like, pick your industry, and all of a sudden, military, like, things start to open up and we start to see things, and we're like, how is it that we didn't know about this sooner? Because things have been going on for so long. You understand the real estate space. Are there difficult aspects in the industry? Are there cultures that are rough? And maybe it's rougher for women. Help us out here.
That's a really interesting question. I think it's how you choose to play the game. I also think it's very hard to prove if everybody's looking away. So I think it comes down to factually being able to back it. I think that ultimately, much like Hollywood, it was also a scare tactic.
Exactly.
I think there's all of that. And I think we've come to a point in the world where it will not be tolerated.
And maybe it takes something like, unfortunately, this to come out to maybe the industry look within itself?
I think so. I'm not sure that this has been the norm, to be candid. I've been in the industry a long time.
Industry or Douglas Elliman or just, yeah?
Any. I don't think it's Douglas Elliman specific at all. I think they were at another firm during that period as well. So I'm not convinced it's company specific whatsoever.
Yeah.
It's unfortunate that we were there at that moment, but I would say that it was very covert, and I would imagine for all the women in the world who were watching this, I think it comes down to how to prove it. It's a he said, she said, much like Hollywood, much like tech, much like anything else. And it's how you choose to enter into it. I don't think there's any pressure for that whatsoever.
It's also a business story in the sense that these guys kind of vaulted to the top echelons of ultra-luxury real estate. Back in 2019, they sold a $238 million Manhattan penthouse. There's a lot of competition for those listings. Does it change your world in the sense of who you're competing with for listings? Are there so many folks out there who are competing at the ultra high level that it doesn't change things?
Again, there's enough for everybody. I think it's how you play the game. I've actually been in a situation where we've pitched against each other and ultimately I won, but they were silly enough to overpromise a price and then bid it so low that we didn't counter. So I think you have to understand that there's also a fear tactic where they don't want to ostracize these kind of connected people.
How does that work?
But what's the but?
But at the end of the day, you have to trust your product and trust that the mainstream market is not going to be thwarted by power of a certain milieu. At the end of the day, the product is the product and the buyer pool is fair market, open market. But these types of folks have a certain cachet and appeal for a certain demographic. Not for everybody.
Understood.
How does that bidding process work for people who haven't sold at this level or been involved in these transactions?
Well, if an owner is asking for a pricing, and we go in and we provide our comparative market analysis and we suggest this and they suggest that. They're doing it usually to win the bid because it's the highest number, not necessarily the sellable number.
Right.
And I think that accuracy makes money, and I think it depends on the client who will actually say, you know what, I'm not so sure I subscribe to that.
I would imagine your industry too, in so many industries, it's relationship based, right?
Total.
And if
it's
you
all a relationship based.
Right. And if you've been able to say we're going to do this and you actually do it by giving real numbers in terms of value and moving a property, like stuff like that sticks.
Exactly.
Ultimately.
That's exactly what it comes down to.
But I do think about these like celebrity agents. It becomes a thing.
It's awful. It's awful.
Really?
Yeah, it's awful because what it does is it cheapens the actual skill. At the end of the day, it's not just turning a key and making 6% like these sort of shows hype. It does require a certain amount of acumen. And yes, it's the lowest bar of entry. We get that. But to really survive and do it for many decades through every type of market, you have to actually understand what you're doing and how to twist and change depending on the market you're in. You can't just overprice and hope for the best. You have to know how to get the market to you when it's saturated or there's no bid for it or there's higher interest rates, and how do you get people there? It's very nuanced, actually, to be honest.
How has the settlement from the National Association of Realtors changed your year, changed your business?
Not at all.
What? You said 6%, which surprised me. I thought it was 5%.
Tim.
I thought it was 5%.
Never sell yourself down. Look, to be honest, we're not part of NAR anyway, and we agree.
That's a New York City thing, right?
It's non-New York City thing.
But
we're part of LEBNY.
Not being part of New York, not being part of NAR
Correct.
is a New York City thing.
Correct.
Yeah.
And my issue with it is that it was trying to de-incentivize a buyer in a market that already had a hugely inflated interest rate. Why would they want another additional friction cost on top of that that's only going to compound and impact the building's value and the seller's price? Why would I pay more if I've now got to carry more on my back? It de-incentivizes. So while I understand it's a new thing, do you know that nearly every owner has said, let's keep it status quo, thanks. That's what's been going on. It's almost like a quiet revolt.
We should remind everybody, the National Association of Realtors paid $418 million. It was antitrust claims, some other things, and really impacted kind of how real estate professionals do business. And it was a class action, home sellers who were allegedly overcharged by brokers. So you're shaking your head. What?
There's always one. It's like the rental that goes wrong with someone from the state, and we were all penalized.
But you're not penalized because you're not part of the National Association of Realtors. You're part of the Real Estate Board of New York. Right?
Correct, but
you still had to settle.
Yeah, which is in a way a certain amount of taking blame for something we had no part of. And it takes away what is the standard sort of capitalistic concept of real estate, which is who gets the highest price, drive pricing and value.
Kind of like supply and demand, like, right?
Total.
What you're willing to pay for something.
Total.
Or sell something for.
Okay. How is business this year, and how's it looking for next year?
Sorry. No, that's okay. I have to say, last month, ever since 50 basis points drop in October, it has been bonkers.
Seriously?
Seriously bonkers.
Which types of properties?
All of it. Entry market basically got back in because they could offset that ridiculous, rental price of 43% growth. We had 246 contracts signed last month, the third highest in the past decade. And last week, we had 36 contracts signed of over 4 million and 15 more than the prior week, and 13 of them were 10 million.
It's all the rate move.
It is. I think it's also an election. It's an election.
Yeah.
When you have an election year, you have sort of a stagnation compounded with a sprinkle of inflation and a little dollop of higher interest rates and, geopolitical nightmares, and you're done for the most part, in my opinion. It was a tough year.
So how's 25 looking?
Very positive. I think the anticipation of additional rate adjustments 4 times throughout the next couple of months over the year, I think will only further. And I also think the capitulation of the sale market drove the value proposition for people to take an edge of 50 basis points off, get back in with the understanding they could refi again ongoing.
20 seconds really quickly. If we don't get all those rate cuts that the Fed we expect, is that going to slow things down?
I don't think it will. I think it'll be status quo, which seems to be on us. I think Citi and Goldman reported good earnings. I think you're going to see that trickle into the marketplace. People want to own equity.
Thank you so much. Thank you for going a lot of places. We really appreciate it.
Wasn't expecting that. Yeah, no
I know, but thank you. Francis Katzen, founder of the Katzen team over at Douglas Elliman, joining us right here in our Interactive Broker studio. We're driving to the close.
It's Bloomberg Business Week. That's what we do.
It is.
Stay with us.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We got 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, all trading lower. Lots going on. Let's head over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks are trading in the red right now, with the Dow currently down 193 points. S&P's dropped 26, while NASDAQ is lower by 0.6%. The U.S. 10-year yield is now at 4.32%. Gold is down 35. Oil is little change, but Bitcoin, that's lower by 2%. Among the main 11 S&P sectors, only staples and real estate were in the green. Consumer discretionary was under pressure, and leaders to the upside in the Dow. Coca-Cola and IBM, while UNH fell 3.5% and led to the downside. In the tech space, Western Digital fell intraday after management warned of choppy quarters ahead. And regarding IPOs, Service Titan opened at 101, was priced at $71 a share. Wrapping things up, some of the names pointing after the bell tonight include Broadcom, Costco, and RH. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. We'll have you covered on those earnings and to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We got about 18 and a half minutes left in today's trading session. Getting ready to wrap up that Friday trade. We are definitely off our best levels of the day, just off our worst levels, but we've been, in the red pretty much, I think, all day when it comes to the major averages. Very different from the tone that we had yesterday when we saw those big mega cap tech names
It's just a day.
really flying high.
Just a day.
It's just a day.
But still, I mean, come on.
Another day to come.
Look at year to date.
Okay, perspective.
I know, I always do this, but it is worth keeping in mind.
Context means
27% for the S&P 500 this year?
Yeah, I know. Unbelievable.
Okay.
I got a tear.
Hey, let's see what Tom Plum has to say about this. President and CIO over at Plum Funds. The fund, the Plum Balance Fund, PLBBX, up 20% so far this year. Up on average 8.5% annually for the past 5 years. Tom joins us from Florida, where it's a lot warmer than it is here in New York City. Tom, how are you?
I'm doing good. I've just been here for a week, but it's been pleasant. It's nice to talk to you, Kim, and good to see you, Carol.
Yeah, great to talk with you as well. How are you?
Doing good. As you said, it's been a good year this year, obviously. The balance fund is for accounts that have stocks and bonds. We've been pretty happy with how it's turned out this year and how it's been the last 10 years.
I will say, year to date, it's in the 91st percentile of its peers. So certainly some outperformance there, Carol.
Yeah, and I got to tell you, you got to be like, I'm glad I got NVIDIA in
As
my
the top
fund.
holding?
We have talked a lot about, in fact, our weekend show, which we're getting ready to put to bed, is all about AI. It just feels like, again, another mega dump. We talked with an author of a new book on Jensen Huang and specifically about where NVIDIA is going and so on and so forth. You continue to keep holding on to this. Do you add? Tell us how what your strategy is around NVIDIA.
I think it's very difficult to think about trading NVIDIA. My cousin owns horses, and you don't get off them when they're still going. Right now, what we're seeing is a company like NVIDIA is redefining so many things. And, going back to an old Peter Lynch adage, you can't sell a stock because it's doubled or tripled and expect to get a 10-bagger. I think we're going to continue to see them execute, and as long as they're executing, they should stay at a premium multiple. They're definitely going to be volatile, but for us, we will occasionally cut back on it when it gets over 10% of the portfolio. But we really think that anytime that it corrects, anytime that there's news that adds some concern, even like today where people are talking about China, it's just going to be an opportunity. If you don't have a full position, this would be a time to do it.
Tom, I'm curious what balance means to you guys. Remind our audience, because I'm thinking about some of the names. You've got NVIDIA, Alphabet, Microsoft, Apple. I mean, these are a lot of your mega cap tech names. Some might say, whoa, that's a lot of exposure. How do you think about balanced in terms of the strategy?
Well, we've always went back to an old study that showed that you get about 80% of the return and about 45% of the volatility if you have about 60% in stocks. Then we felt that when you have that relationship, then you have to think about how you're going to use the stocks and bonds to their best avail. So stocks, we think, should be there to grow. And so we're looking for companies that are providing that growth and providing the return that you would want from the stock portfolio. But then stocks are volatile. And so then we look at our bonds, and instead of looking to try to get maximum income return from our bonds, we're looking for our bonds to moderate that volatility so that people can be true long-term shareholders of a company like NVIDIA that occasionally tests you.
So the top holdings in your firm, fund, include NVIDIA, Alphabet, Microsoft, MasterCard, Visa. But there's one in there, WEX, that doesn't have the same name recognition. What are you betting on with WEX?
So WEX is one of the largest corporate finance players that allows these fleet managers to use all the types of tools that they need, from making sure that their people out on the road can get the services they need, but not more than they need. They have discount agreements with different hotels and fuel places. And then they go right and they put it right into your general ledger. And so it's a true corporate finance biz-to-business company. It's not been a performer this year, but it's one that we think has a lot of headwinds this year that are going to turn to tailwinds. One is that they are the benefactor of a lot of this infrastructure build that we're talking about, and they're still at the forefront of using corporate finance and financial technology to benefit and save their clients money.
Hey, I'm also curious, among your top holdings, Tom, includes looking at your major credit card companies, whether it's MasterCard or Visa. I mean, that continues to be an interesting play for you. You've done this for a while.
I think that we've had Visa for 15 years.
Yeah.
We originally started to look at it as a core major holding when we started to see people buying things on the internet. And at that time, Visa told us that 14% of the transactions in America went through Visa unless they were online. And at that time, it was 42% went through Visa. So we felt a company that doesn't have credit risk, has scale, and has in almost a moat that is impossible for others to crack into, that they were going to continue to benefit, and they have through their execution into this corporate finance, business to business, people to business, all those. And we still think they have a runway ahead of them.
Hey, just quickly, 30 seconds, Elf Beauty. It's been on a tear for 1, 2, 3, 4, 5, 6 years here, 5 years. You know, it 161% higher last year. It's a different tone this year. It's down about 9%. Just 30 seconds. You continue to own it.
We've seen this, a lot of times where companies go from being, where they grow geometrically, and then they come down to being a very good growth company. It's consolidated this year, but we still think that we're going to see 20% plus growth, and at a 30 multiple, we think it's attractive in an industry where people are going to look for value and they're looking for quality. And this company's been able to execute doing that. They're increasing their distribution both domestically and abroad. So we think they're well positioned.
Well, great to check in with you. Happy holidays, and looking forward to talking to you in the new year. That, of course, is Tom Plum, President and CIO at Plum Funds. As we mentioned, the fund up 20% year to date and up on average about 8.5% annually for the past 5 years. Folks, we are just around the bend. 10 minutes to go, and we will get ready to wrap up today's trading day. This is Bloomberg.
listening to Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek. Wow, Carol.
Have you gotten over your commute home yet?
I've not gotten over my commute
I'm
yet.
afraid to reopen this, everybody.
All right. Well, I'm glad. I've just been complaining about it.
So tell us about your trip home.
Well,
Not
everything.
good.
Sometimes I have to rush home every day. I have to rush home after work to pick the kids up.
I know. Whoops.
And usually it takes if it's I can get home in just an hour if it's perfect. 2 different subways. And I was on it yesterday, and I was on the F train going to Brooklyn, going under the river from Manhattan to Brooklyn, thinking to myself, wow, this is perfect. I'm totally going to get home before 6. It's a miracle. It's going to be amazing.
Sweet.
Get to York Street, the first stop in Brooklyn. It's kind of the Dumbo area.
And?
The train stops. Stays stopped.
It's always...
Hear a muffled voice over the loudspeakers, which, no, I cannot hear because you know how they are in New York. So I go to a different car to hear what the conductor says.
And?
Electrical outage at J Street, which will hold trains indefinitely. And suddenly everybody gets out of the... it's pouring rain. It's dark.
It was rough yesterday.
I tried to get a car from Uber or Lyft. It was going to cost over $100. Plus, it would take forever from there to get home.
So what did you do?
I did something that I shouldn't have done. I took a city bike home in the dark.
In the rain?
In the rain without a helmet.
Yeah, you shouldn't do that. I hope your kids don't see you.
I had to get home. I did see a friend on the way, and he was like, what are you doing?
Because you were...
I was like, I got to go, dude. I got to get home.
But Tim's riding his bike. You always see his helmet.
Yeah.
I know.
I can count the number of times I've ridden a bike without a helmet in my life on one hand.
First of all...
There was no other option.
First of all, go figure, a power outage caused by a fire at a nearly century-old power substation. We talk about the infrastructure here. It is really being stressed. It's old. It needs some work. And the problem is, here you have people commuting in and out of New York City, and that when anything starts to break down, I've been there too. I use the PATH train, and it's when it doesn't work, we're all looking at each other, and we start to look at Uber cars, and they're always $100 or several hundred just to get into New York. And we look at each other we're stuck.
We're stuck.
Where do we go?
I will say, I was one of the lucky ones, as I was stuck at a station.
Yeah, you were lucky that you could actually get out, right?
As I got out of the train, I was in the last car, second to last car.
Yeah.
As I was walking up the stairs, I looked behind the train in the tunnel. There was an F train stopped right behind it in the tunnel.
You're stuck.
And I was thinking to myself, those people are stuck. It turns out 3,500 riders were trapped on 2 trains and delayed service on other subway lines. This is according to John O'Lieber, the CEO of the MTA. Governor Hochul directed the MTA and Con Ed to investigate the cause of the outage, calling the incident unacceptable. I think one of the challenges here, Carol, is that it gets to a point where this stops commerce in New York City. This makes it so people have a hard time getting to work. Productivity falls, and it gets to the point where businesses ask themselves, do we really want to be in a place that is so hard to get to and from?
I don't know. I mean, you could ask this question year over year over year in New York, right? In terms of it's not always easy. And we have had, advancement, things fixed, and then things stressed again. I mean, we continue to just see building and more people living in and around the area and commuting back and forth. I don't know. And I don't know. I think the pandemic, we thought there'd be a little bit more of a balance. I think we have seen a lot more people come back, although I don't know that everybody has come back, because you think about a Friday, it's pretty quiet commuting in and around. You look what?
Yeah, it's quiet, but we're the ones on the train because we have to come in.
I know. Well, it's hard to do this. I mean, we did it during the pandemic, but it's not the same. Bigger story, because when things break down, they break down often for a long time period. And I think with climate change and rain and crazy weather, all of these things, power systems, being stressed out, that it becomes much more problematic, which is why when we get to work, we're either I don't want a cup of coffee, I want a drink, or we're just cranky.
That's why my hair always looks like Albert Einstein when I get to work.
It really
Because I've just been on the subway for 90 minutes.
Someday I'm going to take a secret picture and put it out there, but not yet. I won't do that.
By the way, the subways were an issue this morning, too.
All right, guys, I think this is a cue for us to talk about the markets. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Teal, taking you through the Closing Bell, a global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Massar and Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms here on this Thursday afternoon. A big turnaround from what we saw yesterday with the NASDAQ 100 hitting a record high, now pulling back 0.6% as we get closer to the closing bells today, Carol.
Yeah, absolutely, Romaine. A different tone, a different sentiment. You've got the number of falling stocks outnumbering rising ones for a record 9 consecutive days. You do wonder about that sentiment, what it's telling us maybe about the broader trends and where stocks go from here.
Okay, so we are rounding out earnings season. We got Broadcom in a few minutes. We'll hear from Costco a little bit later, too. We'll see what they have to say. And then, of course, next is the Fed. All attention turns to what we hear from Jay Powell and co. on Wednesday.
Yeah, no Fed speak until then because everyone's in blackout mode. So it does feel like we're kind of marking time until that Fed decision, even though it's pretty much baked in. We're going to get that 25 basis point rate cut.
Which then raises the question about the breadth that we've been talking about. BTIG was saying that, look, if we can't get the breadth and that rotation into breadth right to the end of the year, that doesn't bode well then for January and that broadening of the rally.
I mean, just playing devil's advocate here, though, but I mean, given that we're, 2.5 weeks away from the end of the year, 3 weeks from the end of the year, should we read too much into some of the price action? No. I mean, I feel like some people are starting to step away.
No, but you should definitely still tune in to our show at 3 p.m. every day, just in case to get us caught up on that price
action.
To that
point, I got an IB from somebody, a loyal listener and viewer, who said he's already on his way to California to ski for the season. So yes, people are already leaving.
They already have snow there?
They have snow.
Or fake snow.
Tahoe.
All right.
Yeah.
All right, we get the closing bells here in New York. You can't see them, but trust me, they're actually happening right across the screen for the major indices here in the United States. The Dow Jones Industrial Average down about 200 points or so, roughly about 0.5%. A similar percentage drop for the S&P 500, which is going to close out the day right around 6,051 as we wait for these numbers to settle. The NASDAQ Composite down more than 100 points or 0.7%. Your biggest decliner, though, amongst the major indices, that will be the Russell 2000, losing 33 points today, or about 1.4%.
Kind of like thrown off by not hearing the bells. I'm just going to put that out there. Right? Yeah. Large caps, S&P 500.
Like a reverse Pavlov's dog or something.
Exactly. In the S&P 500, 326 names to the downside. So overwhelmingly kind of risk off. 174 names in the S&P gaining ground today. Scarlett, 3 unchanged.
Did Trump take the bell with him after he joined it? I mean, like something. I mean, they have a bell there, right? Okay, sorry.
Very funny.
Let's look at the sector performances because we really saw some of the upside melt away as we got closer to the closing bell. There's only one sector that finished in the green, and that is consumer staples. Although real estate investment trusts and utilities fell less than the other sectors. So there's definitely a defensive tilt here in today's market. The worst performers are consumer discretionary and healthcare, losing 0.8%, along with communication services.
Can't be all that bad, you guys. Among my top gainers, actually the number one that I'm looking at is an IPO. So who said IPOs are dead?
That's interesting.
I know. Service Titan. Check this out. 42% in its first day of trading. It's a home repair software business. My home repair software business is known as my husband. I'm just going to put that out there. So the company soaring in its first day of trading, pricing above a marketed range, raising nearly $625 million in what could be probably the last major IPO of the year. So yeah, this one went off without a hitch. Doing pretty well. All right, another name doing really well is Warner Brothers Discovery. This is your top gainer, I believe, in both the NASDAQ 100 and the S&P 500 today, guys. It's up almost 16%, so pretty much closing just off its highs of the day. Warner Brothers Discovery changing its corporate structure, creating separate divisions for its cable and streaming businesses. So now we've got, the media company, so CNN and HBO, and it's also creating a global linear networks division, housing its cable brands and news and sports. So, and then it's got the streaming side, so dividing it up. But that one really an outperformer. And then one more, courtesy of Tim, Riot Platforms. This stock up almost 13% at its highs, finishing the day with a gain of just shy of 5% today. Wall Street Journal reported that activist investor Starboard Value has taken a significant position, I'm using quotation marks, in the Bitcoin mining company. Stock's down 16% year to date, and about 14% of the float is shorted, but nonetheless, pretty much a bullish day today.
I'm always trying to get Carol to talk more about Bitcoin.
Always.
So that's how I succeeded today. Talking decliners, 13.7% to the downside for Adobe. The company gave a disappointing annual sales outlook. It underscores anxieties that Adobe may lose business to emerging AI-based startups. We did speak to an executive there a little earlier in the program today who did say that, again, brand safety, the idea of making sure that what they train their products on is not copywritten material, is their competitive advantage. Some analysts do say that the guidance was a little conservative, so we'll have to wait and see how things do shape up for the remainder of the quarter, and then, of course, next year as well. Adobe shares down 13.7% today. And then Nordson shares in the S&P 500 among the worst performers on a percentage basis, along with Adobe, in there, down 8.2%. It's a diversified precision manufacturing tech firm. It serves more than 30 industries: aerospace, agriculture, automotive, plastics and textiles. You name it, they play in adhesives, sealings, coatings, and the like, so they got a great view on what's happening in the economy they operate in and sell around the world. They did report sales that gave guidance for the full year that analysts considered weak. Shares fell 8.2% by the end of the day today. And Stitch Fix shares soared yesterday, more than 44%. The company raised its forecast for full year net revenue from continuing operations today, coming back to earth a little bit, down 30%. Alex.
All right, let's get to the bond market. Really interesting price action. You saw a sell-off across the curve. I do want to point out we saw a pretty steep sell-off over in Europe as well, particularly with Italian yields. So the U.S. market really following Europe as well with that selling. Plus, you had a 30-year bond auction, $22 billion. It was not great. It did not go well. There were really low direct bidders. It was the indirect bidders that had to step in. That bid to cover was pretty weak as well. So that sell-off mostly more so on the back end, the 10-year yield up about 6 basis points.
It was kind of interesting, too. I mean, I was looking at some of the options data, and you're actually seeing a lot of those long positions that we had seen on the benchmark 10-year Treasury now sort of being unwound, and not necessarily to a massive extent, but it is a big turnaround from what we saw even just 2 months ago, where everyone really was betting for potentially a sub 4% 10-year yield, and now you're starting to see bets come back on the table for something closer to 4.75, and of course some people now saying we could get back up to 5%.
Yeah, right. Very different. And you think about what the Fed might say, that kind of gives some support to that maybe next week at its meeting. Hey guys, the political and cultural shift that we've kind of seen, some would say, since the election, the outcome, Donald Trump getting back in the White House, what we are seeing on school campuses, at least some of them, especially Ivy League, is the resurgence of Republican clubs, if you will, at colleges.
I believe, get this, last year only 15 people signed up to be in the Republican Club at Brown University. This year it's up to 50, which is still a tiny number compared to
Brown,
the student body. But what it represents is the ideological shift, right, that we're seeing in the country, and even on college campuses too, in the wake of the protests that we saw on many college campuses in the spring of this year.
And those college protests are what swung a lot of people to the Republican clubs as well. There's a great story here on the Bloomberg where at Dartmouth College, Alex Azar co-founded the Conservative Students of Dartmouth Club early last year. If his name sounds familiar, it's because his father worked in the first Trump administration.
And he has the same name.
Yeah, there was, I think it was an article in the Post that talked about how Barron Trump was really popular at NYU. Okay, what I loved looking at here, this is an article from the Wall Street Journal, and it has to do with Ozempic and food companies. So the theory was Ozempic was going to crush the snack companies, but apparently Conagra Brands is rethinking how they're marketing some of their food. They're rolling out a new label that dubs a selection of its healthy choice frozen meals as, quote, GLP-1 friendly, all part of an effort to pitch people who are actually eating less. They're not alone. Nestle is doing something similar with their food as well, but I thought that was really interesting.
What's different about the food, though?
I don't know. They're just labeling it. This is a marketing thing. It's like if you're on GLP-1s, you can still eat our food.
How can you make that claim, though? Because those drugs impact people differently. Like, I don't know. This makes me a little nervous.
I think it's more just that they're all high protein and low calorie counts, and have a good source of fiber. So they kind of have the right mixture of things that people who are taking Ozempic are looking for.
So it's not necessarily that they're
oatmeal.
It's not necessarily that they're coming out with
missing something?
Different foods. They're just saying, okay, these are the foods that are out that we have right now.
Oh, I got you.
And we'll label these GLP-1
Right, we'll
friendly,
label it for you so you don't have to look too hard.
Apparently we're thinking like pineapple chicken and a little beef merlot. They're pairing well. They have that protein at the end of the day. I think restoration hardware is out, having a pretty big jump right now, right?
Yeah, up about 15-16% here in the after-hours trade, even though net revenue pretty much just in line with estimates, $811 million in change, which is right on the nose of what the street was looking for here. I got to dig a little bit deeper here to see the bottom line numbers, but overall, you see the price reaction there on your screen.
Yeah, and stock's doing pretty well this year already, up about 30%. So you're building on that. So watch for that one now. It's up about 16%. So interesting to see that pop that we're seeing. We'll look for some more numbers, but as you said, in line. So it'll be something we'll carry over into the Friday trade. All right, guys, that is a wrap. Our cross-platform onto Broadcom we go, which we'll get a little bit later here today, but looking forward to that one. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We'll see you tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek. Lots of news in the chip world today. Intel CFO saying that the formal separation of the company's factory and product development divisions is an open question that will be decided by the chip maker's next leader. Ian King spoke to us a little bit about that. And then, of course, you have Broadcom earnings after the bell today. We'll bring those to you live as soon as we get them in a little under 10 minutes. We've got with us the guy who wrote the book on chips. Chris Miller is Associate Professor of International History at Tufts University. He's the author of the New York Times bestseller, Chip War, The Fight for the World's Most Critical Technology. That book, a geopolitical history of the computer chip. Also a winner of the FT Business Book of the Year award. Chris also advises semiconductor companies and tech startups and investors. He joins us from Naples, Florida.
Oh my God, Chris, like where to start? You wrote this in 2022. A lot has happened in the last 2 years. How are you thinking about what you wrote and kind of where we are today in the chip space?
I think there are two big shifts happening simultaneously right now. One is the surge of spending on AI infrastructure, which means lots of very expensive AI accelerators in high-powered data centers. And two is the ratcheting up of tension around the U.S. and China, with the new administration in the U.S. coming into office in just a month's time, planning to increase tariffs and controls on China's semiconductor industry. So those two trends are intersecting in ways that impact pretty much every company in the sector.
Chris, I'm curious, if you know, what we're hearing about the Trump transition team and their plans when the Trump administration takes office on January 20th. They're ramping up into full gear, no question. Have you heard from anyone on the transition team?
Well, I think the transition is in the process of sketching out who will be the officials who will be responsible for chip policy. We know the cabinet secretaries, Marco Rubio at State, Howard Lutnick at Commerce, but a lot of the key decisions will really be shaped by the mid-level officials who will be responsible for implementing the CHIPS Act or implementing the export controls on chip technology. And those are names that we just don't know yet, but I think it'll be really worth following who gets appointed to those roles because they'll have a pretty big influence on the shape of policy.
What would you advise in terms of names, in terms of people, in terms of expertise and policy, if you were speaking with the transition team?
What we've seen thus far is that Trump has opted for a range of officials with different views. Some folks very close to financial markets who want a very stable U.S.-China economic and financial relationship. Others like Marco Rubio, Secretary of State nominee, a noted China hawk who's advocated more decoupling, not just of the supply chain and technology relationship, but also the financial relationship too. And I think this is similar in a lot of ways to what we saw in the first Trump administration, where there really was a broad spectrum of views among Trump's advisors and ultimately up to Trump to make the final decision.
Hey, listen, I do think about the struggle between policy and government, a new administration versus the realities of big tech companies who want to sell their stuff to everyone. They're thinking about their top and bottom line. The New York Times out with a story today, and they get into how the U.S. firms, some of these big tech firms, battled with that government contract to keep tech sales to China to kind of keep that crackdown going. Where are we going to see that kind of line in the sand when it comes to selling technology to China And then the big tech companies saying, but wait a minute, this starts to impact our business because China is a massive market. Does the battle continue? I don't know. Thoughts about that, constructive thoughts? Because I'm assuming, as we said in the introduction, that you talk to some of these major players in the, or consult in the semi-industry, and I'm curious what you are hearing about them, about the pressure they are putting on government when it comes to policy.
I think if you talk to any CEO or executive off the record, and they'll say that my biggest problem is that China is both my largest customer and my #1 competitor in most cases. And that, I think, structures how the industry deals with this issue and tries to lobby the U.S. government. They all sort of understand the logic of the U.S. government, understand that chips are key for AI, understand that AI is key to national security as well as economic prosperity, but they all also realize that they have really substantial markets in China. And so wherever you look in the supply chain, of the makers of the tools that make chips, the manufacturers of chips themselves, they're all going to lobby, and they all have lobbied very successfully to keep their ability to sell to China open. And the national security apparatus, the Pentagon, the Commerce Department, the intelligence agencies are pushing for more restrictions than companies themselves want. And that's a balancing act that any president's got to balance. I think we've seen the Biden administration end up with a more lax approach than one might have expected, given their early tough rhetoric on this issue. And it'll be interesting to watch how the Trump administration addresses this balance. There will certainly be voices in the administration saying, let's focus on continued export to China of technology. It's important economically. But there will also be voices on the opposite side saying, if you export advanced technology to China, you're only giving China the capability to learn how to manufacture high-end chips domestically and eventually replace U.S. firms in the Chinese market.
Chris, with your understanding and knowledge of this world, are we right, U.S., the United States, right to be concerned about exporting technology to China? We've certainly seen this play out where things get exported, the technology, and China becomes really good at doing things. We're seeing it kind of play out in the EV market as we speak. So I'm curious, how concerned should we that we will export our expertise, our knowledge, and lose, control of another industry?
I think it's worth noting that China only imports a couple of types of manufactured goods: semiconductors, semiconductor manufacturing equipment. Those are the two largest categories of China's manufactured good imports, because China can produce everything else it needs domestically when it comes to manufactured goods. And I think that speaks to China's capabilities in this sphere, which means that the more capabilities you give to China, the more they're going to be able to use those to replace Western firms. And their desire to replace Western firms is, I think, eminently well documented. It's evidence in the fact that they don't buy anything abroad unless they absolutely have to. And I think semiconductor companies are all worried that their market share is going to decline over time. And I think they all realize that the more chip-making tools that are sold to China accelerates that process.
Hey, listen, we want to get to Broadcom because they are out with their earnings, and the stock is up about 2.5% here in the market. Actually, now it's down about 1%. It's bouncing around here, to be fair, but we did see a quick rally. So let's get to some of the headlines, and let's go to the outlook. Company sees first quarter revenue of about $14.6 billion. That's spot on in terms of what analysts were expecting. Fourth quarter adjusted EPS, so looking backward at the last quarter, $1.42. That's 3 cents better than what the street was expecting. Fourth quarter adjusted net revenue was $14.05 billion, pretty much in line, a little bit light, a hair light. The estimate on the street was $14.08 billion.
Chris Miller, we're going to be speaking in just a few minutes with Kunjan Sobhani, Bloomberg Intelligence senior semiconductor analyst, who's going to give us the details on this report. But just remind everybody, sort of in the chip ecosystem, in the world of chip ecosystems, where Broadcom plays.
Broadcom is one of the biggest designers of semiconductors. They don't manufacture, but they do the design process. And they've been focusing in particular on designing AI chips for other companies, some of the big hyperscalers that are investing in their own chip designs. Those are often done in partnership today with Broadcom.
So reports such as this, now shares up 2% post-market after results. The company sees first quarter revenue about $14.6 billion. Looking across the ecosystem, who does Broadcom have to be most worried about? Because we got that report yesterday from the information about Apple working with Broadcom. And we were reminded by Ian King a little earlier today that these two companies have sort of done this dance of scorpions where they sting each other, but also then well, he was saying it was like, what, mating scorpions? Is that right?
Yeah, it's like
Ian King's words,
it's like
not
two
mine.
Scorpions mating.
Yeah, we're there, you know.
It's not easy. That's,
yeah,
that's a little complicated.
I won't describe it, but let's just use the term frenemies instead.
It's perfect.
I think that's That's a great analogy. Broadcom produces a really wide range of products, and so they simultaneously cooperate and compete with a bunch of different companies in the technology space. I think if you focus on the AI portion of their portfolio, in some ways they're competing with NVIDIA, because a lot of the in-house designed processors that the hyperscalers are designing right now are intended to be replacements for NVIDIA's products, at least to a certain degree. And so I think investors are going to look at this result and ask, what does this mean for the process of bringing more chip design in-house at some of the big hyperscalers?
Hey, Chris, gonna have to leave it there. Always love it when you take the time to join us. Do appreciate that very much. Chris Miller, Associate Professor of International History at Tufts University. He's the author of the New York Times best-selling book, Chip War, The Fight for the World's Most Critical Technology. Bloomberg Business Week is brought to you by the Jewish Communal Fund. JCF helps you respond to crisis swiftly. Open your JCF donor-advised fund now to secure your tax deduction. Visit jcfny.org or call 212-752-8277.
All right, folks, let's get back to Broadcom earnings. Stock now back up about 4.5% here in the aftermarket. Adjusted EPS of $1.42 for the fourth quarter. That is 3 pennies better than what the street was expecting. We mentioned the first quarter revenue outlook. It's a red sticky, so we're highlighting it. It's what we care about. Seeing first quarter revenue of about $14.6 billion, pretty much what the street was expecting. I want to get right to it with Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst out there in our San Francisco bureau. Kunjan, good to have you here with us. As the numbers came out, initially we saw a rally in Broadcom, then it sold off, and now it's back up about 3%. Walk us through the quarter and the outlook. What's the read here on the company?
Yeah, I mean, everything came as what people expected. I'm looking at the numbers, both, like you said, both 4Q, 1Q, almost in line, so no concerns there. The very important thing is they did increase dividend, as I'm reading, 11%, much higher than what we had expected. We had expected somewhere between mid to high single digits, so that's really promising, and that's what its long-standing shareholders care about, the cash flow and the dividend back to the shareholders. I do see the semiconductor revenues slightly beat the estimates, as well as the AI revenues came in above the guide, so that is positive. However, both those numbers were sort of in line to what we and some of the buy-sider investors were expecting.
When you look at AI revenues, who are the customers on the AI side for Broadcom?
Yeah, so it's your largest, the largest customer right now is on the custom side is Google. We estimate there's going to be Meta, and now we heard the news about Apple. So these are sort of the 3 widely popular customer names that we know of. But they also have a significantly large AI networking business where there's a lot more customer base there just beyond these top 2-3 guys.
I am thinking about, the bouncing around. Do you think the stock is higher because of the dividend increase, raising that quarterly dividend 11%? Is it about that, or is it about the business?
I think it's a bit too premature to comment on right now. We will hear, remember, they don't give segment level details in the press release just came out. So we have to wait for the calls where we'll really know how each of the segment did, and they'll talk more about how the first Q, what they expect for each segment. But just having seen what we have seen so far, I think the stock is reacting sort of okay, because there were no, the concerns of softer guide or a miss on the guide are no longer there. So coming into the earnings, as we talked previously, there were concerns about AI being sort of flattish or wireless being softer. Because the numbers came in line, I think that sort of gave a breather to everyone that nothing is falling apart.
Hey, in your preview for the fourth quarter today, you said that the company is set for a healthy fourth quarter, driven by a seasonally strong wireless segment benefiting from new iPhone demand, continued momentum in AI and cloud networking, custom compute, and VMware as well. I want to go to the wireless segment. What do we need to understand about how Broadcom plays in the wireless segment, and where that industry is, and how, given that there's some concerns about people not upgrading as frequently to new phones, that business could be affected?
Yeah, so wireless essentially for Broadcom is just one customer, the Apple, right? So that's all they only sell to right now. So it's all exposed by how Apple does, if Apple units grow, if Apple price points grow. I mean, they do see a price increase almost every year as they ship new generations of products into Apple. So that business has been a pretty good, like mid-single digit cash growing business for them. They generate a lot of cash from that business. I know there were some news this morning about Apple sort of switching Broadcom out.
Yeah.
I mean, frankly, we have heard that news many times over the last 3 years. It has not come to fruition yet, so it's too premature for us to comment. If that were to happen, though, just so that we can rationalize and structurize the impact, it won't be a right-away cliff that they go all zero, right? So they do sell multiple chips to Apple. If the Wi-Fi Bluetooth combo was to be taken out, it will be a phased out where Apple would start from smaller devices and then go to their premium devices. And even if that does happen, we think that business is about max $2.5 to $3 billion. You already are seeing Broadcom working with Apple on the custom side. So that custom side revenue within few years could easily offset that loss if that were to happen.
All right, so like you've got these interesting dynamics, hence the frenemies, because yesterday we saw Broadcom shares, jumping like 7%, almost 7%, a $314 billion rally. We were all kind of obsessed on the news that Apple was working with Broadcom on AI server chips, and yet you have Apple maybe moving away from Broadcom in this other story. I mean, so is there a net for Broadcom in terms of its relationship with Apple, which we know in terms of customers, Apple's a huge one?
Yeah, and you know, if I were to pick which product or which end market you lose out on, again, I would definitely go with the custom design because that is the future growth driver. And as we know, the smartphone overall market is not as growthy of a market as AI and data servers.
So, okay, so let's talk about the AI and data servers market here and the opportunity for Broadcom moving forward. You mentioned Meta Platforms. You also mentioned, what was the other hyperscaler? That's the biggest
Google.
Customer? Yeah, thank you. That old guy.
That old company.
That old company. Where else in terms of diversity does Broadcom need to go, given that these hyperscalers are also working on their own?
Yeah, I mean, when we talk about these hyperscalers are working on their own, typically they're working with a silicon design partner, which is Broadcom. So the more the hyperscalers work on their own chips, the better it is for someone like Broadcom or a Marvell. It's really those two custom design partners that all of these customers are working with.
Would you say Marvell is the biggest sort of corollary competitor to Broadcom?
In that arena, yes.
What about if you look at the entire business?
Well, Broadcom is sort of a conglomerate, for the lack of a better word, right? It's got 40 or 45% software revenues and the rest chip revenues. Within the chip revenues as well, it's got wireless, it's got the typical cyclical broad market businesses. So I think the corollary between Broadcom and Marvell would be primarily on the networking business and the custom business.
So just to rehash, we are seeing Broadcom stock jumping here in the aftermarket. The stock is still up about 3.5%. And so we continue to see this company reporting, better than expected profit in the fourth quarter, driven by artificial intelligence demand. I do feel like as these earnings in your world that continue to come in, these financial updates, does it show that we are seeing that corporate spend on AI, it continues to happen?
Well, we definitely do, and there's many metrics, right? When you see the chip companies exposed to these rallies continue to come on, beat and raise. The magnitude varies from quarter to quarter, but overall showing annual growth. On the other hand, we continue to see the CapEx numbers by the biggest spenders, the hyperscaler and cloud guys, continue to go up quarter over quarter. 25 is again expected to be a bigger year. So until we don't see a sort of reduction or a slowdown, major or significant slowdown in spending by their customers and the beat and raises and earnings from the semi suppliers, we can say that the demand rally has legs and can continue further.
You know that Broadcom has come out, Kunjan, and said that they expect to get more than $10 billion in annual revenue from the AI market, outpacing other parts of its business. Do we know exactly how much they are getting that's AI related at this point?
I mean, yeah, so their fiscal 24, with the year that just ended, their AI revenues, what they reported was about 12.2 billion.
Okay.
So we know that for sure. And I haven't seen the forecast for fiscal 25. Maybe they will share it during the call, but we definitely estimate significant increase, close to 16 billion at least for next year.
Right, fiscal year 2024 to AI revenue of 12.2 billion. All right, so we're looking for more. So what's your number one question on the analyst call?
Well, that exact number, what's the guide for the AI for fiscal 25?
Shares up 3% in the after hours. Chipmaker reported fourth quarter results that beat expectations on key metric. The company said AI revenue grew 220% from the year ago period that it gave, and it also gave an outlook. That stock up more than 60% so far this year. The company sees revenue coming in between saw revenue coming in at $14.61 billion, $14.6 billion rather. The estimate was for 14.61. So certainly bang on in terms of estimates there. And then the company saw earnings per share, Carol, come in at $1.42, beating estimates of $1.39.
Yeah, and again, as Tim mentioned, Broadcom up 3.2%. We are continuing to talk with Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani. I have to say, Kunjan, we put together a weekend broadcast and podcast, and it was all AI because it just felt like there was such a dump of news this week. And so it does feel like, once again, in 2025, this is going to carry over, and we're going to continue to see the spend by companies on things related to AI, whether it's continuing to build out infrastructure or software when it comes to this world. Do you agree?
Oh, definitely.
Sorry.
Definitely agree. I mean, like I said, if you just look around the space, right, whether it's the suppliers who help build this, the infrastructure, whether it is the buyers of these equipments and chips who are building the infrastructure, and now we are starting to see, some signs of monetization coming from these builds and infrastructure. So we definitely feel 25 at least sort of is in the bank. I mean, given the numbers I'm looking at from all the top AI chip companies, I'm seeing robust growth, and the risk is actually on the upside. Like, how much more can we get from here?
Would you describe what we're seeing right now in terms of AI as a revolution, as a cycle, as something akin to what we saw with the moving online of things in the 90s and 2000s? Like how do you describe the phenomenon that we're seeing right now?
I think I would compare it sort of to when it was the iPhone moment for smartphones, and the second comparable would be sort of when we saw the indent of cloud, right? It's an inflection point in terms of technological compute and how we use technology, and you always see this rise at the beginning phases until you reach sort of a normalized phase. After that, we see more of a cyclical behavior, at least from a semiconductor perspective. We don't think from a semiconductor perspective we are anywhere close to that normalization phase yet, where we should start worrying about cyclicality here.
What about the upstarts? And I think about Adobe and some other companies, in terms of the AI spend, that we kind of hear this caveat that there's fears by investors when it comes to some of the upstarts in the AI world. Is that, the companies that we are talking about, whether it's NVIDIA or, some of the big tech companies in terms of what they are doing when it comes to AI platforms and utilization of massive amounts of data, is it these companies that will continue to kind of reign and rule in this space, or do you anticipate that there will be startups that maybe we're not quite talking about yet that are going to be a lot and involved in a big way? I think about OpenAI all of a sudden, we talk about that a lot. So I'm just curious from your vantage point, especially when it comes to the semi space.
Yeah, I mean, look, every time we have seen a big inflection in technology, we have often seen new startups come out and, dethrone the incumbents. Now, having a caveat, these incumbents right now are the largest they've ever been, so there is that factor too big to fail. But we definitely expect some kind of shift. A couple of examples, we have seen AI-focused IPOs in the last 2 years in semiconductor, which have really come out and are challenging the incumbents. One name is ARM. Another IPO we have recently seen is Astera Labs, right, who is competing with the giants in the room, which are Broadcom and Marvell, and have immediately come out and taken a significant share. So we do expect these startups, especially in the semiconductor space that I see, to come out and cause disruption. But again, the giants have become bigger and bigger.
All right, we're going to leave it there. Listen, thank you so much. You gave us such a big chunk of time. We know you've got some research to probably write on the Bloomberg Intelligence
Yeah, he's got
side.
a job to do, Carol. I don't know, like, we're like, holding him for so long.
Well,
we definitely appreciate it.
It's a super
Kunjan.
important space. Kunjan Sabani, he's Bloomberg Intelligence Senior Semiconductor Analyst. Thank you so much. And let's just recap where we are when it comes to Broadcom. Ticker AVGO. Stock is up about 4% here in the aftermarket. This after the company reported better than expected profit in the fourth quarter, driven by artificial intelligence demand. Revenue rose to nearly $14.1 billion, with sales expected to reach $14.6 billion in the fiscal first quarter. And so again, we are seeing the stock react. Investors maybe saying, okay, pretty happy.
Hey, no easy segue to this, except maybe that chips are used in the making of drones. But have you heard about this drone mystery in New Jersey, Carol?
What are you talking about?
Okay, it's among the most read stories on the Bloomberg terminal, just coming out in the last 15 minutes. It's in the chat. Here's how our team starts out the piece. An Iranian
we were talking
mothership,
about this a little bit yesterday.
We were. Alien activity, overly dedicated hobbyists. These are just a few of the theories being floated about the witnessed sightings of large, mysterious drones flying over New Jersey in recent weeks, spooking residents and prompting state lawmakers to demand answers from Washington about where the drones are coming from and if they pose any harm. I got to tell you.
What?
The tri-state area is very small in terms of, like, being from California. It's like, how do you get so many states in such a small place?
Yeah.
Why are they just hanging out in New Jersey? Why don't they go over to Connecticut, maybe do a little hanging out in New York?
Because New Jersey's special.
Is that why? I was going to ask you as a lifelong New Jersey resident.
We have a port, we have pharmaceuticals, we have...
You guys have it all.
I don't know that we have it all. We have cows,
You do.
It is the Garden State. Great Jersey corn. I don't know what it is specifically, other than, are the drones actually interested in New York? Are they interested in the New York metro area? Are they looking? I don't know. Who is it, though? We don't know.
The drones have been spotted hovering above critical infrastructure such as water reservoirs, electric transmission lines, rail stations, police departments, and military institutions. This according to Florham Park's chief of police, Joseph Orlando, who said that in a Facebook post. Sightings have been occurring nightly, beginning just after sunset and lasting into the early hours of the morning.
Yeah, Pentagon's press secretary saying at this time we have no evidence that these activities are coming from a foreign entity or the work of a foreign adversary. I guess we need more information. I just want to rehash.
Hey, you want to rehash earnings?
I do.
Okay, go ahead.
Broadcom.
You do that. I'll do drones. You do Broadcom. Okay, thank you.
Broadcom up 2.6% here in the aftermarket. So I think there's a little bit of a sigh of relief in terms of what the company put out there. Sales being $14.6 billion in the fiscal first quarter, which runs through January. That's in line with estimates. And the results suggest that demand for AI computing offsetting a slowdown in other areas. So this is another company like NVIDIA, Broadcom positioning itself to be a major beneficiary of AI spending. And right now, they seem to be delivering. But we want to know about the forecast for AI spending. That's what John said, watch out for on the analyst
Maybe
call.
we'll hear it on the call. 62% is how much shares have increased so far this year. This is an $843 billion market cap. Coming up next, TPG's Jim Coulter on Business Week.
4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Broadcom shares. After hours, Broadcom, a chip supplier for Apple and other big tech companies, posted better than expected profit in the fourth quarter after AI demand helped bolster growth. After hours, we got Broadcom up now by roughly 2%. Down Thursday, the Dow, the S&P, NASDAQ all retreated. Wall Street held off on big bets ahead of the Fed's policy meeting next week. S&P down 32, down 0.5. The Dow also down 0.5%. NASDAQ down 0.7%. 10-year 4.33% with the 2-year 4.19%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as we reported yesterday, David Bonderman, the colorful yet publicity-shy co-founder of the private equity titan TPG, died yesterday at the age of 82. Bonderman grew TPG from a 3-person shop, investing $66 million to buy Continental Airlines out of bankruptcy into a more than 1,800-person firm with $239 billion of assets under management as of the end of the most recent quarter. So he built a behemoth.
Tributes across the industry have poured in over the last day. Colony Capital co-founder Tom Barrack called him a, quote, friend, brother, partner, teacher, mentor, psychologist, rock star. He was a, quote, legend, said Neeland Youngblood, the co-founder of private equity firm Pharos Capital Group, who considered Bonderman, known to many as Bondo, a close friend.
And certainly for those of us at Bloomberg, it's somebody that we have followed for a long time and for good reason. Right now, though, we want to send it over to Bloomberg Originals chief correspondent Jason Kelly. He's here in New York, along with Jim Coulter, who is the founding partner of TPG, for an exclusive interview.
I am really happy to be here with Jim Coulter. Obviously, a very sad day, Jim, for the team at TPG, for really the entire investing world. So first of all, condolences on the loss of your longtime partner, and thank you for spending some time with us here.
Thank you, Jason.
So David Bonderman, it's amazing to read about his impact on the broader investment world. He is one of the best known names, one of the icons. You knew him better than anybody in this business. What specifically did he bring to this business that was unique to him?
David really is a legend in the industry, but he's a legend for several reasons. And I think there's 3 particular things. First of all, he pioneered a type of investing. Secondly, he built a firm that had a distinctive place in the industry. And third, he had a really interesting personal style that I think helped evolve the style of this industry.
And so what did he do? How did that work in practice? Like, what was he doing as a deal maker that really set him apart?
David did deal making as problem solving. So if you think about some of his signature deals, they were deals that everyone saw, but no one else was willing to take on. And it wasn't that he was taking on more risk, it was that he saw something different. Take the Continental Airlines deal, a legendary deal in the industry. The most hated company in America, the biggest bankruptcy in U.S. history. It sat there for 2 years. Dave and I put together a deal that carved out a new Continental and took it from worst to first in 7 years. It was, Warren Buffett said that airlines were financial sinkholes. David, over and over, made successful investments in airlines. When others saw the S&L crisis, David saw the S&L opportunity. We created the good bank, bad bank structure for American Savings when working with Bass, and then we exported that structure around the world to do bank rescues in China, in Korea. Again, deals that no one else did. And that problem-solving approach really appeared at a moment that the industry was mostly about changing capital structures, not companies.
All right, so you said something to me before we came on air, which I found fascinating, which is that David was a polymath investor. The Bloomberg audience is pretty smart, but you need to break this down, what that actually means in practice.
Polymath is from the Greek, and it's basically a person who has broad and diverse interests, but uses that knowledge and interest to solve problems. And so David really didn't come to investing until his 40s.
Yeah.
Think about that. He had several careers before. He was a litigator. He was argued in front of the Supreme Court. He taught law at Tulane. He studied Islamic law in Tunis. This was a person that never took a finance class, didn't know accounting. And yet he brought that broad experience and problem-solving expertise to the problems of investing. And his ability to use different experiences he had to solve problems, I think really created his style. And it's a polymath style. It was not one thing. It was a unique ability to see opportunity and, frankly, solve problems.
Well, and it translated into him being, I have to say, one of those eclectic, maybe eccentric sort of figures in an industry that didn't always, certainly the broader Wall Street, doesn't always sort of embrace change. So how was he received in this broader Wall Street world, in your estimation?
Yeah, David was many things, but he was never boring. We used to laugh that David often brought like a rock and roll backbeat into rooms that were used to classical music. Yep. It was a very different style. He was known for his ridiculous socks. I mean, they were just ridiculous. When others were drinking fine wine, he was drinking Diet Coke. He flew 1,000 hours a year to meetings anywhere. It was a very personal thing for him. And his style was informal. It was direct. He couldn't stand obfuscation. And that style was sort of a different wind in the industry at the time, and it opened up the opportunity for different types of styles to really flourish. It's an industry that had incredible talent among its founding brethren, but David brought, I think, a little bit of a different attitude and frankly, a lot of fun into a very serious business.
And so how do you build a firm around that? I mean, that you can be sort of sort of an iconoclast as a single person, maybe as a small firm. You guys started out as 3 people in 92, 93, but now thousands of employees, $250 billion in assets. How does that sort of grow into something this big?
I've been doing this a long time, culture and curiosity. So in some ways, what we described, you and I, about David became how you would describe TPG in some ways. At a time that the industry was very much about finance, was very much focused in New York, we came out of a family office in Texas. We set up on the West Coast. I used to say that, and you do sports a lot, Jason, that we were playing the same game but differently. We were the West Coast offense of private equity. And to do that, you have to get a culture of curiosity and problem solving. And I think at the first fundraise we did for TPG, our tagline was contrarianism, complexity, and change. At a time, the industry was more focused on franchise businesses and finance. Contrarianism, complexity, and change. And I think those lines of problem solving and a different approach really were what David brought to the business in the early days.
Not afraid to take big swings? I mean, was that part of his ethos, do you think? Like being able to really go big on something?
Yeah, it was never about ego or size. It was about really interesting problems. And sometimes we got it wrong.
Yeah.
If you're doing this type of investing, 5% of the time you'll make mistakes, and probably you should be taking that sort of risk. But the key is never make the same mistakes if you can help it. And importantly, learn from all of them. And David and I think our firm has been a lifelong learner on those. So I think somehow we've been able to grow with the industry, but still keep some of that essence of doing it a little differently and looking at new deals. I mean, even today, as you know, Jason, we've taken on impact investing, climate investing. These are new things, new problems done in a new way. And that ethos, I think, was what we started with almost 40 years ago. And we've tried to very much guard today.
How'd you build a partnership with him? You guys are not the same. You showed up in Texas, Dartmouth undergrad, Stanford Business School. He was a University of Washington bankruptcy lawyer, saved Grand Central. How does that marriage of a sort happen?
I think there's 2 types of partnerships. One are people who are very much the same, almost can complete each other's sentences. The other type of partnership are people who are very different but share the same values. And I think David and I brought different skill sets, different views of the world, but values on fairness, the idea of you can leave the last cent on the table to create a win-win. And we agreed on the type of firm and culture we wanted to build. So complemented each other, respected each other, but also brought some balance to the equation.
How do you think he changed you as an investor and as an executive?
I think David was, as well as being a great investor, simply a great business person. He served on 80 different corporate boards. Who does that?
Yeah.
80 different corporate boards, from GM to Ducati, from Behringer to Burger King, immensely diverse. And that viewpoint, something that was often underestimated with David, really helped me be a better businessman. It's about being straightforward. It's about seeing different things. It's about patience from time to time. And even when things go wrong, you don't step back, you step in. So I think his polymath skills really extended into the business world.
All right, I mentioned earlier, this is a massive industry at this point. What we used to call private equity, it's now alternative investing. These firms, including yours, are doing lots of different things. How do you take that Bonderman ethos, the sort of like, he's calling into an investment committee meeting from Timbuktu to, now a publicly traded company. How do you maintain that essence? Because I know that culture is something that's important to you. You study it. How do you really institutionalize that culture?
Fight conformity in all ways. I think if you were starting this business today, sometimes I think the people who are looking at it feel they have to learn finance in their crib and have to go through internships. David came to this, as I said before, in his 40s. He brought that wide set of experiences. And I think the understanding that you can ask different questions, approach problems in different ways, is something the industry needs to stay true to today. So that spirit, the spirit of problem solving, curiosity, a little bit of courage, put together with a broad view, is something the industry still needs today. And I think the industry is delivering that. Immense talent in the industry. We have to just make sure that it's not delivered in one way.
And so,
all right, you've been listening to Jim Coulter, founding partner of TPG, speaking exclusively with Bloomberg Originals chief correspondent Jason Kelly. You can hear more of that conversation on the Bloomberg Talks podcast and, of course, on our podcast feed. Bloomberg Business Week is brought to you by the Jewish Communal Fund. JCF helps you respond to crisis swiftly. Open your JCF donor advised fund now to secure your tax deduction. Visit jcfny.org or call 212-752-8277.
Well, it is really the most wonderful time of the year because we get our annual travel guide for the year ahead. And it is a record-setting 19 pages in Bloomberg Business Week. It's got a beautiful immersive feature on Algeria, 2 new hotspots to prioritize in Spain, an unlikely story about a billionaire creating a new system for conservation on the island of Principe, thank you. Ideas for your next great collocation and the next great museums to travel for. That voice you heard just now is Nikki Eckstein. She's travel czar for Bloomberg Pursuits. She's got one of the coolest jobs out there. She joins us here in the Bloomberg Interactive Brokers studio. Okay, before we get to some of these destinations, the data points involved. You got kayaking on this? Where to go and when to go? What was the project here?
This was a multi-year effort, I kid you not. I've been trying to make this happen for forever. And finally this year I convinced Kayak to give us their greatest minds in their data science department, who churned no fewer than 2.5 billion data points.
That's amazing.
All of them are pricing insights on both hotels and flights that allow you to go to our digital interactive, choose your nearest airport, and figure out what it will cost you to visit all 25 of these places every month of the year from your hometown.
Okay, my flight prices are set for New York City.
So you should be able to see both accurate month-by-month estimates on what it will take to fly to any one of our 25 destinations, including suggested layovers in places where that's required, as well as month-by-month hotel pricing estimates for luxury hotels, because we know that's how we roll.
Oh my God, this is so cool.
Thank you, guys.
All right, so we can play around with this. We can figure out what it's going to cost us. Tell us about the list this year, because you are looking at travel all the time. You usually come up with like kind of an annual review, right? Like you do this on a regular basis.
We are tracking hotel openings, restaurant openings, museum openings, cultural events, infrastructure investments. I mean, you name it, we're tracking it year round. And whatever is most inspiring, whatever is most significant, most game-changing is what rises to the top. This year it's 25 places, and it's almost every continent, not Antarctica, but we're really well spread geographically around the world with lots of inspiration no matter where you're from.
Where's a place that you can go on a budget? We're talking Bloomberg Pursuits here, so we're not always watching the wallet.
How adventurous are you?
Says the dad with 2 kids.
All right.
Pretty adventurous.
Well, I've got 2 ideas for you.
All right, let's hear 'em.
The Colombian Amazon is a place where your money can go very far because there's not a lot out there. But there's a small company called Nomad that's starting to create these community-owned revenue-shared model lodges. The first of 10 is just opening now, and it's these beautiful treehouse-style bungalows, really really modern construction, super luxe, but at the same time bare bones and immersed in nature. If all of those things can possibly be true at the same time, I promise you they are. And you go, kayaking down tributaries of the Amazon to look for pink dolphins, and you can hang in a hammock to sleep it all off when you're too tired, and it just seems so dreamy. But the prices are very reasonable. It's like less than $300 a night.
Yeah, I'm looking the best time to go, May and June, November and December. December is, of course, going to be pricey, but yeah, $300 for a hotel per night. And the flight price is cheap too, $390 to get there.
I mean, there you have it.
Okay.
That's your budget
This is
idea
so
right
cool.
then and there.
Very cool.
And then if you want to go a little bit farther away, may I propose the island of Principe, which we mentioned up top, where people talk about it like Africa's Galapagos, okay? But most people don't even know where it is, right? It's off the western coast of Africa, equatorial, so, a little bit farther north than your average safari. Warm weather, temperate year-round, a lot of marine activity, so like tropical fish. Apparently fish that walk on land. What? Like relics of the dinosaur era? This place is absolutely wild. The landscapes you would not believe.
We should call Charles Darwin, fish that walk on land.
Right.
January and February,
I was
Carol,
thinking
are
of
the best
Dr.
times to
Seuss,
go.
like how the fishes.
Yeah.
Sorry.
Yeah, it's all of those things.
Very cool. January, February are the times to go. Median price of hotel, $208. Average flight price, that's the hard part. It's going to be pricey. $1,800.
Depending on where you're coming from.
Yeah.
Depending where you're coming from.
Excuse me, that's from New York.
Yeah, I mean, if you're flying from like Madrid or something, it's going to be a lot cheaper.
Good point. So New York centric.
Love the south of France. You've got something on there.
Yeah.
I don't know. Can we go there cheaply? I'm like looking around. I guess there are times we can go.
Well,
right?
I will tell you, it's going to be a lot more affordable than Saint-Tropez. And
Okay.
the place that we're talking about is Cap Ferret. And it is a beautiful kind of, imagine what Montauk would have been like decades ago.
I used to go to Montauk like 25, 30
So
years ago.
you can tell
And
me
it was-
exactly what Cap Ferret is like.
Should have bought a house there,
I should
Carol.
have. It was really sleepy and lovely, and it was so sweet.
So that's exactly what you're going
I
to
should've
get
bought
in
a
this
hotel.
little.
Where is this?
We're talking about the Bay of Arachnan.
Okay.
I may be pronouncing that completely wrong, and I'm so sorry to the French people who are listening if so. But it's a small community on an inlet with fishermen huts and colorful houses and places where you can eat seafood that's just been plucked out of the sea. Little boutique hotels that are terribly spelled. You'll see in the package we even call them out for their ridiculous stylings of their names. I'm not even going to dare pronounce. And a new company called Iconic House that does really, really cool villa rentals for way less than you would spend in classic Riviera destinations.
They kind of look like they were named by Grimes and Elon Musk, when they named their kids. So
it's like
that's what-
parentheses and accent
Yeah.
marks all over the place, which is why I won't try to say what they are called.
Love, love, love. Where else? What was a surprise to you as you were putting this list together that you think might surprise a lot of folks?
A place that might surprise a lot of folks. Well, we've got places on this list that are kind of humble in my mind, like Lexington, Kentucky, which we're calling as kind of the next Nashville. And then we have places that just really kind of elude the common radar, like the Seychelles, which are actually, if you're in the know, a very classic luxury destination where hotels command really high four-figure prices. But there's a spate of new openings there that are drawing kind of new appeal, new flight access, things like that, that are really kind of putting that on the map for a wider number of travelers than before. Seychelles is super high on my list. And if you look at the pictures in the digital package, you'll know why.
Yeah.
It looks out of this world.
Carol, if you don't want to fly anywhere, you can step out of this building, you can turn right, walk a few blocks north, and you can go to the Upper East Side, which, yes, is on the list here, Nikki.
Call me crazy.
Help us.
You're crazy.
Help.
I know. Well,
30
here's the
seconds.
thing, you guys. The Frick Museum is reopening. The hotel scene is getting a major glow up. The Surrey has just been brought back to life by Corinthia, which is top notch, with an import from Miami called Casa Tua. It's a restaurant that is like the hottest place on earth right now. So dare to correct me, but I'm pretty sure it's right.
And the flights are really cheap from here.
Transportation is a whole $0.
I was just gonna say.
I'll fly you there for $100.
Yeah, right,
Carol.
right.
But
Me and my whole
don't,
family.
but don't dare add the price of dinner.
Right, there is that. And hotels are not cheap.
No, not around here, but I promise you'll have a great night out.
Where do you want to go in 2025, real quickly?
Ooh, you know what? Strange but true. I really want to go to Rotterdam. New museums that are opening there. It looks just like Amsterdam, but way under the radar. It looks fabulous.
You are fabulous. Nikki Eckstein, Travel Czar here at Bloomberg Pursuits. Highly recommend you head to Bloomberg.com and check this out. Nikki, thank you so much. This is Bloomberg.